Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both, and congratulations, IU.
Huge.
Thanks for not watching.
Whole weekend is like a fever dream. You're welcome.
Seriously.
You're welcome. Like even like my mom and Liz were like texting me. They're like, because I guess the first play was like a pick six.
Forgot to wear my IU shirt
Right.
today.
And so like I wasn't even watching, but I was like, la, 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 la.
Yeah.
And my mom was like, "Oh my God, it's so exciting." That's like my mom voice. She's like, she's like, "They're doing so good."
Is that your mom voice?
That's my mom voice. She's a sweet lady. But I just like, I can't believe it. Largest alumni network in the world. It looked like a home game.
Yeah.
From
Are you
all
going
the
to Pasadena now or wherever?
Miami.
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 Yeah, Miami.
Yeah.
Right.
Yeah. I got my feelings hurt. I looked at tickets and then I closed my computer.
You don't have to go to the game. You just be there.
I think Jamal is going to go. I think Jamal's going to Miami.
Jamal will be there for
Yeah.
Oh, you got family to stay with. You can stay with Jamal's family and stuff like that. It'd be good for you. I know you're invited. I know he would let you.
But there's a lot, especially being the Midwest, there's a lot of IU/Bear fans, and we just don't know what to do with ourselves. Like someone from Barstool tweeted, there's a chance we thought that we all just died.
Yeah,
and that
I
this is
saw that
like-
tweet. I was like, that's amazing.
And they're like, this is just like the afterlife. That's fine. I'll take it. So.
It was very well. That was a no contest game, the IU game. I mean, it really was. It was a fight. They would have stopped it, but the Bear game was unbelievable.
Yeah.
It was the tale of.
I just checked on Twitter and I saw that it was 21-6, and I was like, Ben Johnson. It was his first year. I was like, we had a heck of a run, and then I was like, what happened?
It was a crazy game. I got to tell you something. He's got
the
intestinal fortitude. I give him that much.
I wanted to show up like early in the game. I wanted to start like that. You get these.
But if there's one quarter that you have to pick for a team to be dominant in, I'm glad it's the fourth.
So for our math people out there and the traders that are listening, it got down to about a 5%
probability of
winning. It was about a 3 standard deviation move. I mean, that's how big a comeback it was. It's crazy.
Yeah.
I mean, someone was like, does Green Bay ever practice special teams?
Yeah.
But to miss 2 field goals and an extra point,
and I think I saw the betting. I think it got to about, was it 8-1? I think if you took the Bears straight up.
I'm not that good. I mean, I was live betting Bills, but
I remember. We'll get to that.
I think it's because for the first time, so this is the first time since the week after Pearl Harbor in 1941 that the Bears have beaten the Packers in the play. Like,
85 years.
That's how long it's
years.
taken.
Yeah.
And I think it's because Tasty Trade sponsored the pregame.
Yeah.
For the first time. We did.
Yeah.
I'm not joking. We sponsored the pregame, Tasty Trade.
Yeah.
Where?
On social. We were a corporate partner of the Bears.
Oh, really?
Yeah.
Wow.
Yeah. So shout out to Grace for making that happen in marketing.
Wow.
But I think.
Where were my freaking tickets?
I know.
Did we get a couple tickets?
Marketing took them.
Tickets actually went down a little bit.
They did go down. Clink had his tickets.
Then they went back up.
Because the weather got better.
Got pushed.
The funniest thing that I saw is like, as a woman, I have to bring in a clear purse. I can only bring in so much stuff. But somehow all these men got cheese graters. Like, women are like, what the hell? How did everyone have a cheese grater? Who was bringing in all these blocks of cheese?
That was good. I will say,
hiding them in their sock.
Yeah.
I have so many questions.
Given the situation, the grading was actually really well done by Caleb. If you've ever tried to,
he did.
He grated like half a pound, like not getting the fingers,
and not getting the fingers, and to hold it up like that.
Yeah,
it's a pretty normally you gotta put that thing down. You get a little weight on there. You gotta like really dig in that. That one. That showed some grip strength.
My favorite, we now face the Rams here at home on Sunday. I love it because we get the time advantage, we get the weather advantage. But even if we don't go any farther, I just love all the compilations of just the joy of Chicago fans just losing their shit.
Josh says he's going.
Josh says
on Sunday to the Rams game.
So there might be a fight for that second handicap seat.
Who brings them?
You get one, don't you? I mean, they usually have the 2 seats.
Yeah. They usually. Have
Are you going to be his caretaker? You going to be his nurse?
That's what he says.
His caretaker for the last 10 years might as well be his caretaker now when it pays something. I mean, crying out loud.
He says he's going whether he has to be carried or pushed. So he's ready.
Ready. Good.
I love it.
I will watch from the comfort of my couch. That's where I like to watch
too.
it. Yeah. No.
I mean, it's just I was like, I don't know what is happening right
Love
now.
Caleb Williams from the first day he came on, put the Bear uniform on. Absolutely phenomenal.
You were a hater.
Phenomenal.
I was a hater. I wouldn't say I was a hater. I just, I was like,
James, I told you he was good, James. I told you he was going to be all right. You got to have some faith, James, in production.
I love the pettiness between Johnson and LaFleur with the handshakes. Good. Oh my God, girl. Oh, the drama. I was like, I love petty men.
The AI stuff is great.
Where he
eat it up.
Kicks them, fights them.
So good. So good. Yeah. Good. No, that is awesome. But I mean,
I got a feeling this is the high point of the season, though. Sorry. I don't mean to put a little damper on things.
Yeah, you get to the second round of the playoffs. It's a winnable game. I mean, I saw a stat about Stafford in the cold because it's
he doesn't do well.
Doesn't do well outside the dome.
Yeah.
Oh, okay.
Yeah. So and he's only played a handful of games there.
And people were saying like, this is why you have a stadium in the heart of a city that doesn't have a dome, because you get games and experiences like this. You don't get this in Indiana. You don't get this in Arlington Heights.
I don't think they care about that.
I don't know, but
they got rid of all the other ones where they had the heart of the city with the weather and everything else like that. They put a big dome over them already.
I know. The commission was having like a on the tarmac meeting or something. They went out to Arlington, and I don't know. The whole thing, I don't know. But
I mean, it has the potential to be frigid next weekend. Like we're in the middle of winter. You're on the lake.
Separate the men from the boys.
Yeah.
Well, there's an advantage if you're used to it. So it's definitely there. Yeah. If they're used to it. I don't think they're that used to it, but whatever. Same old.
Yeah. But rest of the NFL playoff picture shaken off. Bills barely winning. Eagles out.
Oh wait, don't get to the Bills yet, because then he's gonna toot his horn.
Yeah.
Hold on. Wait a minute. What about when Johnson went for it from their own 35?
I didn't like that. I thought we were getting a little too aggressive.
I
like it.
When he went for it the first time around the 50-yard line, element of surprise. They went to a quick lineup. You could see it possibly working and keeping the momentum going. From our own 30-something.
A little much.
4th and 4 or something, or 3 or something. I don't know. Didn't feel good. And then they scored a touchdown on it. But hey, I got to give him credit. Good job. All right, you were going to talk about Go ahead. Talk about your Buffalo Bills. I made the
Not
great
my
call.
Buffalo Bills. No, dude. I am a Chiefs fan. But and the 49ers beating the Eagles, but Kittle out, torn ACL.
Yeah,
Thanks,
that was sad.
PCE or whatever.
Yeah, that was sad. Might be the end of Kittle.
Oh no! He's a Swiftie.
He's 32.
He's a Swiftie.
Yeah, he's washed up at 32. Can you believe it?
Well, that's what I mean.
I know.
It's been crazy how many torn ACLs and Achilles. It's been something. I don't know.
Electromagnetic field.
That's what I'm saying, man.
Yeah.
But who do you like now in the? It's like
my big play was Bills. To take the Bills at plus 1,000.
Wouldn't say it was a dominant performance.
Some got it at plus 1,200. The win's a win.
Yeah, sure.
We do not discriminate.
Bears didn't have a dominant performance either.
Absolutely, but that's not our style.
Okay.
That's true.
That's not our MO.
No, I think the Bills are interesting on that side. Not really anymore, but
Who do you like in the NFC?
I'll take Seattle because we're not playing them this week. I'll take Seattle to win that game.
Okay.
The NFC is. I think it's a toss-up.
All right.
It's gonna be. I think Seattle's gonna win that game.
All right. How about
Bears.
you? How about you, Bat?
I'll go. I'll piggyback my son. I've been piggybacking him the whole season, so I'll piggyback him now. So I'll go the same direction.
But the Bills bet was just a sharp bet. Okay.
So he was for a week now. He's been saying you got to bet the Bills plus 1,000 to win the Super Bowl.
Okay.
So when I was at the casino on Friday, I put it down.
Girl, why were you at the casino on Friday?
It was also lunchtime.
Because
is that when you got your little Social Security money?
My Social Security check came in.
You got your little checks and you went to the casino.
Yes. And
just like my grandma.
And so I'm there. I'm like, what degenerates are at the casino at this time? I look to my right. There's Tucci.
No way Tucci's there.
Tooch in a full suit.
Yeah. Sport coat and cowboy boots. I go, you effing degenerate. Okay.
That is amazing.
Wait, what casino were you at?
Not River. What's it called?
Yeah, Rivers.
Rivers. Yeah.
Okay.
Yeah. Rivers. Yeah. What? So I went there and I bet Buffalo plus 1,000 to win the Super Bowl. Now it's down to 550 or 600. So that was a good bet. That was a good bet.
That's what I thought. And then if they make it to the conference finals.
Yeah, then you got
something. With some hedging and kind of play around with it.
Yeah.
Interesting.
I just thought it wasn't a good, it was too cheap.
Okay.
Right.
Yeah.
Okay.
And that worked out nice.
Yeah.
That was it.
So we'll see.
And I bet the Bears to win too. So that was but that was 50-50 shot. They were 1.5 points. You get
on the game.
On the game.
I think Jenny had bet the Bears to like in the preseason. So I think Jenny has the best odds
Good for her.
of all.
Yeah.
Because she did it back in August when we didn't.
She's
know.
lucky. So I was watching these people play these penny slots and stuff like that. They basically just put money in, and then it goes on auto roll.
Yeah,
and they just
zombies.
Yeah, and they just stare at it, and it just is just clicky. This is quite a racket. We got to get some of those penny slots. What we
the young peeps would call that being an NPC.
Non-playable.
Control.
Yeah.
Non-player control.
Yes,
NPC.
just like this.
Non-playable character.
Yeah, or non-playable. Is it non-playable?
I've never seen such a thing
character.
in my entire life.
Non-player control.
Non-player character. Yeah.
Okay. It's like in a video game.
Yeah.
Where you're the person.
Yes.
And it's all the other people that just walk into walls.
Right. I get it.
Good morning, son.
Right.
Have one little emote that they do throughout the game.
Uh-huh.
It's kind of.
That's how it is. And there's many of them.
Yeah.
Like wall walkers. You're right. Yeah. Anyway.
I just think it's so weird that you were at the casino in the middle of.
I had a meeting and I met for lunch. Was the
you had a meeting at the casino?
Not with Tucci, but yes. Mm-hmm.
We have a great show for you today, whether or not you're gambling away your retirement or you're just relaxing in the comfort of your home on this magnificent Monday morning at the top of the 8 o'clock hour. We got a little research corner with Kai, the general, stepping in to give his outlook and perception for what's happening in the market this week. And then also at 8:40, we have the Skinny on Options abstract application. Dr. Jim in the house. I guess he's going to say, wait, who's going to be his team now? Buffalo?
That's a hard one.
As you know,
Buffalo's
I've always been a big Bills guy.
Yeah.
Who's the chalk? Maybe
The Rams, maybe? Because he was in St. Louis. I don't know.
Denver. Rams are going to play us, right?
Yeah.
I don't know.
It's really tough.
I mean, it could be Bears. It could be back to Bears because he did live here.
It could be back to Bears. I could see him going Seattle. Like a real random one.
Mm-hmm.
Well, we're going to find out what this flavor of the week is. But he's also going to talk about super high probability trades. That's going to be at 8:40. Then 9 o'clock. Part of our Zero DTE series, Zero DTE Breakdown 2025 in-depth analysis.
An absolute data dump.
Just a banger of
This
data.
is a banger. We're going to have Kai on for that one as well.
We might need the whole hour on it.
Yeah.
Okay.
There's a lot
of
stuff
information
there. And then next week, we're going to do kind of a best of, which should be really cool. But yeah, this one is...
Kai,
there is a lot there.
Kai did the market measure, and he was sick all last week, so he was at home feverishly working on this. So he did a week's worth of work for you today. It's good.
Yeah.
You're going to like it. This is good. There's a lot of stuff.
And then at 9:20, we have live from the trade desk, Quentin and Ryan in the house. Quentin counting down all the top trending tickers over at Tasty Trade, and Ryan providing us with some insights on the Tasty crypto side of business. Going to be a great show. And G Money accompanying the ladies today at 10 o'clock. So Liz and Jenny and Glenn.
Smart man.
Very smart man. It's a good tag team there. Yeah, for sure. Ooh, my Taiwanese sources from Wakanda just told me Sunday, depending on the time, could be single digits, wind chill below 0, maybe 10 below, if all things work out.
Ooh.
I will have my heated blanket with my cup of tea. And actually, I don't watch the Bears games either because I'm superstitious. But
Good. Stay away.
Yeah, I would stay. Mm-hmm. I know everyone on Twitter was like, okay, everybody has to do exactly what they did this week. They're like, if you're traveling, cancel it. If you're going somewhere, cancel. Put on everything you had on. Eat everything you ate. Do everything the exact same way. Yeah. So,
too funny.
Also, shout out to the Pope. Thank you, Pope.
Yes, we are blessed.
But in the meantime, in the between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire.
Leading story. Top story. Just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's January the 12th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
Yes, the moment you've been waiting for. I told you the 13th. I know today's the 12th, but tomorrow morning before the market opens, you'll have J.P. Morgan and DAL, Delta Airlines.
Okay. Oh, all right.
Starting us off.
Well, in something that no one predicted last night, the Fed chair had to drop a video, like a reaction to something, as if he were Tupac. He's like, first off, and so the Fed chair, I'm so sorry, but this is just like, this is a crazy time.
That needs to be made into an AI video of the Tupac.
Right, I know the Tupac.
Well, they're already putting voice over his.
So Fed chair was not taking any liberty with the severity of the situation. He's like, I'm being accused of these crimes about the whole renovation. He's like, it's not about that. He's like, you know damn well that he's mad about interest rates and that I am being threatened with prosecution and criminal intent and all this stuff to lower rates. He's like, look.
Not being threatened. They're actually...
Right. Yeah.
There's no
right.
threat.
So again, it's a threat to an independent Fed. Markets hated it. Markets still continue to hate it this morning. What do we do? Because we weren't anticipating this.
Well, listen, we always said the movement in the market's going to come from a place that you have. Listen, there are other things going on around the world. I mean, you got Iran going on. You've got. There's a million things that you can talk about. This, I don't think anybody really saw. I don't think this was on the radar.
Right.
And that's what probably upset the market the most. I mean, even the S&P is traded over 7,000. They're about 50 handles under that. They're down 36 right now. I mean, we're 69, 68 on the E-mini S&Ps. Right now, this seems like they're digesting it. I don't know. It's not like a 3-4% move right on the opening here.
Yeah. I mean, they've been down like 40 points throughout the overnight session.
Yeah, I meant from the highs. I just went from the highs.
Oh, yeah.
7,017 and change, I think, is the highs. There's 69.
It's interesting that there hasn't been more of like a buy.
Yeah.
From here. Usually, every other...
Volatility upticked all night long. Volatility's up this morning, 1647, but it's 40 cents off of its highs. I think the market's... I don't want the market to digest this, overnight, but it seems like it's being digested overnight again.
Yeah.
What about bonds?
Bonds trading in that 115 to 116 range. They're 115.10.
They've gone nowhere.
They've done nothing.
Yeah.
The really big
and there's
movers
no vol there either.
Have been the metals, gold and silver. Yeah. You could throw the other ones in there too.
Sure.
But gold and silver, that's your play. I mean, silver's 85 and change, super high IV rank.
Yeah, I'll get into the metals.
Gold new highs. Yeah, I mean, it's
crazy.
crazy.
But I do want to also talk about the dollar. Dollar reeling on the criminal probe into the Fed chair, Powell. The dollar retreated from its strongest in a month early on Monday as U.S. prosecutors opened the criminal investigation into the Fed Reserve chair. Let's talk about the dollar, the euro, the yen.
The other good thing with this Fed happening right now is you're going to get a lot of Fed experts on Twitter and X and everywhere else across the world. Everybody becomes an expert on federal law and when the Fed was initiated, when taxes started. Everybody becomes a professional. So far right now, the market's like just wait and see kind of thing. It's just like in a holding pattern. But I'm sorry to interrupt.
The dollar has had a really nice run over the last week or so.
Yep.
Bailed me out of a lot of junky positions that I have.
Euro's was going lower, dollar going higher. Now you got the euro up pretty good this morning.
Yeah.
The runs first time in about 10 or 12 days that the euro's got a little bit of a rally to it.
Yeah.
What about our friends in Japan?
I don't know if they're anybody's friends right now. I mean, it is up a skosh, but just a skosh off of record lows, right?
Yeah. Trading the yen in any capacity is almost impossible.
Yeah.
Okay.
Yeah.
Even when you're short it goes against you somehow.
Yeah.
I don't know.
It finds a way. It finds a way.
Like
to
it goes
be,
down every single day,
Right.
but somehow when you get short it just goes right against you.
It's similar to the gold silver ratio. It's doing that too. So gold silver ratio on its lows, and I have that on from Friday, which is
What's it at now? It's probably
54.
Oh my God.
Just over 54, just around 54.
Yeah, whoever that was, I forget who emailed me when we were trading it in the 60s, and I was like, oh, this is like a 5-year or 10-year low, and they were like, no, 100-year average is around 40, and I'm like, 100 years? Like, I don't know. Where do we cut it off?
Might be going there.
Seriously. I mean, we're closer to that than.
But silver up almost 8%, gold up almost 3%, 7.5, 2.5, I guess.
Yeah.
Hey, we are getting a December CPI report tomorrow, and we'll offer a final reading on a year in which inflation gradually eased on paper, even as many Americans continue to feel squeezed by higher prices. Economists expect the Jan 12 report to reveal prices rose about 2.8% in the 12 months ending in December, while inflation remained well below the highs reached in 2022 and 2023. Data. CPI?
I don't know. Yeah, wait till the geniuses come out here too on social media. You'll see it. You'll see it. I mean, I don't know. You know, it's like if half full, half empty. It's all backwards numbers anyway. What are we doing in the future and what the market doing? I mean, all of this, let's just trade what's in front of us. Even the S&Ps are down 0.5 percentage point off of all-time highs. What do you want to do? Is this the bell that's being rung? Then do something about it in the market. If you think this is the biggest dip we've had all year long, which it basically is, and you want to buy the dip, then buy the dip. I mean, you got to figure out what's going on here right now. Volatility is telling you at 1650 that it's
no big deal.
No big deal. Just being digested at this moment. But that's subject to change, which is so good. That's the great thing about the market. Yeah. I mean, the Russell's actually basically unchanged. It's down $6. Yeah. Everything else is down 0.5 percentage point. We go up 0.5 percentage point, what seems like almost every day. So I don't know.
Just letting you know that the number's coming out tomorrow. So do with that what you will.
Yes. Many numbers.
The average S&P 500 company is spending less and less time in the index. On average, 20% of S&P 500 constituents turn over every 5 years. The S&P experiences a lot of turnover, but the churn seems to be getting a little bit higher. But it always means that, fresh faces are coming to the market.
I mean, things are just moving so much quicker now. I mean, everywhere across. I think this is logical. I don't think anybody sees this as a big thing.
No, I think it's good. I mean, quarterly rebalance, you can't get much. That's as low as you could do, right? I mean, you're not going to do it like once a year.
Right.
No,
quarterly is good.
Yeah.
It's a good cadence.
Yes, absolutely.
It's perfect.
Yeah.
Stocks are signaling that another commodity super cycle is afoot. Oh, not afoot. In 2026, we are seeing oil, gold, and silver rally as geopolitical tensions rise. Spot gold rose more than 1% at an all-time high of 45.63. We've already been talking about it this morning because we can't help but not. But are we in a commodity super cycle?
I don't know what that is, but it certainly seems like one. I mean, we were at all-time highs for gold, 46.17 on the futures right now, just a couple of dollars. That's up 115. It's a huge move, 2.5% move.
It doesn't give warm, fuzzy feelings.
No, it does not.
No,
it does
when
not.
you see these moves, you're like...
And silver up almost 7.5% to 85.28. That's an all-time high too. So yeah, that would be the side that says this E-mini S&P is down 36, this NASDAQ down just about 200 is a gift to sell, right? If you're looking at the commodity side, which has been strong for the last, I don't know, since basically November of last year. So you could have said this same thing at any time from November to today.
Yeah.
But today it does seem like it's really kind of a flight to, I don't know, safety, if those are safeties. Yeah. It quickly changes. But
gold finished up 64% in the year 2025. Silver up 141%.
Unbelievable.
That's why that gold-silver ratio is so low right now.
Yeah.
Approaching its 100-year low.
Yeah, it's very close to that.
Yeah.
I mean, we continue at this rate, we'll be there in 2 weeks.
By Thursday.
Yeah, 1% a week, 1% a day, pretty much.
Executives at Exxon say that its prospects in Venezuela don't offer a lot of opportunity for investment. Exxon says they will continue to study Venezuelan returns as Chevron plots immediate production bump. But upon hearing that Exxon might stay out of Venezuela, Trump says that, no, you know what? I'm going to keep you out of Venezuela.
No, that's my decision.
Nobody asked me.
So then President Trump said he might block Exxon from investing in Venezuela after the CEO called the country uninvestable.
Yeah.
Let's talk oil, Chevron, XOM, what, I don't know.
Well, Chevron's up a skosh this morning. Oil is basically unchanged at just under 59 this morning. Just had a little bit of a rally.
Valero's been the one
yes, VLO.
Been the winner.
Yeah, it's been the winner.
This.
Yeah. Chevron did pretty good too. I mean, went from 150 to 165, but yes, VLO has been the big winner there, going from 160 to about 185, where it sits today. Yeah. 185 change.
But this has been just a true buy the rumor, sell the news.
It's been a true buy the rumor.
At least from a volatility perspective, because you had the big move higher, and then the next day they basically reversed the entire move.
All of them except VLO, which was going sideways a little bit higher than this news. All the rest of them, you are 100%.
But it's not continuing. It's been a constant, like, oh, they have $2 billion sitting here that's going to be taken. It's been a constant bullish narrative, and it really hasn't. The vol hasn't played out to the upside.
No, it hasn't.
Or continued to the upside, I should say.
Yep.
Interesting.
Wisconsin gas, 220.
Ooh, damn, that's nice.
Pretty good.
Yeah, it was cheap in Nevada, and Arizona, and Utah when I was out there. But it's cheap in the suburbs though, because I got gas over the weekend, in Schaumburg or something. It was like $2.79.
What are you doing in Schaumburg?
I told you I went to the RV show.
Oh, all right. Yeah, that's right.
Yeah.
Did you see something that you...
It was me and a bunch of dudes named Dale.
Did you or your newfound friend Dale find anything they liked?
No, I was just looking around. Anyway. News, again, moving the markets kind of from a Truth Social post. President Trump is calling for a 1-year cap on credit card interest rates at 10%. On Friday, the post went out that said that he wanted to do so. Again, keeping in mind this is the administration that repealed the cap on late payment fees that would have been very beneficial to lots of consumers. But now, obviously, you can't do this by executive order. You have to get the banks involved, so other regulations. But who does this affect the most? Is it buy now, pay later? Because then they take the riskier customers because the credit card companies aren't gonna, have higher rates? Is it the airlines, as Chris Vecchio was surmising last night, because their rewards programs are based on being able to charge higher rewards? What's the play?
I don't know, but I will say this. Visa and MasterCard are both down this morning, so I would say that it does not bode well.
And also the banking stocks, which are about to report, they're in this too.
They are in this too. JP Morgan down around $6. It does have earnings coming out tomorrow. Now you're going to see maybe this news kind of. You would think that there would be a ceiling to all of their earnings on this news, bank type stocks, those kinds of. That's what you would think. So if the expected move, I'm just throwing out a number, is $10. In my mind, I would look at it as $5 of upside. $10 or $15 worth of downside if you're looking to play one of those. That's the way I would look at it. I think the upside would be capped. In my opinion. I don't know. A lot of social media warriors were echoing exactly what you were saying.
Airline points.
Yeah.
Sure.
This and that.
Yeah.
Like, you will take my points from my cold dead hands.
Well, I know, but if you don't
use them now,
they're not going to take them. They're just going to devalue them by 100%.
Right.
Your flights, instead of their 20,000 points, are going to be 40,000 points.
Yeah.
And so
but it's a 1 year thing. I mean, for the consumer on the surface, this
is great.
Yeah, it sounds like
But they had one of the best options for the consumer, and they took it away. Like, they had a cap on how much they could charge you on late fees. Like, that's something that's very
late fees. I mean, listen, when you're paying 25, 28%, you can't get ahead on your.
The late fees are.
The late fees are just they're just slapping you one more time before you walk out the door. I mean, but that 25, 28%
is insane.
It's insane. On $100, you're paying back like $25 or something.
Yeah.
It's just gross.
But these are.
I mean, it's beyond mafia numbers. I mean, it really is, and it's been going on since the dawn of time. I mean,
we know this likely won't change, but
no.
This is just more of the little grenades that Trump has been throwing around.
Maybe midterm bullshit, all kinds of things like that. Yeah, sure.
This is exactly how last year went.
But I don't understand.
Just like little grenades, little geopolitical stuff, and then
I'm going to add a second floor to the West Wing.
let's take a step back for a second now. And you said you'll take my my credit card stuff, my cold dead hands, my
points. Yes.
Yeah.
But if you were being a player to the world, I would vote to take my credits from my points that I saved, that everybody else can have 10% on their credit cards instead of 28%.
I mean,
if you're a giver, no. But this is. I love the reaction because your reaction is true and honest, and this is the fact of the world. Yeah. We all want to do better as long as it doesn't mess with my shit. You know what I mean, or what your agenda
I think it's a false equivalence, though. Like, I think it's a false equivalence of an argument, because there's a difference of saying, hey, I'm not against student loan debt. Like, I don't have student loans, but I'm not against other people having their loans forgiven. Like, so, like, I say that, right? Like, I'm not against,
because it doesn't affect you at all. But if they said,
well, it's like, well, I worked to do
gain.
Right. I'm not.
No, you're not going to gain.
Right, and so other people could just have their loans like wiped away, and then like some people struggle to pay off their loans.
But what if they said you have a year? What if they say you have a year to use all your points?
Right. Again, that's fine. But
I mean, so all I'm trying to point out is, on the surface, this sounds like a decent deal for people. On the surface.
Sure. Yeah. I think that there's a lot of.
There's a lot of give and take for it.
Well, if I could finish my sentence, I think there's a lot of advantage that gets taken from consumers in the credit card space. But I think you're trying to play both sides, because why demolish an entire branch of the government that was for giving people who have been screwed over them, like the CFPB? So by dissolving, like, so not just like late fees, but people who are screwed, like veterans and other things, like hey, we opened accounts in your name, and like all of those settlements.
I'm talking about the credit card industry.
I know, but you're like, hey, I want to be a martyr, I want to give away all my points, but then you're also like, hey, this is also.
No, I don't have any points to give away, so
this is also the administration.
Right,
it's also the administration, though, that obliterated the CFPB, which is the strongest advocate of all for consumers.
Allegedly.
Not allegedly. They've returned billions of dollars to consumers who have been, defrauded by major financial institutions. It's
like 1 year of like Minnesota healthcare fraud.
Sure.
I'm going to move on.
An argument you're making, and it's well, I'm not prepared to debate it with you, but this sounds good on paper. Even if they had to blow up the quote unquote points that you get, which I feel are basically
sure, but I think that there's other cascading consequences that we're probably not
Probably.
aware of.
Probably. For every yin, there's a yang.
Keeping it moving. Coinbase is raising pressure as a crypto bill moves to the Senate for markup. They want to preserve the ability to offer rewards to its customers who hold stable coins. The largest U.S. crypto exchange may reconsider its support for the digital asset market structure bill that's scheduled for markup in at least one Senate committee on Thursday. What's Bitcoin doing, Coinbase?
Basically unchanged, maybe down $1 or
It was
so.
up like $2,000 last night.
Yes.
Bitcoin was.
Yes.
Wow.
Yes. Last night, coin traded almost up to 93. It's just under 91 at 90,800 and change. It still seems like sell every rally. Like it doesn't seem to have the footing underneath it yet.
Yeah.
I don't know, coin down a buck and change.
239. I'm sorry.
Yep.
Meta said Friday it had struck a 20-year agreement to buy power from 3 Vistra nuclear plants in the U.S. heartland, and it will also develop projects with 2 other companies hoping to build small modular reactors. Shares of Oklo surged nearly 20%, where Vistra VST rose around 8%.
I don't know how the chart people are going to be able to digest the last 2 years. Because like VST, it's gone from like 220 to 150. And in the 2 days prior to this announcement, it had gone from 165 to 145. Like it was a $20 down move. After the announcement, it gapped up and opened at like 170, rallied to 180. So you just have these like 30, like $20, $30 gaps in some of these stocks. You look at like LMT was the same thing where they announced that, they're going to cut the dividends and, Trump was throwing more grenades and the stock, gaps down $50. The next day it's up 70. It's like things are moving so quick. To your
Lockheed
point.
Martin up another $6 or $7 too, man, making new highs.
It's just crazy. Like some of these moves are just enormous.
Meta 648 down around $5, $4 or $5.
Walmart is teaming up with Google's Gemini to make it easier for shoppers to find and buy products. The companies announced yesterday that they're working together to make it easier for shoppers to discover and buy items through Google's AI assistant Gemini. The retail giant struck a similar deal with OpenAI's ChatGPT in October.
Walmart's the new growth stock.
It is going into the NASDAQ, I think, starting January 20th.
Yep, up another $4. Yeah, they're going to be the NASDAQ 100, I believe. But anyway, up another $4, 118 and change. If it stays here, it would be another all-time high.
Yep.
What are you doing in the Goog?
The Goog, it's had a relatively low IV rank, which has been growing. Its IV rank is now 33. It's down about $2 or so, just off of all-time highs, which I believe it made yesterday or close enough. Friday,
yeah.
Yeah, close enough to it.
We have an upside call ratio spread there.
So a little bit of a down move here and volatility contraction would help a position like that.
Yeah.
Yep.
Amazon is planning to take on Walmart by launching its first big box retail store in a Chicago suburb. Amazon has proposed building a big box retail store that would have 229,000 square feet. It's expected to offer a mix of groceries, general merchandise, and household essentials. Do you want to guess which suburb?
Barrington.
No. That's far.
Good guess.
Yeah, because 22,000 square.
229,000.
220.
Yeah, I know. I can't
find that.
No, but Barrington's to North Chicago.
Nope.
Is it west?
Nope.
Not west.
It's not on the south side, is it?
So it's got
It's
Aurora.
south. It's
Northwest.
south.
Where?
It's northwest, isn't it?
No.
Northwest?
No way.
Nope.
I don't know.
Aurora? No.
Orland Park.
Oh.
That's closer than I would have expected.
Me too.
It's interesting. I love Orland Park. I love them all.
I would have expected them to say Chicago suburb and it'd be 40 minutes to an hour outside the city. An hour and a half with traffic.
Right, like Huntley.
Yeah, exactly.
On an easy day, yeah.
What are you doing in Amazon?
Amazon trading 246, down about $1 or so. It's had about a 5 or 7 day run here. IV rank of 34 is actually pretty good, and it's been expanding. Earnings of February 5th, so about 3 weeks from now.
Amazon also making a move. Their pharmacy has now started to offer Novo Nordisk's weight loss pill. Eligible customers with insurance can pay as little as $25 for 1 month supply, while cash paying options start as low as $149. Amazon now also taking direct shots at companies like Hims.
Yes, Hims has been a dog. Trading at 31, it's basically reversed all the last year move.
Ooh, Hims. Does the product work?
Hims,
$31
Hair
and
products too. It's not just boner
Hey,
pills.
don't put that curse on me.
It's not just boner pills.
Oh, it's not?
Full head of hair, you're good.
Yeah.
My grandfather had good hair too.
On your mom's side,
Mom's side. Isn't that where you get it from? That's what they say.
That's what they say.
Yeah,
That's what
there
they
you go.
say.
That's what they say.
Yeah. 31.
He passed early, so we didn't know really. He was probably like
Who?
my grandpa.
When he passed?
Yeah. No, how old was he? He was like 60s, probably 7.
When he passed?
Yeah.
Yeah, I think just under 70. And he was in great shape too.
Yeah.
But a widowmaker.
Yeah.
I'm sorry for your loss. Hims.
31.40, down about 20 cents at Lowe's. Ivy rank is 6, so you're going to have to play this with a directional bias, not looking to sell any premium air. Earnings are February 23rd. We have a position. I think you have a Jan-Feb position.
Yeah, I think I'm long stock. I just have
turns out to
short
be long
puts
stock.
at the 37 strike that are expiring this week. So we'll take some stock. Or no, is that February? What do I have here?
You have it looks like a Jan-Feb
Oh, diagonal spread.
spread in
I thought we had puts. Maybe I closed.
in Hims. It's out of the money. It's dead. You have nothing but you're smoking hopium right now.
Yeah.
Yep, define risk trade, but
In a category of news, I'm just calling, well, they tried it. India was proposing key security requirements for smartphone makers like Apple and Samsung that was like, you have to give us all of your proprietary source code to be reviewed by the government so we can identify vulnerabilities in your phone's operating systems that could be exploited by hackers. And then like Apple and Google and all the phone companies are like, you out your damn mind.
That's amazing. Yeah.
You tried it, India. I mean, you tried it. I love the audacity.
Not going to happen.
What are you doing in Apple stock, though?
And what do you think about Apple? $258 and change, down about $1 or so. It's been on a 6 or 7 day slide here, going from around 270 to under 260, where it sits right now. Good Ivy rank expanding from about 0 to 18. All these are going to be expanding a little bit with earnings coming at the end of January.
We got some long delta last week. I think it was.
I don't hate it.
What's your assumption? We did the poor man's cover call, which was a longer duration. So we went 95 days on the long. So long the April 250 and short the 270 in February. And then we also sold the 235 puts at 226. They're around like 175-ish right now. But Apple is like, kind of in an interesting spot given that it's had a relatively decent pullback compared to the rest of the market.
Well, something else is bad if they're writing articles about it. This headline just says Netflix stock is beaten down, but short put plays are attractive.
I don't like that they're putting actual trades in these headlines anymore. That's a little scary.
Netflix stock's taken a significant hit, down 27.9%.
Where'd this come from? That's my job.
From its peak in late October 2025. What is a play that we can do to make our own headlines in Netflix? Nikki is shook.
I don't like this. I am short puts already. I mean, I have like a cover call.
Nikki, you're so public.
I am shocked. This is,
Well, Netflix hasn't had an uptick, not even all year. Well, really from October when it was $125 or something like that, down to under 90, 89 on the offer right now, down about 50 cents. Ivy rank is great at 47, one of the larger ones. And it's one that has earnings sooner in the cycle.
Yeah,
like
it's
January
usually like
20th.
the first big
big name. Yeah.
It's the first one to really rock your P&L earnings.
Yes, exactly. But we'll see. I mean, now that it's split, we'll see how that kind of plays out here.
Yes.
A lot of times after the split, you don't have that same like velocity of move because it's not as much gamma.
Allegiant Airlines is acquiring a rival low-cost carrier, Sun Country, in a $1.5 billion cash and stock deal. The combination comes as budget airlines are facing soaring costs following the pandemic, as well as an increase in domestic capacity. My parents are taking Allegiant because they are going to Florida this week, and I have concerns. I get worried when they travel by themselves because they're just boomers. Yeah. And I worry about them.
Okay, I thought you were worried about the planes.
No. I'm just worried.
They're a United partner, I believe.
I think they're their own separate entity.
I think they're a United partner because they do, like if you fly United to some of those smaller airports. I think it's through. Allegiant does like a lot of the, like if you go to Traverse City.
Sure.
Like I've taken that flight on United, and I think that's
partners with other various companies for travel packages. So I think Vanetta might be more right on this than others.
Okay.
Yeah.
They might just help with the gate stuff. I don't know. But Delta set to report their earnings, and then the rest of the airlines. So if you want to look at a Delta or United.
Well, Delta is tomorrow morning before
we'll see if the points situation affects it. It's down $1.
There used to never be points. It used to be a free.
Back in my day,
it was a free credit card, and you just paid, and there was a reasonable interest rate if you didn't pay on time. You guys all screwed it all up.
You did.
No, you did.
I didn't have a credit card.
Boomer.
I didn't have back to the way it was. We didn't give them to kids in college
we did not
or in
screw
high
anything
school.
up.
No.
We just handed the big fat mess that you gave us.
Let's bring back.
That's not true.
Let's bring the Diners Club card back. I mean, if you want points, let's do that.
Okay, Telly Savalas. What is happening?
I mean, you guys ruined everything.
You ruined everything.
We come up with great ideas. You guys ruin it.
Macy's is set to close 14 more stores nationwide as they continue to execute its bold new chapter strategy, making targeted adjustments to its store footprints to better serve customers.
You forget how things were in the before time. They were pretty good.
Long-term growth. Macy's.
Macy's $22, maybe down.
That Macy's on Michigan Avenue is one of. You have to go
to the State Street one, that flagship Marshall Fields on State Street, the Great Street. That's the one. But the one on Michigan Avenue is sad.
Yeah, it's like that's a sad.
But it's gone. It's not even there anymore. It hasn't been there for a year. Look it up.
Oh, the one on State Street is the one I'm thinking about.
The one on Michigan Avenue.
You go down. You're like, I don't know.
It's nice. They read it anyway. I like Macy's because it's one of the few places that still has a petite department, and I like to buy.
Anybody's looking for a petite.
It's a petite.
Oh, well.
What is Macy's stock doing? It did good on its last earnings.
Yeah, I think
50 cents off ice.
Yeah, but isn't this like it is? He's right. Isn't this after restructuring? I thought did Macy's?
They've had all sorts. Of over the years. I mean, this was one that was going away in COVID.
Right.
It traded at like $6 or something.
Yeah, a lot of retail is a little bit weak. This morning, I just had my friend write into me and talk about Abercrombie and Fitch, which looks like it's down around $20 ANF or so.
Yes.
Oh wow.
Yeah, from 124 to about 104.
Wow.
Fourth quarter fiscal year outlook, I guess they came up. Yeah.
Krispy Kreme Donuts is unveiling a new line of flavors for the winter season. They will now have a caramel dolce donut, a chocolate truffle donut, a raspberry cheesecake donut, stop playing with me, and then a cinnamon sugar cake donut.
I love those videos of people smashing all the Krispy Kremes together and then eating them like a
sandwich?
Yeah,
I've never seen this.
Oh, I haven't seen those. I just love that their ticker is D-Nut.
It's like
D-Nut.
6,000 calories.
Oh,
per box. Like I think each one of these is like.
We're not done with that. I thought we were done. There's a $4 stock.
No, a single donut. I think it's like 150 calories.
No.
Yeah. Hold on.
No way.
Calories.
No way.
Wait.
Less than the power bar you're eating. My wife makes fun of me because I call them power bars still.
190 calories.
Oh,
Not bad.
So I told you.
that's what I thought.
Get yourself a donut. Now that's without probably all the stuff in it.
It's
and stuff.
11 grams of fat, 22 grams of carbs, 10 grams of sugar, 3 grams of protein.
Oh,
There you go.
there you go. Get your protein fix.
A D-nut. What's D-nut doing?
D-Nut, it's a $4 stock. I mean, you can buy this when it gets down to $2 or something like that if you want a long-term hold or something. I'm not trading this.
Not really tradable.
No.
I saw a couple of tweets on the timeline over the weekend, just the confluence of events that the Bulls had won, the Blackhawks won, the Bears won, and the Cubs signed Alex Bregman. I don't know who this dude is, but everyone has a boy crush on him. Love that for you fellas. I guess if you're a Sox fan.
Dr. Jim will talk about this.
If you're a Sox fan, you're upset. The third
8:40.
baseman, Alex Bregman, and the Chicago Cubs are in agreement on a 5-year, $175 million contract. Good Lord. So I guess one of the biggest bats. Okay, I'd like to see his big bat.
Wow.
But are you guys excited about this? I don't understand baseball, so.
Cub fans are.
Okay, great.
Yeah,
Let's
Cub
go.
fans are for sure. For sure. This is a big coup for them.
Good job, Cubbies. Finally today for my viral video of the day, as costs continue to rise, it's always nice to find budget-friendly hacks. And this guy has a hack, how he cut his ski costs in half. As you know, it's expensive to go to a ski resort, pay the lift ticket fees, but watch this.
Dale Aspen.
It's like $300 for one day. Watch this.
Okay. He's sick.
Yo, VIP. Let's kick it.
It's getting decent.
I mean, you fall. Like, obviously he will be banned.
Do not try this at home.
All right, stop.
Better hope Vinny doesn't see this.
No, Vinny just, I don't want to tell you what Vinny does.
They don't buy the passes.
Yeah.
It's really, as a kid who doesn't actually pay for anything, to not buy the passes, that's a little.
How do you support that? You're not gonna give away. You're gonna give away your points, but you're gonna stiff a mom and pop business like Vail Resorts. No, they own Wilmot. Vail owns Wilmot. Yeah. So,
Alpine is mom and pop.
yeah, I know.
Yeah. I do not support that.
Him and his friends, they're a little.
You were with them. You didn't stop him.
What do you mean?
Last time he went with you, did he pay?
Yeah.
Oh, he did? Oh, I didn't know.
Yeah.
Oh, all right. Good.
But he
good.
told us that that's what he does. I'm like, how stupid are you?
Right. As stupid as a soon-to-be 16-year-old is. Yes. I remember what I was doing when I was 16 and what you were doing when we were 16. We all made the same kind of mistakes. But
I was, actually trying to survive,
Yeah.
I didn't have the.
It was really hard for you in Glencoe. I'm sure you.
Money glitch.
I'm sorry.
Wasn't around for me.
Therapy session later. What's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
Confirm and send.
That's right. We'll be back in 90 seconds. Tasty Live.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Taste Trade account today. All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at Tasty Live, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send on this Monday, January 12th. But before we do, let's take a look at the market. Even the S&P is down 36. Could this be the opposite of prior days, meaning all of 2026, which is still only a few days old, where we opened higher and just kind of stayed there or drifted a little bit higher?
You think we're gonna open higher?
No, we open lower.
Oh,
and just kind of stay here and drift a little bit lower, kind of thing. Like we're down 45 for the day, but there's really no velocity to the movement. I think people would be expecting, when they ring a bell from the top, that you get a bigger, quick move lower. I don't know. That's my feeling. Right.
Interesting thought.
Interesting. That's my feeling right now in the market. NASDAQ down 182, Russell down 7, NASDAQ, NASDAQ, E-mini, S&Ps, and Dow, all three are down around a half to a third to 2/3 of a percentage point. Dow down 300 and change. The Russell is only down about a quarter of a percentage point, down $7.40. Volatility up by 35 cents, 1650, middle of its range from 16 to just under 17. Let's key on volatility. See volatility upticking, trying to get over these highs made last night. Then maybe you get a little velocity to the down move. Bonds down 11, 115.14, not doing anything on any numbers that have come out. Bitcoin hanging out just under 91,000. You mentioned it earlier in the show that Bitcoin got up to almost 93,000 last night, 92,008. I do have to now skip to gold and silver. Silver up almost 8%, was up last night, has been strong all night long. Gold and silver have been strong all night long, unlike the E-mini S&Ps, bonds, and
try and lay out another
Bitcoin,
one
which
here,
all.
maybe?
Say again? Say again? Are you selling silver? Just as a we already have the gold silver ratio spread that I put on.
Yeah, at
not as good prices as it's trading today.
Yeah, less advantageous price.
Well, I mean, I did scoopy your equity futures that you sold about 15 handles off of the lows. I did scoopy them on the lows.
Was that NASDAQ?
On Friday.
Yeah, NASDAQ.
I believe so. Yeah.
Yeah.
NASDAQ and ES. Did both.
While I was driving out to Central School in Glencoe for the career day, which is quite illuminating.
You met a teacher. I told you were going to have teachers there.
Yeah, I had multiple teachers there. And it was funny.
That you, as a student, had. Yes. And now met them as.
Yes.
They even remembered like your sister and family and stuff. It's pretty cool.
Yeah.
Very nice. They called me.
Pretty crazy.
Let's get to
Miss Matthews, the one that called you.
Yes.
About my chains. She's still there. Still there.
Still there, still wreaking havoc.
When I saw she looked at me like she saw a ghost. She was like, oh no. pretty funny.
He's back.
Yeah.
Let's get to it. Confirm and send Monday, January 12th. First question, please. When you say close a trade, do you mean when someone exercises an option?
No. So options are tradable. So when we close trades, we're closing a position that we had previously opened. So you're just taking the other side, which closes out the position. It's another transaction. Exercise is an assignment is generally not something that we deal with.
How many exercise and assignments have you had in last month?
On the ones that I like an unaware of assignment, very, very rare. Handful. I mean, that's like an early exercise or assignment. Very, very rare. In general, holding to expiration to like, if you have in the money puts, that's one thing.
Yes.
Other than that, that's there. It's
that you want to be exercised, that are already basically synthetic stock.
Yes.
My point here is we open trades around 45 days, optimal. Some between 60 and 30-ish days is when we open trades. And if they work out in a 2 to 3 week time frame. So we're going to get out of those trades in 2 or 3 weeks when they hit our price target, somewhere between 25 and 50%. Yeah. Now, you could take those like you said, options are tradable all day long. We could take anything off anytime you want, winners or losers. Yeah. So this becoming an exercise of an option, that's old school thinking. We're not looking to do anything like that. And I can't remember the last time I exercised an option because I wanted to. Remember, it's going to increase your buying power. It's not something that we typically do. Yeah. Next question, please.
What chart indicators do most of you use in determining direction? I like using VWAP, but is that what the pros at Tasty use? So do you use anything?
Sure. I don't know who this person is, but since you like VWAP, I like VWAP. I don't know what it is, but if you like it, it's working for you.
Value weighted
I know.
Average
I'm just
price.
Kidding. I'm just
or
kidding.
Is it volume? Volume. Because they take all the volume and
yes. Which is really like
a moving average of sorts.
Right.
They're all averages.
They're all averages. I always talk about how we didn't use charts on the floor as market makers going back into the before time, and that's true. Although my mentor Kenny Weiss would have me do this little X and O chart every 15 minutes or so. I would X or O if the stock had an uptick or a downtick, and it would make this cute little index card at the end of the day of what the stock did all day long, and he would use that in his looking at where he bought and sold stock. So, yeah, we don't look at anything, but there are those that want to see something and say, hey, that's a good to know. This is probably a good to know. And if that allows you to click the button and make a trade, go for it, whatever it is that you look at. So for me, I don't look at anything but price. I got a lot of questions because you've been scalping a lot on futures. And I got a lot of people asking, like, what do you guys look at when you're scalping
not
futures?
Been a ton relative to
but a lot more.
I mean,
look at you.
Would you like to push that one through, Johnny?
You made a full point on that. That was a great trade. You sold it at 85.69 and you bought them back at 84.69.
Nice.
What's that?
I just gave you a nice for the 69. The kids do.
That's $1,000 a point on that. So great job on you in 3.5 minutes.
Yeah.
So awesome.
You get none of that.
I get none of that. You're helping my.
I'm raising your average.
Raising my average on my gold, silver.
Yes. Dollar cost averaging.
So what did you look at when you did that trade in silver? Did you look at VWAP? Did you look at anything else?
No.
Just looked at price.
You just look at price and you keep it small, and they're, it's managing the shot. Trades. Like I'm not looking for a certain dollar amount. I try to scalp around a position. If you're trading like the micros and you can do 3, 4, 5 of them, it allows you to be a little bit flexible. You don't have to flatten the position out every single move. But generally the scalping side of my trading is like this big.
Yes.
It's small.
Yes. Next question, please. Would there ever be a time where you would have no position?
No, I think it's just impossible. If you're a trader, There's always something. There's always something you could be doing.
You don't think you don't want to miss something that's happening in the market. Plus, a lot of positions that you put on, you put on with a longer time frame. I just went over what we go, but we're looking for a 3-week time frame. So really, you can't be with 0 positions.
No.
It just doesn't happen. Now, is there anything wrong with closing all your positions? You're going on vacation and you want to close all your positions, or maybe you've had a good run in the market and you want to close all your positions. I have no problem with it. But if you're asking me or if you're asking Nick, I don't think in the last few decades I've been without a position. And you all have positions too. If you're not even trading with your own money, if you have
there's
money in
other
an IRA or company
House,
401ks or whatever. Yep.
Tradable positions.
Yep. So you always have risk. You can't avoid it.
Can't avoid it.
Next question, please. Why does volatility increase when commodity prices like silver and gold increase? It's the opposite of equities, but I don't understand why.
So there's a couple factors. There's a built-in scarcity, of course, because there's only so much oil, there's only so much silver, there's only so much gold, and so there's a price floor. So the skew is upside based because you can only have, if oil went to 0, it would be a really big problem.
It did. It did go to 0. Went to negative if you factor
if there was no oil.
Yes,
very big problem. So the risk is always a scarcity factor, and then there's just that contributes to the upside skew. And when prices of these things go up, everything gets more expensive, and so that brings in volatility as well. So commodities where you have an embedded price floor because the asset is scarce tends to have upside skew.
Yeah, it's the velocity of the move, like anything else, and that's what the option pricing is showing you. So as it goes higher, volatility goes higher too in gold and silver. It is the opposite. So good for you for looking at this. Then you would look at it like an SPY or an SPX or the Qs or anything like that, where there's put risk, right? So there's velocity is to the downside. Mm-hmm. So puts are priced more expensive than calls. The opposite of what you get in gold and silver. So good on you for seeing that. If you look here, you'll see that gold volatility has been upticking. We'll see where it opens when the options open. Now remember, that volatility number or that IV rank number that you're looking at is based on the options themselves, not on the stock itself, the options. So we'll see that volatility move or contract when the market opens. Let's take a quick 90-second break and come back. We got more Tasty Live coming up. We've got an option jive. We got Kai coming in. We'll be back in 90 seconds. Even the S&Ps have not moved more than a point since we've been on the show for the last hour and 8 minutes. We'll be back.
While expanding, though.
While expanding to 1660, up about 15 cents. We'll be back in 90 seconds with TT Live.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's option Jive. It's time for an option Jive, and we got my man Kai in the house. How are you, my friend?
I'm doing great.
Good to see you. You were a little bit under the weather. You had that mysterious flu that's going around.
Yeah.
3 weeks is about how long it takes to stop coughing. How was yours?
The whole family was 2 weeks.
2 weeks. All right.
The whole family, yeah.
You guys are overperformers. You guys did better.
Yeah. Starting from the little one and the older one, my wife, and me eventually.
Yeah.
We got everyone.
Yeah, it's crazy. Well, what do you got for us today? I know we got an option Jive that we're looking at, and you did a great market measure. We'll be doing that at 9 o'clock. Good work out of you. I just want to tell you that ahead of time.
So this is the first piece in the new year with you guys.
All right. Well, let's do it. Let's do it.
Right.
Research Corner.
Research Corner. Something happened last week. Not too much, but definitely positive for the stock traders. Hit record highs for 3 out of 4 indices, except the NASDAQ.
That's been your underperformer, if you can believe that. At all-time highs, did you have the NASDAQ on your bingo card? That would be the underperformer. If I told you 3 of the 4 indices that we watch are going to make
also probably the first name pops out. Right?
Exactly.
Russell's the strongest.
And it's the strong. It's just amazing. It really is. When you least expect it.
Yeah, kind of exactly opposite. Actually, small caps outperform all the other indices. It went up almost 5% last week.
Yeah.
And also other sectors like energy, consumer, discrepancies, financial, all did very good last week.
Yes.
And the second one is the job reports. It's kind of mixed signal for the Fed rate cuts. So higher probably they expect the next cut is probably going to stay the same rates. Because all of these economic news.
I haven't looked at the Fed Watch tool in a while, but last time I looked, it was something like 95% that there's nothing.
Was that before December?
Yeah, it's still 95.
Still 95?
95? Okay, all right.
End of January.
I mean, bonds haven't moved. I figured that number hadn't moved.
Not at all for quite a while, right?
That's been the dead product, the bonds, really. I mean, if you've just been, I know the IV rank is relatively low in there, but if you've just been selling premium in the bonds, it has gone nowhere.
Yeah, unfortunately, I allocated more portion in my 401k to the bonds, and after that, it just
you went with the genius model. You knew what was going to happen with interest rates and
stock market's so high.
Got it.
Right.
Well, you might get paid. You might get paid.
my goodness.
Maybe you're just a little bit early, skosh early.
Hope so. And so last week or in the past 2 or 3 weeks, the commodities, probably the probably has the most volatile moves: copper, natural gas, precious metals. Of course, this morning, gold and silver increased a lot too, like 7% of silver again.
Yeah.
So these are
84 and change.
Yeah.
Silver. Nuts.
Wow.
It almost flirted with 86. It's 84.25 right now. So definitely up around 6%, 6.5%. Gold up 2.5%. But again, all-time highs. Nat gas, on the other hand, has been one that has been going lower. It's been going the opposite
getting close
direction.
to $3. I didn't check the price.
Yeah, 320 and change. It traded down to 318. Yep.
Yeah, and the Supreme Court decision is actually pushed to this Wednesday. Expected. Who knows? So the interesting thing is last Friday in the morning.
But volatility had stayed low all week long going into that. Almost like volatility knew that they were going to kick the can down the road, which is what I said on Wednesday or Thursday. I'm like, volatility should be higher here with this decision on tariffs that we were talking about to be made. And now it seems like volatility, and I know the E-mini S&Ps are down 40, so let's see if volatility stays in this area if E-mini S&Ps in the market ever rally, going into Wednesday's number. I think it's going to be going kind of sideways, so a little bit lower, but we'll see.
But the VIX 1D and the 0DT price
they did
really
pop up.
reflect in that risk. Because before the 9 a.m., the premium was much higher, like a 30% higher.
Yeah,
they bid volatility into Thursday, which the 1D VIX is 0 in 1 day. So they bid it into Friday. It wasn't on the indice level because 30-day implied volatility VIX, which is the VIX, didn't really move. But people were protecting themselves into Friday, and then they smashed volatility
immediately
in 1 minute.
In 1 minute.
In 1 minute.
You're right. So the expected move has been around $25 on the E-mini S&Ps pre-market. It's $25 right now. It went to about $35, $38.
Oh yeah, exactly.
For that decision. Then when they came out and said we're going to kick it down
which was 30 minutes after the open.
It went down to 25 again.
9 Central was when we were supposed to.
Not only the premium was much higher, and also the break-even point is like 25 points much wider.
Yep. I said it on the show. I said, you Cowboys that...
I heard your comment then. I took off majority part of my 0DT. I just leave one contract.
Yep.
Because I didn't realize. I check all the news. Like I didn't see that one. So why the premium becomes so juicy compared to the first 4 days.
Yep.
Yeah.
And I held that.
Glad I can help you. Don't worry about it. You keep the money. It's fine. Don't worry about a thing.
So
Don't
the premium.
But I appreciate the shout out.
The premium dropped like from 540 to 350 like in 1 minute.
It was crazy.
Yep.
So I had to use that line with the kids on Friday.
Which one?
You don't take my losses. You can't spend my profits. Because I was sitting there and I was showing them how to like buy stock, and they were giving me like stock tips.
Yeah.
I wanted to buy like Palantir. So I bought 100 shares of Palantir, and they were like, you just put like 17,000. And I was like, it's not going to go to zero, blah, blah, blah. And then I closed it like 2 minutes later, and we made like $8 or $10 or something.
Yeah. They want you to split it around the room?
Yeah, they were like, oh, that was my idea. I was like, no, that's not how it works, gentlemen.
True.
So this upcoming week, next slide, we have some economic reports tomorrow and Wednesday. And also we said again, the expected court decision is going to be on Wednesday. And very importantly, the new earnings season start this week, starting with the banks.
Yes.
We have tons of banks and TSM.
TSM, a big one, too.
Yep. JP Morgan and Delta Airlines for tomorrow morning.
Oh, that's right, yeah.
Very good.
So from last week, very different from the week before. The week before, all the indices, can we go to the next slide? Down like a 1 to 1.5%. And the last week, we're up like from 2 to 4.5%. 4.6%.
There's that big move in the Russell that we were talking about. You would think that would be the last one to make all-time highs, but
it's been pretty good for Russell for 2 months or so, right? 2 3 months.
Yeah.
Yep.
Start to catch up eventually. And talking about the expected move was 1.1% from the week before, from last week, but we actually ended up with 1.6%. Definitely some move in between the Friday. And this week, we still have the exactly same VIX. I'm checking the yesterday, and also the same percentage of the expected move, 1.1%. 1.1% is nothing.
Yep.
You're right.
Very low relative to what we've seen over the last.
Yeah, so got to be careful.
Yep.
And the next one, the IVR. IVR is kind of mixed. The equities is kind of unched. I wouldn't count like 1 or 2% IVR as a big change. Bonds, euro down to 2%. This is actually pretty low right now, the lowest in the past year. And as we said, the commodities, precious metals, gold was didn't change that much. Natural gas 74%, which pops out, and also Bitcoin down a little bit. So it's kind of mixed.
Yeah, Bitcoin down a little bit, but it doesn't seem like it has its legs underneath it. But hopefully that'll change.
Not too much.
Yeah.
Bitcoin can change like 15%, which is nothing for
Yes,
IVR.
overnight. So can silver and gold. Those can move 15%.
Yep.
Right now, yes.
Yes.
And the next one, the top 5 and bottom 5 performers. Intel had a great run last week, up 16%.
You jumped on that one.
Yeah, we traded it on both sides.
Yeah.
I mean,
I think I heard you guys talking about it on Tuesday or Wednesday.
It's another one where you're like, 10% moves are the norm now. And Amazon's
it used to
another
move
one.
10 cents.
Yeah, it used to move 10 cents. Now it's moving 10% every day.
Intel has been dead like for years, right?
Yeah, not anymore.
Not anymore.
America.
It's in the America basket.
Yeah.
So
West.
LMT, Amazon, almost up 10%. Home Depot, Costco. Yeah, Costco and Home Depot had a good week last week.
Yeah, Costco's been on its butt too, though, so it rallied from
exactly.
lows.
On the downside, AMD suffers a lot. Nvidia too. AMD down like a 9%. Apple, Cisco, all these down like a 3-4%.
Yeah, we got some long delta in AMD, long delta in Apple. So we're
AMD down about $1.50. Apple was doing
Nvidia. We got some long delta too. So we're buying some dips. We caught Amazon. We caught Intel to the upside. So we're in these.
Just waiting to catch the others.
Yes.
That's good.
Nothing is safe from my trigger finger.
No.
Talking about some interesting movers last week. The first one I definitely want to mention is indices. The SPX was hovering right below 7,000. Not right now, like last Friday. ES already exceeds 7,000.
Shout out to Donna, our SPX winner for Q4
Contacted you
last year. Yeah.
at the end of the year. Yes, won herself $2,000.
Yes.
How close was his result?
Pennies.
Really?
She had 68.45.23, and we closed at 68.45.50. It was like 27 cents.
Yeah.
It was insanity.
Oh, that's good.
Incredible. All of our guesses have been like, what? I mean,
all the winners have
data,
been,
have been right there, which is
dimes of them. Yeah.
That was great.
Yeah, if you did that at the beginning of the year, you made some dollar.
Yeah.
Dollar.
And next one is the copper.
Yeah.
Copper actually climbs to $6.
Yeah.
Wow.
We got some long delta there, Mr. Vecchio.
In like an LCX kind of thing?
No, we did. I did the.
Oh, you did it in copper
I just sold a small put spread in copper.
Yeah, you could trade the options in a small way.
You can't do anything. The bid-ask spreads widen out.
Yeah.
It's not a great
is
trade.
A big contract.
Yes.
There's no micro future to it.
There is a micro, but it
doesn't trade.
It's big.
Yes, right. It's a big.
Is it bigger than a silver contract or natural gas?
I think it's more. Yeah, it's more
I never
like
traded copper.
So there's I don't think the copper contract is a mini. Is it a mini? Yeah, no, it's a full contract. So the smaller one is a mini, not a micro.
Mm-hmm.
I think it moves like $25 a tick or something like that.
Something large.
It's big.
Yeah.
With like QC, or is it QG, which is the natty gas one?
Natty gas.
QG, which is the E-mini natty gas. That one is $25 a tick, which is a big contract, even though it's smaller than the natty gas futures.
Right.
It's still big.
Too big in my opinion, for most retail.
Too big.
Yeah.
And the last one I want to mention is the natural gas. Natural gas has had huge swing in the past couple of months. It went up all the way to close to $6 and went down to $3, which I think is a reasonable price right now. $6.
You're right. In December, it was $5 and change, and now it's flirting with $3. Big moves.
Yeah.
Big move.
So commodity market, really volatile, unlike the...
but you don't usually say that, right? Like, maybe the NASDAQ stocks you could say is volatile. Usually don't get the commodity markets to be that volatile. They are.
Exactly. And the last slide, we were talking about the earnings. So the earnings season officially start this week. So definitely tons of banks, JP Morgan tomorrow morning. So if you want to put trades this afternoon, right? Delta this afternoon. The other banks, Wells Fargo, Citibank, Bank of America, Goldman Sachs, Morgan Stanley, BlackRock, Wednesday, Thursday. Oh, they actually are all before market. Before market opens.
Yeah, before the market opens on Wednesday. Yeah, nothing after the market closes.
Yeah, that's interesting. And definitely one of the biggest one is the TSM on Thursday morning too, right?
Yes. Yes.
Yeah, that's a big one.
TSM January 15th before the market opens. Good job out of you.
Very nice.
All right, my friend, E-mini S&Ps, you've had the most profound move on the E-mini S&Ps all day long. They are down about $2. They've only been moving about $1 since we've been.
Yeah, but he gave us a little bit of sell-off in the middle.
Yes,
they're down 39 right now.
Yeah.
Yeah, they were down 37, 38 all morning. So you did a good job. We're going to take a quick 90-second break and come back. We got the opening bell. It's imminent. We'll be back in 90 seconds. Tasty Live. Last time that happened, market really fell off. Imminent.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Taste Trade account today.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day one, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nikki, we are back, son. We've got about 30 seconds here before the market opens. E-mini S&Ps have been holding steady. They were just down 40. They're down 35 or 36 right now. They've been down 38 since we've been on the show for the last hour and a half. More movement last night, as you can see here, about a 60-handle move top to bottom. Traded over 7,000, down to 69.50. Volatility up 40 cents in the middle of its range, 16.55, maybe a skosh higher than where we were when we first started the show at 7 a.m. an hour and a half ago. Everything down around the same. I guess the Russell getting a little bit weaker, as has the rest of the market. Everything down around a half a percentage point. Gold and silver are the big movers. Silver up 6%, trading 84 and change after flirting with almost 86. And gold traded over 46.30 is now 4,600 on the number. Let's see what's moving around the globe here. JP Morgan, which has earnings.
I mean, they just rallied the NASDAQ like 70 handles.
They did just rally the NASDAQ about 70 handles, and it looks like you...
I got a little short.
Sold some NASDAQ.
Yeah. I think I'm going to take off some of this Russell that I have. So I'm short them all a little bit, but more so... I had 3 of the Russell, so
you just
took one off.
You just closed about a third of
my Russell
position, and you opened.
I added a NASDAQ.
Got it.
Yeah.
Got it. Rotating your shorts around. JP Morgan down 5.5 or so. It has earnings, as you can see here, on the 13th before the market opens. That's with that little bell with that before or less than sign. So it's the 13th. Carvana down 6, Tesla down around 6, UNH down around 5 or 6, Citigroup down around 4, Home Depot selling.
Put another NASDAQ in.
Selling more NASDAQ.
Yeah.
I mean, if you love it at 76, you're going to like it at 807.
Yeah.
Oops. Oh, oops, did you say?
I had an extra one.
Oops.
I did a replace instead of I had one working.
Sounds like a you problem.
It is a you problem, but it's okay.
Problem. Yes.
Fine. Perfect where it is.
When genius fails.
Yes.
Gold up $8.25. That's your leader in the clubhouse. Big 2% move.
Yep.
Baba up almost 8. Baidu up around 5 or 6. Interesting that China would be higher this morning. AVGO up 4.5. Silver, SLV, and gold products are also up. Lilly up around 2 and change. Costco up around $1 and change. FCX, your copper play, or the copper plays, up $1.27. Even the S&P is down 21. Did you have that on your bingo card?
No, I did not.
Volatility up 30 cents to 16.45. I can't believe this move is going to be an overnight move and no continuation as of yet. 2 minutes into the day.
I know.
A little bit surprising to me at least.
Going through some of my positions here.
Ethereum, I haven't mentioned, it actually turned green, up 15 cents here to 3,091. Bitcoin, 90,700, really hasn't moved.
God, this gold move is wild.
We
have those butterflies that look real nice. We would like it. We would like gold to be a little bit below 420. GLD, I should say.
GLD, yeah, you're looking at, right?
Because we bought in, if you remember, we did that call ratio and then I bought the wing, turn it into a butterfly. So we have 2 butterflies. We have the 405, 415, 425, and the 412, 420, 428. So we're right on the dance floor.
We're there. We just need an expiration to go on.
Yeah.
You need to make time go by.
Yeah.
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 Beautiful.
I could probably do the same thing in Google too. We have the butterfly there.
Google. Let's take a look at the IV rank of 33, up $1. Sorry, down $1.19. Even the S&Ps are up 25.
And the Netflix put sellers are making some money. They'll like that article that we had.
Yeah, Netflix just turned positive. Netflix opened at 89.60. It's 90 and change. So it's up about 60, 70 cents from the opening, up 67 cents on the day. What do you think here? A little bit surprised by the lack of volatility expansion so far.
Yeah, but Vol's staying here.
Oh,
I think you're going to have some two-sided action. The
lows are in on volatility until Wednesday, right? I mean, that's what I would think
so.
too.
I would think so.
Yeah,
I think you still get a little bit.
Expected move on the E-mini S&Ps pre-market was around $25. It's 22 and change, so that's staying steady. I'm moving a little bit lower as E-mini S&Ps catch themselves a little bit of a bid. If you remember, it was 34 or 35 on going into Friday with that decision on the tariffs, which they did not have any decision on the tariffs. Bonds are down 11.
It looks like a pack your bag kind of thing. if it had continued lower, there would be a lot more for us to do.
Yeah, yeah.
This move makes it like a nothing move. So you're not getting you got a couple stocks that are kind of moving, but nothing, Apple's down $1. It's nothing, no big deal. AMD up $1. It's kind of a inside nothing start here. I'd hoped we had a little bit more
down $2.57. It traded up to 260, if you can believe that, just a minute ago. Now it's back down to 258. Down $1 and change.
I got nothing.
So far, it seems like a nothing burger.
Yeah.
Volatility up 40 cents. Even the S&P's up 22. 0 day. Since you're trading everything from the short side, do you think about legging into a 0 day trade? No 0 day trade today?
Hard with E-minis up 20 points from here. Right. I mean, what are you thinking?
Oh no, I abstain. Especially since you sold futures. Right?
This dip's gonna be over. This dip's about to be over.
You sold it. You got hooked, line, and sinker. They got you again.
I'm gonna put another one on. Yeah, we're gonna put another one.
This is what happens when futures traders.
No.
This is what happens with futures traders. We're gonna get it. How does Daddy do it? Or are you gonna be crying on the sidelines?
That's probly true.
That's the problem with futures.
But that hasn't changed
since the dawn of time.
It's the dawn of time. That's the world we live in here.
Silver back to 85, up 7% on the day. Even the S&P's down 18.
Yeah.
Crazy. I did not think
I did not see that one.
We would have this kind of move. I did not think when even the S&Ps were down around 38 that we would have a 20 handle rally. I thought we'd have a 20 handle sell-off, that we might be able to have a little bit of expanding volatility and maybe put on some positions there. This move higher puts me with my hands tied behind my back. All right, are you ready to take a quick 90-second break?
I got nothing, unfortunately.
Well, you sold into it so far, and you're sucking a little bit of wind. We're going to take a quick 90-second break and come back. We got more Tasty Live with the skinny on options, abstract applications. Nothing says Monday like this, man. I'm talking about Dr. Jim, and I can't wait to see what his favorite football team did this weekend. We'll find out immediately following these messages. It's Tasty Live.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario, or something that would give us pot odds to stay in.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, son, and you know what that means. Nothing says Monday like this, man. Dr. Jim, the scan options, abstract applications. How are you, Dr. Jim?
Man, what's going on? We're back. You know, we're doing it. We're doing it, man. Guys, our Bears, dude. Did you guys see our Bears on Saturday night?
I was wondering where you were going. It was our Bears.
They did not look good. Look, they did not look good, right? I was nervous.
Yeah.
I was nervous. I haven't felt this excited since 1985, right? And so it's like, man, this is it, man. Like, could this be the year?
Oh, man. I don't know, Jim. I don't know if we can bring it back. We're a welcoming, it's a
We're forgiving. We're a forgiving crew.
Midwestern nice, we can, I don't know though. I'll take you back, Jim.
Look.
I'll take you back.
I appreciate you.
Look, he's taking you back.
I appreciate that. But you don't really need to, because the problem is that they're going to run into my 49ers this weekend.
Oh,
so that's a problem. Go. That's a big problem.
No, that's
right?
the Rams.
The Rams.
Yeah, the 49ers got to win.
Is it the Rams? Oh, no, yeah.
Bears,
No,
49ers.
it's my Rams. Sorry,
Your other team. Your other team. Your other bandwagon.
Yeah.
Well, Stafford again? Stafford in Soldier Field?
Mm-hmm.
Hasn't he, never lost in Soldier Field or something crazy like that?
I don't know about that, but I know that there is a stat of him this year outside the dome. His stats are very, very
mediocre.
Yeah. So that could be good, but
he likes the warm weather.
He likes the warm weather.
He doesn't like. Yeah.
Yeah. So where are you guys at? I haven't followed it too closely, but apparently the MVP race is a big deal between him and Drake May. Just looking at it as a very casual observer, I don't know how you don't give it to Drake May. I don't know how it's not Drake May. Where are you guys at on this?
Stafford in cold weather games is something like 1-9 or something like that. He doesn't play well. He hasn't played well at Soldier Field. I can't find a thing there, but it's.
Drake May has second year?
Yeah.
Team was crap last year. Brings them to number 2 seed, and they're in the playoffs. That's a tough one. But Stafford has broken a million records this year, and they look.
Oh, has he really? Because it hasn't been that good.
He's
not doing what Peyton Manning did in 2010 or whatever.
No, but from a longevity standpoint, he's been in the league 16 years, 15 years.
Okay. So that's what we're doing now. We're giving out lifetime achievement awards. Okay.
Wow.
Well, if they are, you guys are late with mine. All right.
I'm just trying to understand.
I'm looking for mine.
Yeah. Nice. Yeah. Okay. Very, very nice. Very, very nice. Oh, you guys want to hear a funny story? So this is funny.
I doubt this is going to be funny, but I'm ready to hear it. Go ahead.
Man, look at you. You haven't missed a beat. Beat.
Thank you.
So my daughter, Penelope, her birthday was Saturday. She turned 11. And so for her birthday,
happy belated.
And my youngest daughter, Amelia, who's 5, she'll be 6 in March. Well, they wanted to get their ears pierced. And so we took them to a tattoo shop, got their ears pierced. The guy was amazing. The guy was great, whatever. It was great.
Tattoo shop? What do you live in Florida or something like that? We just go to Claire's or something.
No. See, that's what the rookies do. That's what the Johnny Publics do.
Oh, you take them to where they're going to go get their tramp stamp in a year or two. I got it.
No,
they make
man,
a relationship. I got it.
This guy is the best piercer this side of the Mississippi. I'm taking my girls to the best of the best. Mm-hmm. So we went there. Guy was amazing, whatever. But anyway, leading up to it, they were very, very, they were nervous. They were anxious, whatever. Well, here's a funny story about little old Dr. Jim. So you
got your belly button pierced
freshman year of college. Freshman year of college, I got my ears pierced. I had gold hoops.
Both of them?
Of course. I had gold hoops in my ears. freshman year of college.
Oh, you shouldn't.
And so
you shouldn't say that on air, John.
If you have a picture of that, I would pay big money.
I gotta dig up a picture. I got one somewhere. I know that I do. I just would have to dig it up. And so, like my girls were they were very, very confused by that.
Did you give one each the gold hoop from yesterday?
I told them we got them around here somewhere.
I mean, come on. You got it.
Anyway,
you take one from your belly button and give it to her?
I was able to ease their concerns, and they did great. And so, they're following in Daddy's footsteps.
I love it.
And so all I know is that if I'm going to get my ears re-pierced, I'm going to see my man Billy at Monique's tattoo parlor. That's who I'm going to see.
Monique? What is it called? What is it?
Monique's.
Monique's.
If you're in the Florida area,
it's not
let me give a shout out to my boy.
It's Monique's.
Let me give a shout out to my boy Billy. My boy Billy at Monique's in Clearwater. He's the guy. He's the guy to go see. Tell him I sent you.
Awesome. Awesome. I don't know what to say
there you
about
go.
this.
Yeah.
I don't know what to say about it.
Yeah.
Never saw it
It's a
coming,
new year,
Dr.
man.
Jim.
We got to come with, we got to do what we can.
Yeah.
To kind of to push it out there.
I didn't see it coming.
Yeah, there you go. All
Good
right.
job out of you.
Well, speaking of not seeing it coming, you guys want to do something else? Finance related?
Sure. Let's do it.
All right, John, go ahead and get us going here on the slide. Super high probability trades. Gentlemen. We are high probability traders. But would you consider yourself a super high probability trader?
I don't even know what one is, so I'm going to have to. So are you saying that one that has like a 85% or more probability of success?
I'm saying, no, man. Let's go 90.
95.
Let's go 95.
Oh,
Why not sell those 5 Delta puts? Why not?
That kind of
Hey,
thing.
man, you've been looking at the slides this morning. Look at you.
No,
Okay.
no looks. No,
I am not.
All
I am
right.
not one of those. I am not one of those.
Okay. All right.
Definitely
okay.
not
Well,
one
let's
of
do
those.
it. I'm going to see if you guys are some super high probability traders. I've got a trade for you guys this morning.
Okay.
I'm going to see what you guys think about it.
All right.
So,
let's
John,
do
go
it.
ahead and kick us off here on the intro slide. Okay. Inside the Tasty World, short premium trades continue to build the foundation of our portfolios with both the positive theta and higher probability that accompany these trades, giving us multiple ways to win on these positions. But as we seek out high probability on our short premium trades, a natural question arises. Can you push your probability too high? So can you have too much of a good thing? Now, before I ask for your answer to that question, let me give you a specific example that I pulled off from last night. Now, this was last night when the markets were closed. This was also before, you got the DOJ, you got Powell coming online on a Sunday night. I mean, it was crazy stuff last night.
Mm-hmm.
And so obviously things have changed. Has the market recovered?
Pretty much. It's pretty much.
Did it go down? I mean,
It didn't really even go down.
Right.
No.
Right.
It's
Well, it was
back.
down. I mean, the NASDAQ was down a couple hundred last night.
Yeah, it's
but
down
a couple of hundred on a $25, almost $26,000 product is not even 1%.
Yeah. Yeah, it's
Understood, man. Understood. But in these days, Tony,
200
that's like
That is a dip.
getting
That
to
is
the,
a dip. That 0.75 percentage point is a dip.
Yes.
We've proved that so far this morning.
Yeah. According to the internet, that's more than a dip. That's like, man, we got to be shuttering
It's
the
a
windows.
crash, yeah.
And it's like it's over. And so, all right. So, John, get us to the next slide. So, what do you guys think about this trade from last night? So, as Nick kind of foreshadowed, it is a 5 Delta put. So here I'm looking at Tesla, 445. This was last night, of course. It may be different this morning. I'm looking at a 5 Delta put. I can sell that today for the one-time price of $1.65 credit. And with this being a 335 short put, it's going to have a probability of profit that is north of 95%. And so, in other words, almost every single time, this is going to be no problem. What do you guys think about this trade?
free money.
That's what I'm saying. My man. That's what I'm saying.
Yeah, that's the paycheck trade, as my peeps would email me.
Okay.
The income trade.
A lot of people.
Oh,
People do these
get me
longer.
going on some income.
Yeah, the income trade.
A lot
let's
of people.
go,
I shouldn't say
let's
a lot
go.
of people, but I get emails from people who do this longer term too, who really like, why not? You can go even further out of the money and collect, X amount of percent, 7, 8, 10% a month on your.
If you have capital, it's one thing.
Well, it's a tough trade, especially longer dated.
Yeah, but when things hit the fan, that's when everybody
You eat like a bird, you poop like an elephant.
Yeah, but it's when size shows its hand,
I like it better not most of the time. I get more about this on ETFs than I do on individual stocks.
Yeah.
But if I was looking at an individual stock, if you were asking me to do this, I would say I would do it on an individual stock more than I would do it on an ETF, even though an ETF would have a smaller relative percentage move to get to that, because you've got that IV rank that expands. So out of the money puts trade a lot more expensive. Here in a Tesla, you're going to have call skew, so those puts are going to trade a little bit cheaper. You just don't usually get those 2 standard deviation moves in some of these stocks, as you can get that 2 standard deviation move to the downside in an ETF. So I don't know.
E-minis down 5.
So hold on. That's really interesting because normally, I mean, I would view that the other way.
Yeah, I
would think, yeah. I mean, that's really interesting that you feel more comfortable in an individual name than an ETF with a strategy like this. Okay.
I do. Now, because here, let's think about what you're doing. It's an individual stock that, usually people that do this have knowledge of what the stock is going to do in the future, which I am going to fight with anyway. But I'm going to go with, okay, so you have the knowledge, you did the homework. Like, you did the homework. You got to put money where you listen. If you're going to take the time, the minutes, the hours to figure out what a stock is going to do in the future, knowing that it's a 50-50 shot, put some money where your mouth is and do a strategy like this. I have no problem with it.
Yeah.
It's not my preferred way of doing it. I'm not going to do it, but sure, go right ahead. I don't have a problem with it. And it's worked at all-time highs.
Yes.
Which makes it even better.
Okay. All right. So Tony gives it kind of like a greenish type of light.
Yeah.
Nick, what are you giving it? That surprises me a little bit. A lot has changed since I've been gone for 8 days. A lot has changed. Okay. All right.
I don't like
Nick?
this. I just don't.
Yeah, my man.
I think it's just too much risk, and it's just not an efficient use of capital. Like, I would rather
definitely not official use.
I would rather you, instead of selling this for $1, I would rather you sell a closer at the money short put spread
100%.
and use a ton less
put
capital.
spread, you said? I'd rather see you sell a $3 put and close it at $2.
Yeah, too. That's another way to do it.
Yeah.
I just don't. Trading on the tails it looks great on paper. High probability, you win a lot. Majority of the time it's no big deal, and then you hit the one occurrence where it erases everything and then some. And I think it's too much.
Yep.
Okay. All right. Very good. Trading on the tails. That's good stuff. I'm gonna steal that. That's a good line. That's gonna be the title of my memoirs.
There you go.
Whenever they come out one day. Well, I mean, I'm in agreement. I'm more in agreement here with Nick than Tony when it comes to, yes, I mean, eat like a bird, poop like an elephant. I mean, it's gonna, especially as the market just keeps grinding higher, it does feel like free money. Like, it 100% feels like free money. But there is a mathematical reason why this can be a very, very dangerous game to play. And it has more to do with just, being at 5 delta and more to do with just collecting only a little bit. There's a second level Greek that could potentially lead to very, very surprising results that I kind of want to get into here this morning. So, John, hit us on the next slide, though. So when we think about risk return, though, right, as premium sellers, like, let's be fair about this. We're always, aware that to get a higher probability, 60, 70, 80% pop, whatever, you have to be willing to risk more to make one. You have to be willing to risk, $2 to make $1, $1.50 to make $1, $2.50 to make $1, whatever. So we're okay doing that. Like, that's the baseline assumption that we have as a reference point as a premium seller. But at a certain point, I think you have to draw the line somewhere. You have to decide, all right, I'm not comfortable going to single digit deltas. I'm not comfortable going to 5 deltas. I'm not comfortable going to 2 deltas, whatever it might be. And this is where Vama enters the picture. Vama is a second level Greek, and Vama shows you how Vega changes as volatility changes. And we actually saw a real-time example. Do you guys remember? This was, I think it was last August. So this would be like 16 months ago, last August, that night when the NASDAQ dropped like 12 or 1,400 points and the following morning, volatility the VIX had spiked over 60. I think even volatility futures were like 45 or 47. And do you guys remember that
Sure.
night and that morning?
Sure. Yeah,
exactly. That was a great example of how dangerous this game is, because when that happened, not only did you have all the delta exposure, but now you have all this Vama exposure that's picking up on these low delta options because of the way that Vama is structured
Dr.
around.
Jim, if you're selling puts directional bias and you're selling a 30 delta-ish to 15 delta-ish like we would do, or a 5 delta-ish like you're mentioning here, Vama doesn't mean bull, because price is going to change on the example that you're giving there. Really what you're looking at, more towards what Nick said, is the amount of capital you're using. You're using basically the same amount of capital and getting a lot less premium for your risk when you're going so far out of the money. If things go wrong, both trades stink. One stinks a lot more than the other, but they both stink a lot.
Well, what Jim is getting at applies a lot more to like futures side of this, because in that situation, Jim, you had options that are still, even if you sold the 5 delta into that sort of move, they're still out of the money. But those options, especially in futures, explode in terms of like the capital that you have to hold to be in that position. And so your position from a size perspective doubles, triples, quadruples, even though it's still a free money trade because it's so far out of the money. And that's really the biggest part of this Vama discussion, is like, not only does the position get big and you have this marked loss, but the actual capital to hold the position gets a lot bigger. And that adds to kind of the fear and the same thing is happening like in the metals, like where these positions, even if you're long into the move, the positions get so much bigger because vol is expanding in here. And that's really your biggest risk here.
So everything you guys both just said is correct, but I disagree with the fact that Tony said Vama doesn't matter, Vama's bull. I totally disagree. Yeah. Because what happens is, you're right, the bull trades stink. You're going to be bleeding, capital, you're hemorrhaging cash, whatever. But because you got into a position on entry that had a super high Vama, that volatility expansion, that's going to cause, in addition to capital expansion, in addition to buying powers exploding, the extrinsic value is going to be spiraling upwards. And so it's going to turn, what's a really bad trade into something that could potentially be catastrophic. And so it's more than just the price impact. So John, go to the next slide, actually. Because Vama, if we look at Vama around the moneyness, John, get us on the graph there on the next slide. There we go. Okay, so if we look at a graph, right? So the blue curve, so right here, we've got a stock, let's say it's a $100 at the money strike. If I look at Vega, which is the blue curve, right, we know that Vega peaks around the at the money strike and then it drops off both in the money and out of the money. Vama, which is the second level Greek that's underneath Vega, it actually has a bit of a mirror image to what Vega does. Vama is lower at the money, but it peaks right around the 5 delta option on both sides of the market. If I'm talking about an out of the money put or an out of the money call, that's where your Vama is going to generally be the highest. Now, what does that mean? That means that if you sell that put and it does hit the fan like it did last summer or 16 months ago with that NASDAQ drop, that means that not only are you going to get hit on the price effect, and you're going to get, if your futures options, Nick, you're 100% right, the buying power is going to expand, but now you've got your volatility, it is expanding like exponentially. And so you're having to face this headwind, multiple headwinds, buying power expansion, price effect from Delta, and now an extreme volatility effect. These are the types of things that put you out of business. Like, these are the types of things that it's not just a catastrophic loss anymore. And so all of a sudden, you got the paycheck trade 99 times out of 99, but then that 100th time, it just gets really, really nasty really, really quickly.
I got
and
another
the reason
thing
why is because of the Vama.
I got another thing besides Vama that when you spiral out of control and your first scalp.
No. I sold them at 712 at 7,012 on Friday. I'm a genius.
You had 40, 50 handles in them.
Going to be a genius. Going to be the genius.
Did not take it.
Did not take it. Now we're back at 7,000, so we're adding.
Right, but you've previously sold NASDAQ futures too. You do look at that as a different bucket?
Yeah, I'm getting to like one of these.
Yeah. That's more importantly than Vama. I know you love your Vama. I know it's not even a Greek on the platform, but I know you love your Vama and everything else like that. I'm talking like Grandma Beanie now. I know you love your Vama.
We gotta get it on the platform, man. Like, why is Vama? Come on, man. Vama, Charm. Like, what are we doing? What are we doing, man?
Why don't we have a number? Why don't we have a number that you could lose if something were to go bad, and we can have a number how much you could make.
CVAR.
Well, CVAR, right, is basically your Vama number, but it's not really Vama number.
Yeah.
Or we could have a number that how much you could make if you do this. I mean, let's just keep this all in perspective here. Delta is king. Keep your delta in line. If a 5 delta is what you're comfortable with, that's your risk reward. It's okay. It's not my preferred way. And Vama delta price is going to hurt you just like Vama delta price is going to hurt you if you're selling at the money option. It's all going to hurt. One's going to hurt you a lot more earlier. One's going to hurt you a lot more later. You have to be directionally correct for all of these strategies to win. But I can't worry about the what ifs, Dr. Jim. I just can't.
This is not a what if. So I would like to be on record. I completely disagree with Tony. We're back. Like, we are back, midseason form. Like, here we go. I'm not talking about a what if. I'm not talking about some crazy esoteric. That's why I brought up the NASDAQ thing from last summer. Like, that was not a what if. That was a very real
summer
scenario.
From 18 months ago. You want me to worry about something from 18 months ago? You're bringing your kids
I don't know about you, Tony, but I'm hoping to trade longer than 18 months.
Tattoo parlors.
I'm hoping to do this for my career.
Yet. Huh?
I'm hoping to do this for a couple of years. Like, let's try to do this. I mean, I understand you. Like, you're thinking about, you're near the end. Like, you're picking out like funeral homes, like stuff like that. But me and Nick, we want to do this for a while. Like, we want to keep going.
Understood.
You know what I'm saying?
Understood.
I actually have ChatGPT. I have it scheduled to send me openings at retirement homes within a 25-mile radius of my.
You plan on visiting me? I like that.
Yeah, so I'm looking out for them.
Yeah, we'll set you up in that New York like assisted living fraudulent scandal going on. We'll get you all set up.
Yeah,
man.
it's perfect. Perfect.
Thank you, guys. I appreciate it. I feel the love.
Man, we got you covered,
I do feel
man.
the love. I appreciate this.
Like, we 100% got you covered. And so anyway, just be careful if you're doing this. I would discourage people from doing this. I understand that it's like, Jim, you're crazy. Like, it's, you keep doing it. If it's working for you, keep doing it. At the end of the day, everyone has to make their own decision, right? So as long as you understand what you're walking into, then do whatever you want to do. But I think this is something that a lot of traders don't quite know. And it's lurking underneath the surface. And when it gets you, just like my Rams. Like, they're coming to Chicago, and they're going to get you all.
So I got a question for you, Jim. I got a question for you.
Sure.
Would you like to buy 5 shares of ABC stock, or would you like to sell the 5 Delta put? In your example, I think you were using 45 days. What would you rather do? Because they're both 5 shares of stock equivalent on entry.
On Delta, but I think it depends.
Dr. Jim. Your name, Dr. Jim?
I mean, I would, if those are my only 2 choices, I would definitely prefer the 5 static shares. Definitely.
You definitely prefer the what?
Shares.
The shares.
Okay.
All right.
Yeah. I mean, there's so much more to that, though. It's like, what is my holding period? I mean, all those kinds of things.
Got it. Okay. All right.
I mean, I don't like either option. Just to be very frank.
Sure.
Just to be Frankie Walsh with you guys. Like, I don't like either option. You kind of pinned me into a corner. You kind of said, like, do I want Tua Tagliavola or do I want Jay Fiedler? It's like, well, I kind of don't want either.
Yeah.
Like, can I get option C?
That's fair.
I mean, you know what I'm saying?
Yeah, for your dog.
All right, I'll let you win the last argument. I agree with you there too.
All right, I appreciate you. All right, let me get him some takeaways. We're back, baby, man. We are back on the Monday Morning Skinny. This is some good stuff. I'm gonna go scalp some Vama. A foundation built on short premium positions is a sturdy foundation for any active portfolio where having high probability trades as your baseline truly cannot be overestimated. But once other factors come into the analysis, like Vama, it becomes clear that you certainly can have too high of a probability on your trades. And just be careful, man, because it all looks like strawberries and sunshine until they come and get you.
The silver 150 strike calls 43 days out. Silver trading at 84. What do you think the delta on those is?
100 calls?
150.
150 calls. Here we go. This is what I'm talking about. Let's go. What do you think, Tony? How much we getting for those?
What a delta in SI? Silver futures, delta.
What's the delta?
Yeah.
16.
What do you think?
I'm going to
Jim?
say 7. I'm going to say 7.
They're at about a 5 delta. It's right.
Because the way you were saying it, I was like, it was making it so much.
That's a double in 43 days.
It's
a 100% increase in 43 days.
It's
Nick,
crazy.
what's it selling for? What's it selling for? What's the premium on
It's like 40 cents, which is 400.
Hey, that's free money, man. Tony,
but that's what I'm
free
saying.
money. Let's go.
No, you don't want to go.
Dr. Jim, this is why you're a retired
That's exactly
gambler.
my point. You guys are making my
I'm
point.
with you,
guys
Jim.
fought my point.
I'm with you.
No,
I'm
Nick,
supporting you.
No, you're with me. You're with me.
I'm with
it's
you.
It's you, me, and Matthew Stafford, baby. Ride or die. Let's go.
How about this? Yeah, all right. Yeah. A 1-by-2 call ratio spread, as wide as you can get for a tiny little credit, is the optimal.
$20.
Love it. You're going to get taken out to the cleaners. I love it. Let's go. Let's go. He's getting ironed out, ladies and gentlemen.
I'm going to take a look at this. I'm going to let Dr. Jim go. I'm going to get taken out to the cleaners here as soon as I can. We got a quick 90-second break to come up. What comes up right after this?
We have a really great segment with Kai, 0 Day. We're looking at 2025. We got a nice recap. So if you're a 0 day trader, tune in for that because you don't want to miss this one.
/SI is trading at 85. What do you think the 100 calls delta is? It's 85.
30.
Yeah, you're right.
Exactly. I'm going to say 35.
Yeah, it's 30-31. You guys are both
okay.
there. Interesting.
There you go.
Interesting. $14 expected move. The calls are 30 delta. We'll take a quick 90-second break and come back. We got more Tasty Live after this with my man Kai, the market measure. Good job, Dr. Jim. Way to mix it up.
Yep. Thanks, guys.
Yep.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man, Kai in the house, and a market measure on 0 days. The moment we've been waiting for. Nick has been talking about this study that you've done all morning long and how much he liked it.
Oh, great.
So I would love to get into that if we could. Before we do, though, even the S&Ps with their first downtick of the morning, I didn't think I was going to be saying that at 8:30. They're down 10.
Yeah.
They were just down 5.
That's huge.
Crazy.
It is crazy.
Volatility's staying bid, though, which...
Up 20 cents to 16.35.
Yeah, but you expect on though every other time we've had a 30-point, like a basically back to flat.
Mm-hmm.
You usually see volatility unched, if not lower, and we continue higher. We haven't seen that yet.
We have not. You are correct there.
So if volatility gets unchanged...
But I think you've seen the low in volatility all week.
Yes.
Going into any of these numbers and the tariff decision too. So I don't know. Mr. Kai?
What's up?
How are you, sir?
I'm doing great.
Good. Good to see you. This is a market measure sponsored by the SIBO, by the way.
Yes.
And they're going to like this. They should keep this on their website.
Yes.
Oh,
for sure.
That's right. Yeah.
Let's see.
And this piece is slightly different from a couple of pieces before. This is not about weekly. This is actually a grand summary for 2025, focusing on the Iron Condor, because there's so many strategies. We can only focus
of 0 day options.
Of the 0 DTs,
yes.
And also I chose one of the strategy that you guys use the most often, which is 20 delta, $20 Y, manage a 25% profit target with no stop loss.
Yeah, that's not in a box, but that's in our broad base. That's how we do it. Yes,
right.
Yes. From our research, it shows to be the optimal use of capital, the optimal trade to make on the 0 days, at least since we've been looking at this across time. But now you're going to go in depth in it and see if that statement's actually right.
Yeah, we can expand the study into different management style of delta, but for 20 delta, $20 wide, it's actually pretty decent.
Okay.
And also they're among 20 different combinations, different levels of management, different levels of stop losses. 25% and no stop loss is actually one of the best scenarios. It's a very balanced strategy overall for the last year and for all the data available.
Okay.
Yeah.
All right, let's do it.
Cool.
So what's going on in 2025? Definitely, we need to review the market performance first, right? How the underlying perform and how the VIX and the VIX 1D change over time. This is pretty much what happened from January 1st to all the way to the end of the year. We had a huge swing in between in April, but actually the volatility start to climbing at the beginning of February. So we actually have more than 2.5 months volatility rising from the low point the year before and all the way up to 60 whatever plus in the April. So it's pretty volatile, especially in the first and second quarter. But after that, we didn't expect that. Market's smooth, grinding higher, like gradually over the rest of the year.
Yeah.
Okay.
Which was crazy.
Has been crazy.
Yeah.
V bottom.
Yes.
That's the typical the V bottom.
Yes.
So next slide. Now we want to, more importantly, rather than look at the broad market, we want to take a look at the intraday change, the range, the percentage. That matters most to 0 DT traders, because overnight moves doesn't matter to the 0 DTs, right? If the SPX open 1% higher, we don't care.
Yeah.
But for the future traders or the equity traders, that probably going to impact your P&L, but not 0 DTs.
Yeah, and I think that's a huge draw to 0 DT trading too, because everything settles in that day. There's no overnight risk. There's no binary risk. There's no Venezuela. There's no tweets. Like it's over at the end of the day. And so, having it be cash settled as well as kind of done with at the end of the day is a added benefit to this trade. I think is like a positive thing to this trade.
Yeah, there's only a 6.5 hour trading period for 0 DT, and most of the trades you're probably going to exit before 3 hours.
Yeah.
So the real trading range is probably 2.5 to 3 hours.
Yeah.
Most. So this is the intraday trading range, and also put the VIX level on the next to it. This is the comparison of 2025. 10 years average and also 5 years average. Why I want to separate 5 and 10 years? Because 10 years long term, everything's slightly lower. Volatility, implied volatility, trading range is slightly lower. But in the past 5 years, since the beginning of the COVID, everything started to elevate. Trading range, VIX, it actually increased the everything from the long-term average. Remember between 2012 and 2019,
nothing.
The market was pretty dead.
Yeah.
Right, for premium sellers.
Yeah.
So now we can see the 5-year average is pretty much higher in all category, including the VIX and the realized volatility. 10 years average is the lowest. So last year is kind of consistent with the long term, like a 10 years average, but definitely lower than 5-year average. So one thing we want to point out that's pretty important for zero DT trades from last year is look at the arrow. So the upside, we have more number of currencies touching the upside, and the range is slightly wider to the upside from last year. So you can see the 0.43% to the upside and only 0.38% to the downside. That's a little bit tilted to the upside compared to the other years.
Yeah.
So this leads to the question, does that actually impact the neutral or bullish strategy?
Okay. I mean, I would think it does, but it's a reflection of the market. After April, it was pretty much
Oh, that's right. Yeah.
all up. So you had, like when you look at this stat, it you have to take the context of the market. 80% of the year was generally up, besides the first, maybe
2 months, like from February to April.
Yeah, February to April-ish, so 75%, something like that.
Yeah, so let's take a look at the real performance. So next slides, we show the 2025 and all the data available for zero DT performance only. On the left side, we have the 2020 Iron Condor, manage a 25% profit target without stop loss. On the right side, we want to compare, this is the only place we compare the Iron Condor versus a bullish strategy. 30 delta, because we need to push up the delta a little bit closer to the strikes for put spread. And we make the wings a little bit wider so we can get a little bit richer premium close to the Iron Condor. So in this case, last year, the average premium we collect for this Iron Condor is $5.13, and the put spread is very close, $5.05 or so. So these two strategies can collect same premium almost on average, and the performance is very different. So long term, the Iron Condor is 4.8, and the long term put spread is 4.8. It's almost identical for historical long term, but the performance is much better on the Iron Condor size in 2025. It's way better. So it outperformed long term in every category that you can imagine. Average P&L, wing rate. Well, wing rate is kind of similar. CVAR is one of the best. Last year, for some reason, even including those huge swings, the largest downside loss is actually way lower than the long-term average. Not way lower, but it's decent lower.
Yeah.
And the average return on capital is much higher. Volatility is decent controlled.
So when you look at these, what's your takeaway from this? I mean, other than
I think from the most important part is your CVAR and just the width of your return volatility. So like having wider, bigger losses and wider ranges of P&L it is generally a harder thing to do over and over again. So just doing the put side is a little bit more, you got to have a bigger account size to do that, because you're going to have, everything's going to be wider. Your losses are going to be bigger. Your P&L volatility to the up and downside is going to be wider. So if you're in a small to medium sized account, you've got to kind of do the Iron Condor is really what this tells me. It's like or if you're more conservative with this trade, like this is kind of a piece of your portfolio, not like your main thing. I think you go towards the Iron Condor versus the put side. I think you got to have a larger size account. You got to be kind of in this for the long term to withstand the variance there.
Exactly. So we definitely can use $20 wide put spread, but you're probably not going to get enough premium So that's one of the reasons, and you still risk the same for the same width of.
But it's closer it's closer at the money though. The risk, the math.
You have to, or you don't get anything. The risk reward ratio probably not going to be that good if you getting too close, right? The premium's too cheap. But overall, it's still profitable for put spread, but the performance is kind of in line with the long-term average, or slightly worse than the long-term average. Pretty much, we can say the same. The Iron Condor, for some reason, perform extremely well. Look at the average PNM is more than double the long-term average. I didn't expect that. I thought it's going to be more swing to the upside, and also downside have some huge hits, right? For the Iron Condor,
you're probably getting because of where the put spread is relative to the Iron Condor. It's a 10 delta difference. You're probably getting a lot of small wins, small losses in the put spread, where the market kind of goes down a little bit and tests the put spread, where the put spread you might be losing 50 cents on or whatever. And the Iron Condor is expiring worthless because it's a $20. Right. You have less scratches with the Iron Condor. The Iron Condor probably wins or does win a lot of the trades, where the put spread is a scratch or a small loser or a small winner. It's just not as big of a win.
Yeah, so the key point of this slide is not to tell you to choose put spreads or Iron Condor. You can definitely trade based on what kind of account type and assets you have. But what I try to point out here is what you have, the results from 0DT probably is going to be very different from what you experience from the market in general. Right? We feel like Iron Condor is probably testing upside a lot more, so you will lose more money, but actually probably not happen for that 6.5 hours. It's probably different.
Yeah.
The correlation, interestingly, I can show you in the future, SPY price versus 0DT is very close to zero. Almost non-correlated. Very, very weak correlated.
Wow.
P&L wise, yeah. So that means you don't need to care about the market for trading 0DT.
You're right. You're betting on the math model.
Right.
Yeah.
That's really what you're betting on.
Yeah.
And if you're not betting on
trading vol, you're not trading.
Correct.
Right.
That's correct.
You're trading.
Well, you're trading vol, which is how the options are priced, but you're saying that those prices are fair and accurate, and that's the range that we're going to be in.
Well, you're saying it's overstated.
Well, you're saying it's overstated, right? Because you're going to just outside the expected move. Yes.
Yeah. Okay. So next one. This is some of the reasons why the Iron Condors did better than put spread last year. Although this is probably not going to be true for every year, but it can help us understand what happened if you're 0DT traders last year. So one reason is, even though we have more upside moves, and we have definitely touching the call side more often than the put side, but most positions is the markets actually swing back and forth. You definitely have enough time to manage 25% of winners if the markets start to pull back a little bit, like later in the day, and the premium, you can definitely get that premium. And also the Iron Condor last year hits the profit target slightly faster than average. It's small, like 7 minutes sooner than average, hitting that 25%. But the put spread actually took 11 or whatever minutes longer. So you look at it both sides, Iron Condor probably perform better. You can have higher premium P&L, and you can close that position faster. So your efficiency is much higher.
Yeah.
And
kind of put into bed a little bit again how you have to do both sides as opposed to one side being directional. You kind of cherry picked here by just saying the put spread didn't. And we went higher, and if you just did a put spread, is that what you're saying?
It's probably different from like a selling 45-day DT if you're bullish in the market over the long term.
Sure.
0DT can perform slightly different.
Sure, because it's a binary event.
Yeah.
It's that day event.
And the losses are a lot bigger.
A lot bigger, right?
And they're instant. Yep. Like you sell puts and the market goes down, and you roll those puts and the market goes back up. You make that money back. Whereas these, it's settled. So it's like that you're realizing that loss, and now you got to make that up with consecutive trades, as opposed to one trade where you can roll that and continue with it, and you roll that loss forward. And if the market does rebound, you get that loss back via that same size position. You're adding every single trade here.
Exactly. So you probably need to adjust your assumption duration to the 0 DT. If you're bullish in the market for the next month or next 3 months, that doesn't apply to 0 DT. It keeps going down for 3 days.
Yeah.
You probably have to roll again.
Yeah.
So some interesting stats to attribute to these results. That iron condor losses in 2025 is 11% smaller, and the put spread is 8% larger. And why the put spread loss is larger is last year we have some large downside move that never even came back up. So actually touching your bottom hurt the put much more than the iron condors. So from February to March, we have 15 consecutive trading days that cost you 58% of the losses for the put spread. So that 15 days, so if we lose 10...
So how do we avoid those days?
You got to have,
As long as
That's
you're
where the crystal ball comes
keep
in.
trading.
Yeah.
Keep trading. Yeah, so which means if you lost 10 grand for the downside, for the put spread in the last year, $5,800 from that 15 days, which is huge.
It is huge.
Yeah.
Yep.
All right, looking at the other charts, the first one's average P&L. Now we break down into months, so you can have a better understand how the P&L changes over the year, over the past 12 months. Interestingly, last year still outperformed long-term average. Over the long term, we have 5 months that actually below zero for average P&L. But last year we only have 1 month, which is not March, which is not April, and May is actually February. Why is February is when the volatility start rising from the low to like a medium level.
Right. So what you
hits you with the surprise.
What you pointed out right there was the market kind of bailed you out on those big down moves in March and April, right? Or the 0 days, the volatility was so high that the moves that we were getting were still outside,
even though they
the
were
expected
big
moves.
moves.
Remember, we're talking about 0 days now. We're not talking about longer term. So in February, January into February, as volatility was contracting and then started to expand off its lows, similar to what we have right now, right? So like you got to kind of
we jumped from 13 right before Christmas all the way to 16.5 in these days. So you got to be careful. Right?
Perfect. That's what I wanted to point out. Good job.
So April, you did lose on those big swing days, but on average, you still make money. That's pretty surprising.
You probably had more losers in March and April.
In February and March than
February and
April,
March.
actually.
Yeah.
That's interesting. Then we look at the success rate, win rate for each month. Next slide. This result for the success rate is actually pretty consistent. This is very interesting. So the range is somewhere between 82 to 90%, 91% is pretty tight. One of the reasons is that we manage a 25% profit. If we change that profit or we don't manage that, this swing is actually much wider.
Yeah, you're probably more towards 75.
75 to 95. It really depends on whatever the market does.
Yeah.
So if you want to reduce the market swing impact on your P&L, you want to manage your position. 25 is actually is a good entry point.
Makes total sense.
Yeah.
Yep.
So next one is now we're going to talk about volatility. A lot of people want to know where the risks are. So this is the CVAR. CVAR 2025 had really good large downside management. So it actually beats long-term average in every single month. So that's one of the reasons why most of the strategies can perform pretty well last year. You didn't expect that from
You didn't expect that, and it's not going to always be like that.
That's right. That's right.
You got to have that. You got to.
We had kind of the perfect storm going into all of 2025, really, for this type of strategy.
Yeah. See, this chart is very different from the underlying or VIX chart, right? When the peaks happen in the April. This one, look at the December. December actually has, for 0 DT positions, it actually has much larger drawdowns because the average volatility was lower. One day increasing volatility can destroy your P&L. April is almost the same as December.
Yeah, you're right. And December, you would say, was pretty tame in comparison.
Pretty mild, right?
Yeah.
So the last bar charts, we want to look at the average volatility. So average volatility is kind of mixed. So this is very close to average. Sometimes we're higher than the average, sometimes we're lower. So nothing special. And we see some months we see the large swing, including March and April, especially April. That's actually not a negative thing for zero DT traders because we need intraday swing for after 1 hour or 2.5 hours. As long as the underlying came into the range, you can take the profit off.
And it probably helped because it kept vol relatively high the rest of the year.
Right.
I mean, like we don't have a data set yet for 0-day trading where the VIX is at 16 the entire year. Right? I mean, like all the data sets have, a VIX range of 16 to 30. Right. In the last 4 or 5 years, we've had a 25 VIX at some point.
Exactly.
We never
rarely exceeds 30. Rarely.
Yeah, but we haven't had that persistent low vol VIX. So that'll be the interesting one if we get that this year.
And just some side effects. Last year, June was the best month from every category. May was great too. So that actually points out if you lose a lot of money in April or you have bad experience, trust numbers, keep trading. That probably
one of the harder things to do. Yeah. Because
so you don't want to sell in May and go away. You want to keep going.
Right.
Keep going in May.
That's right.
If you're 0-day, the sell in May and go away doesn't apply to you.
It's easy to make money for 2-3 months. Yeah. Have a drawer down of some number.
I give up.
And give up.
I cannot test this anymore.
But if you lose money out of the chute and then you say, don't worry about it, this is the best time to continue going on, hardest thing in the world to do. You usually lose.
May and June, best time because the volatility was so high, but trading range is just back to normal.
Yeah.
You made tons of money in the first hour or two. Yeah. So summary, last slide. Definitely a lot of things happened last year. It elevated market volatility, but overall it was a great year for zero DT tradings because the credit is higher, return is strong, large losses is well controlled. Put spread was profitable last year, but was not as great as the neutral strategy iron condor. So if you don't have a strong market opinion, keep trading iron condors. I don't see any potential problem in there. Intraday movement was larger. Tail risk is meaningful, especially for late day moves that contributes to a lot of success for our strategies. Definitely, a small profit taking is very important. We compare so many times between 25 and 50% winners for iron condors. 25% beats 50% all the time.
Yeah.
And the last one is contrary to what we experience in the market. Zero DTE performance can be very different. If you experience large swings, in crazy volatilities, it's probably not going to be 100% correlated with your zero DT performance. It can be profitable or whatever.
Good job, man. A lot of work put into that.
Yeah.
Very nicely, nicely done. Real nicely done. We're going to take a quick 90-second break. Even the S&P is down 10, NASDAQ down 50, Russell down 8. Russell was the strongest of the group. It's down one of the weakest of the group, but the Dow down 200.
I saw another silver here.
Say again?
Do I try and do another silver here?
Silver back near its highs, 85.69. This is the third time it's gotten up here
in 2 weeks.
Do we do it? I think we do it.
You've been fighting. You've been digging your own.
We'll fight it.
Too late.
You've been digging your own your own grave over there. So I'll let you.
Well, I got a point buffer to where you're junky entry
gold silver ratio spread. You're 100% correct. Yeah, I've been crying about it all morning.
Okay.
Gold is up around 3% near its highs. Bitcoin up 1,100. Bitcoin quote a bid 91.5, up around $1,000.
This is a funky one. Today's a funky one.
Today's a funky day. Everything is not like the market has been following gold and silver, or the gold and silver has been following the market. However you want to look at it, they've a little decoupling today. Market's a little bit weaker, slightly.
Yeah.
Volatility, 1630, only up 17 cents. We'll be back in 90 seconds. Listen to Tasty Live. We've got Q and Ryan coming in. We'll be back in 90 seconds with Tasty Live. Good job, man.
When the market moves, traders need to move faster. tastytrade Active Trader tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using Active Trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. Time for a little more Tasty Live with this man. My man Q, what's up?
Fellas, how's it going?
Doing well. Did you have a nice weekend?
Yeah, I had a good weekend. Yeah, pretty chill. The Bears. Look at
Were you out for it? Where were you?
No, I was at home, but I am a newfound Bears fan. Actually, after the first Packers win this season, I'm a new Bears fan because New York, we don't have much going on there.
Were you Giants or Jets?
I was more Jets, but I was actually more Bills than
Not that either is like
because I thought it was like for the Bills, I thought it was cool because they're actually the only team that plays in New York, whereas the Jets and Giants play in New Jersey. Yeah. But I wasn't like too into the NFL like growing up. It was mainly the NBA. The Knicks are my team for sure.
Okay.
So Buffalo's still in it.
Yeah, they're still in it, but
so if there was a Buffalo Bear Super Bowl, which could happen, long shot, but it could happen. Let's just fast forward.
We're praying for it.
Cats are playing with dogs. Everybody's happy. You got the Bulls and the Bears. The Buffalo and the Bears. What do you do? Bills.
No, we're Bears all the way. Good, better, best. Never let it rest.
All right. You get to stay in the office. You get to stay.
Yeah. Well, so I thought it was like cool to be a Bills fan, but then after they got good, I really like being a fan of bad teams.
You're the true contrarian.
Yeah. I was like, once the Bills got good, I was like, I don't really care anymore. But now I'm a big Bears fan, and they're good. So it's cool, though. Love the Bears. They're great.
I like it.
Yeah.
Good job out of you.
Yeah, I got some actual business stuff to go over today.
Sure.
Because I got a question on the trade desk on Friday, and I thought it would be very applicable to bring to the show. So futures options do not all expire at the same time at 0 DTE. So, for example, the CL options, MCL, and also natural gas, those expire 0 DTE at 1:30 p.m. Central.
Right.
So that's
and they also don't expire to cash.
So some of them do, some of them don't.
Yeah.
Right. It depends on the monthly expiration.
So CL, monthly and weekly expirations, both go to the future. So I'm looking at the Help Center article right now. This is support.tastytrade.com. Just search CME if you want to pull this up as well. But so CL goes to the future. It expires to the future. MCL and natural gas, they go to cash at 1:30 p.m. Central.
Right.
Yeah, and then also like another popular one, we see people trade a lot, /GC, the gold futures. Those expire at 12:30 and those settle to the future. So you'll want to make sure to close those out before expiration, just in case there's like any, assignment exercise you're not expecting.
Right. And I have no problem trading those as long as you know those closes as you just pointed out and the way that they expire, which is another thing that you pointed out. But we try to keep it easy and just go into SPX, which is cash settled, 0 days, all the time.
If you're trading those 0 days.
Yes.
I think this is a good point too with some of the ags. We get a lot of question on like like if you're trading corn or soybean or wheat, there's in the middle of the day, they have a closing period.
Yeah, those stop at 120.
They stop at 120 and the bid-ask spreads get funky and things get, you can't route orders because it's closed.
Yes.
So there's when you're trading futures, there are some nuances there that you are all outlined on that help article.
Yep.
It's a good
So I would just keep that in mind when you're trading the futures, because I had a customer asking why they couldn't close out their position. I was like, oh, it's already expired.
Yeah.
That's why. So just figured I thought I'd bring that up, add that.
Beautiful. No, it was a great, public service announcement. A lot of people don't probably realize that.
Yeah, for sure.
Great.
Yeah.
Great.
Yeah, especially like some of the more, traded products like CL and GC are the ones we see most people trade, like 0 DTE.
Yeah.
Not just like, like 45, like 30, 60, whatever. That's what we'll see, like people trade 0 DTE. And so just keep that in mind if you're trading those products.
It's a good one, man.
Very nice.
Good one. Good job out of you.
All right. Let's get to my list here. We've got top 20 symbols going through the system and their IVR.
Beautiful. This should be an interesting list.
Let's see what's pulling up here.
Gonna have like Visa and MasterCard on there.
One minute.
Walmart, maybe
Walmart.
Even. Right.
Well, then silver still hitting new all-time highs. I for sure thought we saw the highest of the highs in silver.
I did too.
Never, ceases to amaze me.
Yeah.
Never in all my life. I sound like my grandfather right now. I think I was gonna see this.
Yeah. I was like, wow, because we keep track of it, of course. Mainly I just keep track of like the overall market, like the S&P 500 and volatility. But I've recently been keeping track of silver as well.
Silver, platinum.
It becomes in play.
Yeah.
Same thing. I have more of an eye on it. Gold too. I have more of an eye on it.
Yeah. Well, gold even like all year last year too has just been doing nothing but this pretty much.
It happens all at once.
Yeah.
It happens all at once.
John, we have the list. We're gonna have a problem.
We're working on it.
Oh, God.
First day with his new hands.
Come on, John.
Losing viewers, John.
Seriously.
That's all right. How was your weekend, Tony?
my weekend was great. Thanks.
All right, enough out of you.
Oh, there we go.
There you go.
Oh, enough about me.
Top 20 symbols going through the system and their IVR. At number 1, no surprise, SLV 101, and that's over 100 because that means volatility is expanding intraday. That's what you're seeing there when it's over 100. At number 2, GLD 62, Tesla 9, Nvidia 6, Amazon 34, SoFi 19, Apple 19, Palantir 27, Baba 24, AMD 32, Micron 46, GDX 81, CoreWeave 26, Netflix 45, Broadcom 15, iBit 29, IREN 55, Intel 51, Meta 34, TQQQ 19. You know what I'm always surprised is on this list is Micron. I'm actually really surprised how that's like on the top 20 symbols just about pretty much every day.
It's moving $15 to $30 a day for the last month. So it's traders look for stuff that's moving.
Yeah, that's where opportunity is.
Yeah, that's where the opportunity is. So, I think that's what this list is all about, is kind of giving you an idea of like the stuff that has some volatility, that's moving. It's interest. It's always interesting. I mean, you got Bob on here. That's not a normal one. IREN is on there. That's not really a normal one. I mean, GDX is there. Like these are every day we get a couple names in there that are that
don't usually make the list.
Get your eyeballs on.
Right.
Yeah.
Right.
Cool.
Good job. Good job out of you, my friend.
Thank you very
Have
much.
a good rest of the week. I know we'll see you in the rest of the week coming, but
Yes,
I want
sir,
your week
you
to start
too.
good. It's not how you start off the week, it's how you finish it. So finish strong.
Yes.
I like that. All right.
Who's our next person to come in?
Oh, they give you the Johnny trades. I like that. That's not. Ryan's no Johnny. Ryan's a big dog.
John's
He's a
sabotaging
crypto boy.
everything. He's just sabotaging everything. How are you, my friend?
I'm doing well. How you guys doing?
Doing good.
You know what I put him in?
What's
I've been
that?
telling him for the last week. I'm like, there's a mispricing in the markets, okay? There's an arb in the markets. And it's not these financial markets. It's the Bills odds for the Super Bowl at plus 1,000. That is a mispricing. The AFC, bunch of frauds. It's wide open. You take the Bills plus 1,000. They're at 550 right now. I've already got you a 50% profit over.
Can you
them.
cash it for me?
You can do some engineering of sorts, but
management.
He did.
Yeah, you
he
can
did.
manage
He did point that out. I was gonna try to pawn it off on one of you Buffalo Bills fans. You know, like
you could try and sell that ticket in the office.
Yeah.
You could probably get plus 750 in the office if you wanted to sell that.
You could find a buy.
lock in 250 if they end up winning.
Yeah.
That's stupid. I'm
Yeah,
in for the long haul. You kidding me?
Because if they win this game, then you can start to hedge. Or you could sell it. It'd probably be like plus 250. You probably
Reverse and go all the way the other way.
Yeah.
Actually, during the Bears game, it was a 5% chance of the Bears winning, and I looked at it. You only getting 800 to 1, which what I didn't think was it's just showing you how bad the pricing is on.
Oh yeah, I mean it's all volume based,
Right.
Like all that stuff. The spreads are, because it's all
Should have been significantly higher, 3 times that amount. But anyway, what's up, my man? What do you got for us today? I know you got a bunch of slides. I haven't seen you in a little while.
Yeah.
Bitcoin's trading up to 91.7. It's caught a little bit of
did you
a
miss
lot
us?
of the news. Talk to me.
Miss you guys. Yeah.
We missed you.
But we're here now.
Yeah.
Yeah, let's talk what's going on in the crypto market, talk markets largely, and I've got a trade idea for you guys to walk you through here. But yeah, crypto, I mean, the theme of the show from earlier as I was listening in has been kind of going where volatility is and what's in play. Crypto just hasn't really been in play versus other areas of the market that you could be in, right? You talked about metals. We've seen defense tech, new names that are popping up here on the top 20 symbols. So there's been a lot of opportunity in this market right now. And at the same time, Bitcoin's just been in the chop zone.
Yeah.
Until that changes, I'm again not all that interested. You got very low volatility, which probably expands at some point. Maybe that is to the downside. But your range in Bitcoin has been roughly 80, 95. And until we break above 95 and start to trade a little bit better, and outside of this just choppy sideways move, maybe it's consolidating, maybe it isn't. But until that happens, I'm not all that active.
I will say it has been a good trade because I am long at higher prices than IBIT, but I've been scalping calls around my position into the up moves when we get into like the 93, 94, 95 range. I've been selling IBIT calls around 58, 60-ish and kind of scalping a couple bucks out of them. And it's been pretty quick because you've had kind of this pop to 95 and then within like 48 hours, we're back at 90, 88, 87-ish range. So it's certainly been a trade, to your point, the upside volatility, it comes real quick on those moves higher.
Yeah, you've had a nice premium that's opened up in terms of implied versus realized volatility really since mid-December as we headed into the end of the year, and you haven't seen a lot of vol right now. So that trade has been working. If we throw up the expected moves, I'll show you for both of the underlying tokens that have an ETF where there's very liquid options. Those are going to be things like IBIT, as you mentioned, ETH, if you're looking for it from the Ethereum side.
And we have them up on the show. They're not on here for you, but they are. Yeah, they are up for everybody else.
Yeah, so you've got right
the world
now,
can see it.
The world.
At least when you look at the prior 30 days in terms of realized volatility for Bitcoin, and as I mentioned, I think that changes.
Yeah.
It does become more volatile. But you have a 64% premium that's opened up in there, 50% for ETH. So to your point, if you're long a position, you've had an opportunity here to really sell some premium, at least versus realized, and bring in some credits against anything that you might be into at a higher price. So we'll see. I think, again, you get a vol expansion at some point. But for now, pretty low volatility when we rank this on a 3, 6 month, and 1 year basis. And then for your expected moves, looking for about a $5,000 move in Bitcoin over the next week, given these low levels of vol, 250 for ETH, Solana, SUI, and XRP are up there, all seeing the same thing in the market, lower levels of volatility. But I'm interested in XRP, guys. Like, I think there's maybe, at least from a trade perspective here, short term.
Okay.
XRP is interesting to me. You could do that through spot, or the way that I've put it on is through the futures. There's a micro XRP.
Really?
Yeah. And
What's the ticker on that?
MXP, I believe. Let me just double check for it. Yeah, MXP. So /MXP, of course.
Okay.
And that's going to be the micro XRP. Becoming more liquid. You're definitely seeing more attention. You're seeing, even when you look at volumes in the ETFs, there's XRP ETFs now. Inflows have been largely positive since launch, really one week of outflows. And so it's becoming something that is just gaining a lot more liquidity, is the point. So when I look at this, I think, again, you look at the correlations across the market, it all trades the same way. This is going to give you higher vol. Realized vol in XRP right now is about 60% versus Bitcoin at 25 and ETH in the 30s. And if it all trades the same way, you're at a level that you went from 181 to about 240 in XRP, you pulled back to like 205, 208, wherever it is right now. I kind of look at $2 as your downside. If we break there, then I'm not interested in this trade.
Yeah.
But, let's see if, this is a bottom for now. And you might have a trade all the way back up to kind of those recent highs is the way that I'd look at it. I want to use a little bit of leverage. So personally, I'm going to go into the micro future.
Do we know what the, size is on these, on the micros?
You talking about MXP right now?
Yeah. MXP.
Yeah, I'm looking at it myself. That was what I was doing while you guys were sitting here talking. And it looks like, if I look at it,
the futures only use about $500-600.
Yeah, $630 or something like that. Yeah.
Yeah.
Not that much. And it trades in half ticks, it looks like.
Yeah, but is it like 100?
I'm trying
multipliers, 100,000. We'll figure it out.
Yeah.
I'm trying to figure that out right now. Let's see. 3.
Well, what's also interesting, to me, is you look at recent outperformance of Solana versus Bitcoin and ETH. XRP hasn't outperformed Solana, but on a 1 month basis, it's up about 2.5% versus ETH, about the same versus Bitcoin. So it is outperforming. See if you get a little bit of a vol kicker given what XRP is.
Yeah.
It has a notional value of almost $100,000. Could that be for MX?
Yeah, these are still sizable to give you some leverage there.
Yeah. Okay. Well, we're gonna get. We're gonna.
I'm gonna dig deep. I'm gonna dive deep into it and figure it out so that I don't say anything that's not correct here. I know you're already putting in a bid for some. You just did.
Yeah, right here, 298.
Beautiful.
Yeah.
Look at
2098.
I mean,
so
right here,
a little bit off of where we were.
Yeah, it's rallied a little bit. I mean, the spreads are a little bit wide. You only have 1,000 contracts traded, so
not a
you're
ton.
giving up a couple half pennies.
And that's about 200,000 in notional value. Just putting it into perspective, what it is. That means
not
a
tiny.
decent amount of bang for your buck.
Yeah.
Yeah, and I think it's one too where you've got to realize how quickly some of this stuff can move. We're talking about something that has 63% realized volatility on a 30-day basis. So if you start to see some levels break down, I would just get out of the way. But I think like kind of $2 is where I'd look at with some upside of closer to somewhere between 230 and 250.
Yeah, and it looks like a tick is about $2.50.
Oh, so that's big.
That I can.
So these are big boys.
Big. That's why I said the notional value is about 200,000 on 2 contracts, 100,000 on 1 contract. Good job out of you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Even the S&P is down 475.
Unbelievable. Vol's still up 20 ticks.
Vol is up 20 cents. I think the low in Vol is probably done for the week already in Monday. From Monday. We're only Monday. It's done for the week, I'm saying.
Too.
Yeah, I don't know. That's why. Yeah. But man, I did not have this on my bingo. 40 handle move to the upside in the S&Ps after opening down 40. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny. Good job out of you.
Perfect.
the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
You make me laugh. welcome to the Monday edition of the Liz and Jenny Show. Breaking news, we've got our favorite FX expert, and that's a tongue twister, FX expert joining us today. Can the crowd go crazy? Please.
Welcome, Glenn. Welcome. Mondays are my new favorite day of the week.
What? Yeah. Thank you, guys. Excited to be here on Mondays. Yeah, unfortunately, network executives said my repertoire of red shirts was not, up to standards and moved me to Monday, right?
And by network
I had
executives, they mean Jenny.
You know what? I always feel bad when we have a recurring guest on a Thursday. I don't think it's fair to make them wear red every week. So, Glenn, I'm happy you're on Mondays now.
I didn't feel bad at all, Glenn. Not one lick did I feel bad.
Nor should you. I should have stepped it up. I had a couple, but they steered more mauve, more Merlot than cherry red, and
hey, they're in the red family. We accepted Merlot. I mean, it's red wine. Do you order off red wine? It's red wine.
It's very true. I should have said that. But
hey,
nevertheless,
Glenn, I don't know if you've ever seen TP's shirt of flames. But,
saw it on Friday.
Yeah, Flames Shirt Friday.
Yep.
Did you see the viewer? I was saying TP comes in saying I was jealous of the tank top. I was like, I am. I came to the show with you. I'm very jealous of it. And then one of the viewers posted a flame tank top.
Yeah. Go to Twitter, John. If we can go to Twitter, I've got
already in the shopping cart. Already in the shopping cart.
So I'm not sure if we can go to Twitter, but I have it pulled up. Here is the red flaming shirt. This one day we did a live show.
Jenny, nobody can see it yet, so why don't you describe it? There we go.
One day we did a live show. Yeah, we did a live show in Texas, and we walked in. The TV walked in, and he had just this flaming shirt on. Could you believe it, Liz?
And the rest was history. It's now his Flame Shirt Friday shirt.
I was, of course, envisioning a tank top with flames on it, but that's more maniacal than I would have.
Oh, yeah.
That looks like the depth of, doesn't
it's
look
very,
inviting.
Did you watch the end of Stranger Things? It's very Hellfire.
There you go.
All right. Thanks for sharing that. We can pull that down. That is too funny, but I couldn't believe it when TP came in with the flaming shirt and I think that's when it almost looked like his hair was red. And I know I'm not going to argue with this. I know it's brown, but it looked red. His red flaming shirt, or maybe he colored it that day for more effect.
You're going to have to take this up with him. I can't talk about it anymore because I took it straight to the tape, to the actual human who claims he's not a redhead.
That's why I said, I know it's not red, I know it's brown, but when he had his red flaming shirt on, he may have colored it that day because he just looked like he just looked like he was on fire.
Glenn, would you consider yourself a redhead?
I would not know, but
Jenny does.
If I grow it out, if the light goes through the back, it has a reddish hue, and some of my non-existent facial hair tinges red as well.
Oh, that's a tell. Red facial hair. That's a tell.
Yeah, but it's only a few. It's very interesting. One day I'll be able to grow it out.
I like it.
I see we're still on the platform. So while we're in, let's just jump in, Glenn. FX, I want to show you something. There's something very exciting in our FX account.
Oh, she's going to show you something in FX. I like it.
Oh, yeah.
Yeah. Look at this. Look at our USD, CHF, our Swiss franc. We're up $82.
Nice.
We're up $82 on that, which is pretty good because we didn't use too much buying power in that trade.
And I don't think we had a closing order in for it.
No, we didn't.
I was going to say, if you had a closing order in, you might have gotten slightly more than $82 on that. Went on Friday to close the week, and even on the Sunday night open got all the way up to 0.8020. Right now we're sitting around 79.65. So
oh wait, I'm in the wrong one. Hold on, I gotta get to the Swiss franc.
Oh, it wasn't Eurodollar US?
USD CH.
Yeah, there you go.
Here we go.
Okay.
There we go.
Yeah, so I mean, if you would have caught it on Friday, a little bit higher, for those not monitoring their positions, there's another tick in the pro column for setting those automatic closing orders. But I imagine when you put this on, you wouldn't have let it go all the way.
I was going to say
100 pips. Yeah, that was
we would have taken
move.
Like $50 out of it.
Exactly.
You know what? We would have let it ride.
No, but this is, I guess that's a case for watching it every day, taking a look at it every day. Because, Glenn, there are plenty of people out there, and we need to get better at looking at our FX every day. There are plenty of people out there who say, like, I'm an FX trader, right?
Exactly.
Yeah. So what are they doing every day? The people who say, like, I'm an FX trader.
Yeah, I mean, we can get into it because I'm very excited to be here on Mondays. And what a Monday we have here ahead of a pretty exciting week. I mean, if I wasn't on the show, I'm sure you wouldn't look at FX at all. We've got a rally in equities that's definitely notable for even the most intraday scalpers. If you were able to call that bottom, a pretty good run up in S&P and NASDAQs. But looking at the FX space, one of the most interesting storylines from my viewpoint, reigniting the potential Sell America trade on the heels of a tense rivalry between the president, well, in this case, the DOJ, in which the president says he is not involved with at all, prosecuting the Fed chair, Jerome Powell. And Jerome Powell, who likes to stick to business, not get wrapped up in
got a little spicy.
Political,
He got a little spicy.
Yeah. Doesn't like to do that, but issued a statement that was very defensive, and in my opinion, rightly so, saying that he's, not even him is above the law, and of course he'll comply, but he believes that this persecution is directly correlated to the fact that they have not lowered interest rates as the president would have liked to, and instead favoring what they think is best based on economic data and trajectory of inflation and unemployment, their dual mandate. And that set up a pretty wild Sunday night open for FX pairs and into the U.S. session, where we have a much weaker U.S. dollar in line with rising treasury yields, which is not good. That is, in theoretical terms, when you think about how assets are related, you think that higher yields for something like U.S. treasuries and by extension U.S. dollars will command more demand and bolster the U.S. dollar in the spot market. But here, not the case, because that rising yield is due to weaker demand and global investors leaving U.S. assets as a whole. And this is a trend we saw in 2025 take shape on not only some of these Fed independence rumors, but also, the global trade policy from April, even though that had some back and forth. U.S. dollar still felt the sting as, investors leave these U.S. dollar denominated assets and a lot higher hurdle to come back to it. So across the board, we're seeing some U.S. dollar weakness, particularly in that euro dollar and that Swiss franc, as we get, Swiss franc, another kind of safe haven asset that's not the U.S. dollar. So that one falling around 0.5% here from Sunday highs. But this gives us a really interesting exercise of how I look at FX markets, particularly major U.S. dollar pairs, because we think about this setup. I'm looking at, if we go to the watch list, the ones that appear in this popular U.S. dollar section. You've got the euro, the pound, the Japanese yen, Australian dollar, Canadian dollar, Swiss franc, and New Zealand dollar. And these behave very differently, even when we have widespread U.S. dollar weakness. And so we can see in that net change column just what's moving to what magnitude. And we see the outperformers are that New Zealand dollar, Swiss franc, Australian dollar, the pound over the euro, and that Japanese yen pretty unchanged, which is pretty interesting to me, and sets itself up for an interesting week here. I'll get into in a second, but just a point on why this dollar yen might not be playing along is because you'd think, the Sell America trade, U.S. dollar weakness, why isn't the yen cooperating? And while you see everything leave the U.S. dollar, this isn't necessarily a global risk-off move that would command a lot of yen demand. This, as we see a rally back in equities, this is more just leaving U.S. assets, and that doesn't necessarily mean that it has to go to a place like the Japanese yen. And
it can go anywhere.
Exactly. So it gets pretty complicated because the yen's traditional risk off strength comes from a couple specific mechanisms, like unwinding carry trades, in particular paying back some yen loans, because those to borrow yen is very cheap. And so money leaving these U.S. assets right now doesn't necessarily go to these safe havens. It could rotate into Europe, into gold, as we're seeing in particular. So this isn't giving the yen its usual bid, and might actually encourage further carry trades if the U.S. dollar gets a little weaker, and continue to finance some of those riskier assets, but that not necessarily being to other U.S. dollar pairs, could be to other global equities. And we were just looking at that yen chart, and now we're in very interesting territory, still sitting at 158, which is the Bank of Japan would not like to see this, would have loved to see on wider U.S. dollar weakness this bleed into their exchange rate. But as we can see from this chart, we didn't touch 158 a couple times, got very close to it throughout November and December, and a quick reversal there. Last week, we hit 158 for the first time since January 2025. Wow. And we seem to be a little bit more comfortable here than we've seen in recent years. And these really are, when we got there in 2025, the start of the year, that was highs dating back around 30 years. We got as high as 158.80, so close to 159. But we always have the risk here, the potential that the Bank of Japan steps in themselves to try and regulate this exchange rate, get it a little lower. And so that's always in the back of my mind right now when we have this pair at 158. This is something where, maybe you don't have to, if you are calling for a reversion in this pair, you don't even have to time it, beforehand. Of course, this historically is a very attractive level to buy yen. But as we've seen in some of these other crosses, that can very easily just sit there. But we see the magnitude when this starts to shake out because of all those leveraged bets and the existing carry trades that, in my opinion, there could be a lot of room to jump on even after the fact. The one risk there is just that this intervention could happen overnight in Japan's time zone, and you could be hours late to the party. But that's something not in the traditional economic calendar I'm watching this week, as well as.
I like it. So when you're looking at this, we don't have anything in it, Japan USD. So you'd be thinking it's going to reverse, correct?
Correct.
Yeah,
I want to take a look at, I do, and I want to look at also 6J to see what is the vol there. So what is the rank?
Is that a negative sign? Am I seeing that correctly?
Yes. So if you look at this, that seems crazy that there's
crazy.
A negative rank. And if you look at this implied volatility, we're looking at only 8%, 9%. So this is another sign of maybe just trade FX and not risk these naked options when the rank is so low.
Mm-hmm.
Yeah, you don't want to sell premium in this when you've got a negative rank. I haven't seen a negative rank. I've seen it before, but it's very rare.
Yeah.
Yeah, I've never seen it. Would this give you guys a reason to even to buy options in something like this, or would you go to the spot market?
I think you'd go to FX because FX, it's the same thing as buying options. You're making a play where you're not. Right. The reason we'd look at the implied volatility is if it's going to give us a leg up at all by selling premium, and it doesn't.
Right, and if you look at this and think that this is going to reverse, then the yen is going to pop up, and you take a look at these 25-day options, you go to buy an in-the-money call, and your break even is still. It still has to move in order to break even. Let's just go to FX. Right?
Agreed. 100%. Agreed. We got our guy Glenn on. We're for sure trading FX.
Awesome. But yeah, I thought that was an interesting setup for the week. In a week where now this adds gravity to tomorrow's inflation report. So we have CPI coming out tomorrow morning for the U.S. And this was something that, we have the rate decision for January pretty much priced in at a hold. But what this does is it could add increased uncertainty around this Fed independence, because you could see if we're forecasting pretty sticky inflation, and you have the backdrop of potentially someone coming in that will perhaps adhere to the president's suggestions and lower rates, and you do have this backdrop of sticky inflation, that really doesn't spell a lot of confidence for the policy of lowering rates. And so if anything, we'll see if it adds any, we watch these economic data releases to see how it feeds into potential policy decisions as it pertains to the overnight interest rate. This might be an instance where it won't necessarily play into that, but might add some volatility there on some perception of further U.S. dollar weakness just from investors leaving U.S. assets, as we saw last year. Or it could be a nothing burger and just an overnight freak out. We're seeing a bid back in equities, so
we're seeing a bid back in equities, which is crazy.
That could just as easily play.
All right, Jenny, let's pop it in.
All right, I will. And I just for the newer FX traders or people who have never done it before, what we're looking at here is this USD JPY chart. And if we sell it, basically we're shorting USD, getting long JPY. So selling this, clicking this sell, we're getting long the yen.
Absolutely.
Now, Glenn, the size, we've got 0.03, which is using $150 in buying power.
Jenny, you could put it in where if it pops up, it'll sell too. Remember that?
Right. Yeah. But let's just get in. How much do we want to use in this trade?
It's using $150. I mean, I would go a little bit more, don't you think? Well, 150 is not.
If we do 0.05, then we're using
250.
250.
And this one, you're moving, it's 50 yen per pip. So this pair is one of the more constrained pairs in terms of leverage. So this is only 20 to 1 as opposed to the euro dollar, which is 50 to 1. And so you might have to put up a little bit more margin here to get the same kind of magnitude of move in terms of P&L.
Beautiful. I think 250 is good.
$250. That's good. So we're going to sell it 0.05, which is $250 in margin. Place trade. Deal confirmed.
There you go.
Deal.
And so, this trade for you right now on the backdrop in your portfolio, you might be saying, okay, we're long US dollar, Swiss franc, and now we're short US dollar, long Japanese yen. Are those completely inverse? I'd say in this case, not particularly. You could see we're not seeing any yen demand from this recent move lower in dollar Swiss franc. And so we could just as easily have a dollar settling in, perhaps even rising back against that Swiss franc, and also a big move lower in the yen just because of the idiosyncratic risk of the yen right now with that Bank of Japan and not participating in this kind of pivot away from U.S. assets.
So if we sold it at 158 and we buy it back at 157, then how much do we make? Tell us again how you figure that out. Is it telling me here?
It kind of does tell you there. It tells you how many yen you stand to profit, and then I just type it into Google, and it looks like $34, give or take, just 5,400 yen to US dollars.
Does this platform have take X percentage in close? Because then you can't, instead of figuring it out, you use $250. Could you say 25%?
No, that's a great feature though. Okay. That would be quite
asking
nice.
for a friend, maybe one day.
Absolutely. Does require a little bit of back of the envelope math, and that's just because anything else would be a bit indicative. So if we were to, of course, if you were to show this profit in US dollar, that would kind of infer what the exchange rate back would be.
Right. So you don't know what it's going to be
at a point in time. Yeah.
I get it.
And so
There's a little bit of a different nuance here.
All right, so I wanted more. I wanted more than $34. So I moved it to this, which is 8,810 yen. And so what do you actually do? You search 8,000. What is 8,810 yen?
That's what I did into Google, yeah.
Okay.
And it tells you you'll get $56.
Perfect. That's 25%.
There you go.
Yeah, that's
That's
what
why
I
you
was
picked
looking
it.
for. About
Perfect.
That's what I was looking for, about $50. So, all right, Glenn, thank you for coming on.
Oh, absolutely.
I know you're a busy guy. So we'll let you.
Thanks for switching your schedule to Mondays for us. We really appreciate it. The network execs are going to give you a gold star.
Need that. Thanks, guys.
All right, Glenn, thanks so much. Have a good week. And we'll stay in the platform and take a look at what we've got going on. Spoos have turned around.
We're green on the day, baby. It's crazy. I did not expect this. I did not expect to see green. I actually expected a little bit more of a downturn.
Honestly, Liz, I was kind of all over the place with my SPX trades this morning, thinking that we would, I don't know what time it was, early. You know how we have that study where there's more, 5 minute
bars after 9 o'clock.
After 9 o'clock. And so early on around the open, the calendar was pretty expensive, and I didn't want to do the calendar because I thought we might move today. Because
we did, because we were down 40 on the open.
Yeah, so I thought, I don't want to do the calendar because I don't think we're going to sit right here. So as we were bouncing around, actually did just like the at the money, just a small $5 wide at the money to the downside early on, thinking like, I'll play for a quick down move. And then we weren't getting it. So I just ended up taking that off for a small loss. I'm like, we're not getting this down move.
We didn't get a single down tick since the open.
No. So I closed it. I haven't, since I was sick and just sitting at home while you were doing the show with TP and I was sick, I was trading a lot of SPX and a lot more just trying to do quick scalps, just a, small spread, pay a little bit for it and just take a quick $50 out of it. And
is this what you do while you're sick? This is
that's what I did. That's what I did while I was sick.
Traders do. Give me the platform. I have a cold. Give me the platform.
I can't get out of bed, but I have my laptop.
Well, good. I mean, that's what I would be doing if I was stuck at home sick with nothing to do. I'd be scalping in and out. But sometimes that can be good and sometimes that can be bad.
But you know what? Honestly, they are low risk. We talk about, and there's a study that the boys did today that we might be taking a look at tomorrow on SPX Iron Condors. And some of those studies, you've got really wide spreads with very big risk. You might have a $20 wide spread or $25 wide spread, and you've got a couple grand in risk, where I was just $5 wide spread for $2, take $50 out of it. Then put another one on, $5 wide spread for $2, take $50 out of it. So my risk was never, I never had a lot of risk on. And so I kind of like that, just using that as a scalping vehicle to take a quick $50 and never have more risk on it.
You're not zinging naked options, right?
Yeah.
Okay, Jenny, do you want to see some of the things that I did with TP?
Sure.
If you take a look at lean hogs, if you want to take a quick $50, we put it on Friday.
Hey, 20% over the weekend. Let's take it off.
So it was super fun because we have TP, who is he's from Texas, right? So we put a bullish trade on because the pyramid, the eating pyramid got reversed.
It did?
Yes. So that's why. So if you look at it, the pyramid that you and I know, it's like, grains on the bottom and meats and stuff on the top. It's now like this, and it's like eat tons of meat, cheese, and butter.
So now I have to cut back on the bread and pasta?
Yes. Yeah. Unfortunate that I am the bearer of bad news, but the bread and pasta are now in moderation.
Wait, when did the food pyramid get reversed? Just Friday?
The day before we did the lean hogs. And so
you got long lean hogs.
TP and I were joking around because we were saying that the hog cartel was
live cattle. Yeah, live cattle.
The beef cartel was going to come for him because we lost connection. So it was fun. But yes, you can take that off. A quick scalp of $50. I don't mind that.
Yeah, look at the bounce up today.
Yeah.
The bounce up. Oh my gosh. So I joined my tonal class, which also comes with some dietary recommendations, and all they ever say is eat more protein. I'm
gonna go, I swear, I feel like one of those memes. I'm gonna die on a hill with protein around me. Like, I'm trying so hard to eat protein. It's not that easy.
It's not that easy. It's not that easy. There's no way we in a day eat the amount of protein that
they tell us to.
That they tell us to. No way. Although when we're at the SIBO, we're getting good with our lunches.
We are getting good. Okay, now pop into another thing that's very topical today. Go to our SI position.
Okay, so the I'll pull it up here. They're moving. They are moving. We've got silver up 8%. 8% today.
Now that has a lot to do with what Glenn was talking about, right? So it's that same concept. Everybody's pouring into flight to safety right now, which is bizarre.
But I don't consider metals a flight to safety right now.
You don't. The world does.
I don't think like, oh, you want your money safe? I don't think you can say you're going into a flight to safety on something that has a 80% volatility.
I agree, especially with the 101 rank. You know, we just
101 rank, 8% volatility. Right. That's not like a flight.
No, we saw a negative, but it's very topical. So what we have, can you go to our positions on the SI? We were looking at this morning. We are very, very close to max loss. So that one just stays on. No big deal. No harm, no foul. We're not going to adjust because we're pretty far away from it. We're $13 above. Yeah. Almost $12 above our long call on this, but we're pretty close to max loss. So we're just going to sit here.
So, and it's interesting when we put it on, we said at 21 day mark, we'll take it off. And the 21 day mark was 6 days ago. And I do feel like when you have a spread and there's a little bit more risk than just like a narrow spread, sticking to that, close at 21 days and reestablish.
This is the reestablished.
No, but like we're down to 50 days till expiration.
No, I know, but this was one time reestablished. I don't know that we wanted to go back to the well a third time.
But I do like that concept of at 21 days. It's kind of like with our zero DTEs, close at noon. If it didn't work out, close at 21 days. Don't let it hit max loss and reestablish.
But it's kind of a moot point here because we're almost at max loss.
So yeah, we're at 0.212 and 0.25 would be max loss. So how much is 0.0?
It's going to be another $100, I think, probably $70. Because I think our max loss on this was $700.
I can't remember. How wide is the spread? Oh, it was quarter wide. And we took in 86 cents. So let's just look. Quarter wide for 86 cents. Okay.
I mean, that's good.
Well, 86. So, here we go. Yeah. Max loss 820. So we're not that far from it.
No, we're not. So that's why that's the one thing we have to leave. Okay. Just kind of addressing the elephant in the room. The rest of the time, if you want to pop out the side, Jenny, I just want to show you what TP and I did. I did some administrative stuff. Most of the things we traded was lean hogs. The other thing, I closed a few things, but that was it. Other than that, I didn't do much of anything else. Oh, natural gas I did put in. I put in down.
We finally got filled in natural gas.
Downside broken wing butterfly in natural gas. And I think that should be going our way today because it's up a little bit. So yeah, I mean, small, but
But at least you're back down into that two handle. We were waiting to get back down in the two handle. With that move on Friday, I can see why you did it.
Yeah. We got back in. Downside broken wing butterfly. There's not much risk. We can try to break the wing. I think we took in $8, but it was kind of close. Do you know what I mean? Yeah. We took in $80. So if we wanted to move that up, we could, but it's going to take a long time. Although there's only 15 days left.
If to turn it into a symmetrical butterfly, you took in $80 and it would be $90. So we're not
but put an order in to do that for like $30.
Yeah.
And then just leave it.
What do you think? $40 or something?
Sure.
Yeah. And I'll make that a GTC. That way, if this hits, we have no risk. We have a symmetrical butterfly on and natural gas that we locked in a $40 credit for.
Yeah. There you go.
Okay, so that's working. And I know that might have seemed quick. All we did was put in an order to sell this and buy this, which would create a symmetrical butterfly. And if we took in 0.008 credit, if we can do it for less and lock in a profit, great. Then we'll have all the risk off the table.
Right.
Yeah, that's good. I'm glad you guys caught that natural gas move.
Yeah, it was that was kind of a fun show, and it was good because what I love about having TP on, he's a wealth of knowledge, and his cherry bomb that morning was about natural gas. So it was kind of fun to have him come on and he was just saying he would do a put spread. right? And I was like, well, Jenny and I usually do. So our downside ratio spread, which I liked better because it gets us a little bit farther. It gives us, that's how I kind of trade natural gas. So it was fun to have him on to talk through stuff like that. There's some other things that are reaching 60 and 45%.
Let's see. We'll take a look. There's actually, we've got a lot going on. I feel like we've got a lot going on today. And
IBIT.
Crypto got up to, where is it now? Let's see. Bitcoin, 92,000. So it was up. I want to say it was up even more. So
I didn't see it up more than this. I was surprised. I saw it at 90 today.
I thought I saw it almost at 93.
You know what though? But I'm telling you, Jenny, you're looking at Bitcoin US dollars. The Bitcoin future is almost 93.
Okay.
Yeah.
And,
so and that to me, I don't know which one is right, which one is wrong, but they're close. You know what I mean? They're
92, 830. So, so IBIT, but for us, it doesn't really matter. This is a JID Lizard, a very neutral trade. We've had it on for 5 days. We're at almost 50%. Let's just take off this week's and put on next week's.
We're 4 cents away from our GTC, so let's just take it off.
Yeah, so these are the trades we're putting on weekly. Let's take this off and put one on for next week.
I like it.
I will replace this. And then I want to look at the banks too, because that's a hot topic today.
And, and we have some earnings. And the GLD put spread that's right above it is also 50%.
Okay. So while I'm working this, I will take a look at the next week, and we're just going weekly, trying to get $1 on these. The way we put these on is sell a call spread. Here we're getting 27 cents. That's pretty good.
You could maybe take it up a little bit. Do you want to go to the halves? Yeah,
there's enough volume. Okay, so 22 cents for the 54.5, 55.5, because we don't want it to blow through it. We want
we want a little bit of room.
So we'll use that 22 cents to buy the 47.5 just to release buy. All we're doing is selling the call spread to buy a put. So this trade doesn't use a lot of buying power. And then this is going on for a tiny net credit. And basically we want $1. So we'll sell that 51.5 put.
Perfect.
It's close, but we're just.
No, they've always been close. We would just be selling that put, but we are doing something to release capital.
Yeah, it's close, but it's only using $297. We only have $297 in risk. That's it. So I like these, and I think we keep doing them weekly.
I think you're right. I'd like to get out of the other one though too, because 50% is good. That's great. That's $50 a week. That's not bad.
No,
Okay, good. Build on the new one, not the old one.
I'm going to give it a minute. I'm going to give it a minute, and then I'll go up another penny. I don't know.
Just go up a penny. I mean, we're taking profits.
Yeah, that's true. Do you want the penny?
I want the position gone, not the penny. How about that?
Well, how about now? It's going to be 3 pennies.
Yeah, there you go. And you got filled 69. So you put it up 70 and you got filled 69.
Okay, so that is going to get pushed out. You mentioned GLD. We're 62% on a put spread in GLD. So that can come off. So 36 cents. I can't even remember when we put this on.
I don't either.
Or was that, did we have both sides in GLD?
No, I don't think so. I think it was what's your assumption?
Yeah. Just $1 and we bought it back for 37 cents. Okay. So that's out. CRWV, we have short puts in there and it's up $8 today.
Yeah, you're up 60%. We should take that.
Look at that CoreWeave move.
Yeah, that's crazy.
What is the news?
Hold on, let me look back with you.
News. Well, I don't know.
Look at the VIX too. Okay, so CoreWeave. It's so funny because I'm trying to use my mouse on your computer.
All right, so I'm going to take this off. That's a Feb trade. So I'm not, with 22 rank, I'm not going to jump back in.
But take a look at that. It's very little capital. Do you want to, I would close that for sure, but do you want to switch our trade around? Maybe do like some type of big lizard or something?
I don't know, because.
Or a downside ratio spread?
Yeah, maybe a downside ratio spread.
Do something different than what we had.
So a downside ratio spread and a short put are like we just bought back. Let me see. We just bought back that 55 put. So we're never going to get that low. Like we're not going to get.
No, we're not going to get that low, and I don't expect to get that low. But we can bring it. We can bring it up and get something where we can capture it if it goes down. I mean, you don't have to go that high either. There seem to be decent markets.
So here, $1.84, which would get our break even to 62.5. That's not bad.
Let's shift it and get $1. I just want to see how far we can get it down. Like just take your strike thing and go down.
That's fine. 70, 65.
Because, I mean, we're very close to where we were, and then we get an extra.
Yeah, we were at the 55 put. And then if it goes down, we've got that little bit of profit potential.
Yeah.
And it's to Liz's point, it's only using $750 in buying power. So it's not a hefty buying power trade.
No, it's not.
All right. So I'm working that ratio spread. Also, Amazon jumps out at me. We're up $114. What do we have? We sold a put spread and sold a call spread. This is just, but it's. I think this might have been from Fazia.
This is a big lizard. You got the 45. You got the 45 call and put and the 50 call. So you've got a big lizard type thing.
Big lizard. And honestly, for me with a big lizard, 15% is good.
Well, because if it goes through, okay. So hold on. Let's break this down. Actually, can you go to the curve view? I mean, I do want to take this off. It's $117. We can scalp it pretty quickly, but it's a big lizard that $5 wide, and we collected $7 on it.
Yeah, we collected.
So I just want to show where we're at right now. There we go. Perfect. So time has gone by. It's gone up a little bit, and maybe even it was right here when we put it on. I'm not sure, but we collected $750 on it. I'm okay taking.
So we did. So because we collected so much over, usually a big lizard, if we just covered it, I would say take the 15%. But this is a point where maybe we could look at taking the risk off and turning into a butterfly on for a credit.
Let's look, because that is what I was thinking. I was like, if we collected $750 on a $5 wide to the upside, we can make more money if it goes up. If it's a real big lizard and you only collect $5, you want to take it off now.
Yeah. Okay. So let's just look. We took in $725, and to take the risk off and turn this into a butterfly, would cost us $1.77. So 625, 625, 550. So you're looking at 550. So basically, we would take in a 550 credit and have this $10 wide butterfly on. So does that make sense? No, $5 wide. It's $5 wide. We do it taking five. So we're basically.
We have $117 in profits right now, but you're paying $177 to butterfly it off. So you're giving up all of your profits.
What you would be doing is like having a butterfly on for a $50 credit. So you'd have an 18-day butterfly on for a $50 credit, but I'd rather the $116.
I know it's almost like you're giving up too much. You're giving up all of your profits, but you lock in $50 for a chance.
And it's only, I know it's a tough call, right?
That's why it's so amazing when everybody's like, oh, butterfly it off. But for every gimme, there's a gotcha. If you butterfly this off, you're giving up a lot of your profits for a chance of making more.
Yeah. I mean, where's Booz right now? Up 3. Okay. And it's only $5 wide. If it would have been wider, if we could have a $10 wide on for $50 credit, I'd be more likely to do it. But a $5 wide in Amazon, I don't know.
I know. I feel the same way.
Okay, so in Circle, I know we're down $87 today. I just want to see what this was. Okay, because it was
that's an earnings setup diagonal.
And if you look, we were up $200 on it Friday.
Yeah,
we're down 87 today. So it's just something.
Now I will say that was not during the show.
Yeah, no, I'm not saying like, oh, look what you missed. I mean, when you have TP on, it's
no, it was not during the show. I cleaned this up afterwards. That move must have happened after the show.
Yeah. So, but it's just something we'll keep an eye on. We'll keep an eye.
No, we could take our $100 off. No, I don't want to because it's an earnings setup diagonal.
Yeah, let's just leave it. We're still working this, but I'm not going to chase that.
No, you know what I think is fun is Lunar. I think I'm saying it wrong. LUNR.
Oh, Lumen.
Not Lumen. LUNR. Isn't that the one that we did, or is that just the long stock? No, we sold something around it, and look, it's gapped up. So we wound up selling the 915 because we had 100 shares, and it gapped up through it.
Look how much it gapped up.
Mm-hmm.
Whoa.
Yeah.
So we sold a strangle around our stock. Let's just close it all.
The whole thing. Yeah. I mean, this is that put is worth nothing. That when you had it gapped up, so we got from wherever we sold it to up 15 to $15. Let's close it. Close the whole thing.
So what I'm gonna say, and this can be an exercise. I don't know if it's gonna let me close it like this, the whole thing. Yeah. So you can't. So what you have to do, what I like to do, is just close this put. Close the put. It's no bid at a penny, and then I know if I have a covered call here, which is what I have, 100 shares and the 15 call, this should be trading for close to 15, minus whatever extrinsic values here, and this 14.93 is like the 7 cents, so I'm okay with that. Maybe I'll try to take in a little more credit. Here, 14.94.
You're not going to hold on to this because all you can get is the extrinsic value.
Yeah, right. It's interesting how I can't believe it blew through. If you were to roll, you're actually.
I don't mind selling the put. Let's close the covered call and sell the put.
Yeah, so we'll because we don't need to hold on to this stock for any reason at all. So we'll close this and get back in. But if someone
you gotta do 7 cents. Yeah, there you go.
If someone wanted to keep their stock, you could close that 15 call and roll it out, and whatever put you would sell, just roll it to that. But if you want to keep it at 15,
you should be getting 74 cents. There's something weird.
Yeah, no, it's like interest and there's other things priced in. I gotta have to lower this. So we're out. We're out of our lunar. And maybe we just stay out. We can keep an eye on it.
Yeah.
Okay. What is this? It says we're 86% on Rigetti. What do we have? Oh, an upside. Look, and it's right there. Let's leave this. An upside butterfly.
It's a straight up butterfly, right? It's a butterfly butterfly.
Mm-hmm.
Yeah.
I think this is what's your assumption. Someone wanted a butterfly in Rigetti, so it's just a straight up butterfly.
Like it. Jenny, I think we should pop into Twitter.
Yeah, that's what I was going to say. Popping into Twitter. Here's the flaming shirt again, Liz. So I'm going to go top down. We're taking live tweets. Send us a tweet. Include the hashtag LIZJNY. If you're on chat, on the YouTube chat, Frank the Great should be on there, and he could share it with us.
He did. He just, right underneath Eric, Frank posted something.
Oh, yeah. Okay, good. All right, so this is from Blue Wackadoo. Happy Monday. Still sitting on my broken winger from last week. Looking good unless we have a big pullback, which I'd be fine with, as I'm short a pile of MES and long VIX.
Ooh, there you go.
Yeah, look at him.
Blue Wackadoo. He's showing us his forest, and he's got his backups are long VX and short MES. Good. I like it.
All right, and then this came from the YouTube chat, Jared Kramer. Ask the gals about a Google Calendar call spread, 350 strike prices, selling the Feb 6 call, looking at buying the Feb 27. So
I've got the strikes pulled up. So pop into Google.
Okay.
So selling, and it's the 350 strike. So you're on the Feb 6 call.
Was he in Goog or Google?
It just says GOOG. So I would take off the L.
But usually, and I don't know why do we?
I don't think it matters. I think you choose one and stick with it. Do you know what I mean?
Okay.
So GOOG, he's in the Feb 6, so right after earnings.
Oh, right after earnings.
And it's the 350 strike call.
So playing for an up move on earnings.
Yeah, sell that one. And then he's buying the Feb 27.
350 call. It's only 312, playing for an up move on earnings.
And then he goes on potentially looking for an earnings trade to maybe roll to a vertical.
Sure. Okay. Sure. Yeah, so if it goes up on earnings, and then it could just be a winner if it goes up to 350 and stays there. Otherwise, if it goes through it, then you can roll
up. Perfect. I like it.
Yeah, we'll do this. We'll get in on this. Now, typically, if we were doing an earnings setup calendar, we would sell.
I would sell it before.
Sell the 18-day and then buy the cycle with earnings.
I actually kind of like that better.
And that way that it's like we're getting this 350 call cheaper. And if it goes up, great. What we're going to be left with is the 350 call through earnings. And then we can decide like, hey, what do we want to do with this now?
Yeah, I kind of like that one. But I don't mind. Jared, I don't mind your process either. I know if you know what you're doing, it makes sense.
I mean, what he's doing is like, that's your earnings trade. Then you're
Yeah.
just like, that's your earnings trade, and you're leaving it on through earnings.
Yeah, I got it.
But we typically will put these on as, expecting this one to just decay, the 18-day and the 25 to get a boost in vol as we get closer to earnings.
Yeah, for sure.
What do you
think? I like that one.
Yeah, I kind of like this, and I don't mind the other one either. But
I didn't mind their trade at all. I thought it was a good look, and it brought us to our trade. So thank you for showing it to us.
Yeah. Okay, Ajit, Spot. Oh, BE, Bloom Energy. He's looking at 220, 171, 80, 1/2 call ratio spread, collecting $4.
Okay, let's take a look at that because I'm knee deep in Bloom Energy, and it's been very, very good to me.
Bloom Energy's had a raging comeback, a roaring comeback.
Yeah. Well, all the energy stocks have.
Right. And is he? Tell me? Are you looking at his?
Okay, so I can look in the strikes right now. So call ratio to Feb 20.
Okay.
Feb 20. So he is Feb 20. It's the 170, 180, 1/2 call ratio.
I mean, you're getting far. He's getting 422.
That's pretty good.
It is pretty good. There's just been like way too many times in my life where I have said out loud, I'm not selling a naked call. I'm never selling another naked call. Liz, how many times have we said, I'm never selling another naked call?
I'm not. I haven't done it in a long time.
I can't do it. I can't do it.
Well, and what I do like about this, Ajit, is I do think this is good because what Ajit is saying, and it's nothing, I mean, honestly, it's good. There's a 54 rank. You're going to the upside. You can make more money if it goes up. But also, if it goes up too far, too fast, you can lose. That's the only thing I'm saying. That's the only problem with a naked call here.
I'm afraid of them. I'm not afraid of much. I guess I am. But I'm afraid.
You're afraid of a lot of things.
Before we go back, I do want to look at some of these banks and see.
Oh, that's what I was going to say is if you go next, and I'll say it because Bob's awesome and I'll retweet his, but Bob puts up the earnings. You got JP Morgan and Delta today.
Okay, but what was taking such a hit? Like, all the credit cards were taking a big hit. That's
because Tom, or not Tom.
Yeah.
Because Trump, and Tom would die if I called him Trump. But
it's so funny.
They're claiming to put all credit cards at a 10%.
Yeah, max. So I was just curious to see what they were all doing. And it's funny because, so American Express only down 4% now, not as bad as it was. What other ones were taking a big hit?
I think all the credit cards were.
Citigroup only down.
Well, no, that's not. I mean, a Citigroup a credit card, it's a bank.
Well, I mean, it's a credit card too.
Well, they're a bank that has credit cards. There's a lot of brokerage firms that have credit cards.
Visa is not down that much. They're all kind of bouncing back.
Yeah.
It's not as ugly as it looked earlier. No, like what? I mean, I don't know. What credit card do you use? I'm only asking because my son is graduating, and I've always had him on a credit card linked to our card, and he said now I should get a credit card on my own where I'm earning my own miles, or I'm earning my own points, or I'm earning my own this. And so he's trying to figure out what credit card he wants to get.
It's so funny because we just switched over. No, don't get me wrong, we're still paying the bill, but we just gave JD his own credit card where it's his name, it's his credit card. He's establishing credit.
And what point system or
United.
So JD will just be earning his own flights.
Yeah. Well, now you can bank everything. If you're related, you can put them in a giant pool.
Okay. So I didn't know. And that's what Logan was asking. Like what credit card should he get? Like what's going to benefit him the most? And I don't know if I should do like a cash back one where he's earning cash back or what would be best for him. Because I just, I don't see him like traveling as much as we, I don't know that he needs the airline credit card. Because
we're paying the bill for it through college. He's going to be paying his own bill, so he's getting his own rewards.
Yes, no. JD is a freshman. Like Logan's graduating, he's about to move, be on his own.
Yeah.
Okay, so let's go to Bob's list.
And I would just like to state for the record, he's establishing his own credit. It's for emergencies, like if he needs it, but it's under his name. So like if he needs groceries, everybody's like, wait, you're just paying all this credit card bills? That's not what I'm doing, but we needed him to establish credit. So he opened it up and I said, if you need something, you can put it on there.
It was easier for me to give Logan a credit card at college and say, this is for gas and groceries.
Yeah, right.
This is for gas and groceries. I don't know, but since he shops since like their grocery store is like a Walmart, God only knows what he's buying.
So they can buy anything. It's like that movie Reality Bites when she gets her dad's credit card just for gas and she stands outside. This is well before. She just stands outside filling everybody up for cash. It's an entrepreneur right there.
Oh, funny. All right, so JP Morgan and Delta. I honestly, Liz, I haven't looked at Delta in a while. Have you?
I haven't looked at Delta in a while either. Although, I think Chris Vecchio wrote something in the middle of the night about Delta.
He did?
Yeah, on Teams. I woke up and I had the Teams notification. I was like, what is Chris Vecchio saying about Delta Airlines? Something.
I don't know. So earnings in Delta, we've got a 450 expected move.
It's down, right? Yeah.
Yeah, it's down.
No, so I'm going to extrapolate it, and you got to watch because I think he's a wealth of knowledge. But it was something about how if the credit cards are capped at 10%, then it's going to really affect all the mileage programs. Then the mileage programs are going to be gone, which should affect all the airlines.
Oh.
In a nutshell.
Okay. Got it. Well, maybe we'll just stay. Maybe for today. Maybe today I'm just going to stay away from Delta and JP Morgan.
Yeah, I mean, unless nothing pops out at you, it's got a 22 rank. I mean, we're looking at things that have earnings farther out in the future that have 50 and 60 ranks.
And JP Morgan it's only down less than 2%. How low did it get today?
Okay.
321.
No, that's nothing.
No, but I don't know. I'm going to be like. When JP Morgan, we always are excited, like earnings are here, and then we're like, oh, it's just the banks. It's not exciting. It doesn't get exciting yet. It doesn't get exciting.
You get so excited, and you're like, the banks.
It might get exciting Wednesday for Taiwan Semiconductor.
Yes, there you go. There you go. I kind of agree with you. It is a little weird. Now, Jenny, we only have about 30 seconds left. I just want to make sure we got to everybody.
Okay,
there you go.
Samantha, hi Samantha, good to see you. He should get the Chase Sapphire card. He can use the points for hotels or airlines. Okay, thank you. See, I love our viewers. They're so helpful.
That is good.
I'm putting that in my notes right now. Chase Sapphire card.
All right, Jenny, we are done and dusted. We got to close in order to get the other people up and running.
Okay, we are done. We're getting the hook. I'm just making sure, like, anything else before we go. No.
And we'll be back tomorrow to clean up anything else that needs to be cleaned up and add more trades. We'll be back tomorrow live from the trading floor.
Yeah, live from the SIVO. Liz, I will see you tomorrow morning on the train.
You got it. All right, everybody, good luck with your earnings trades. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Start the show.
What's up, Tasty Nation and Bears Nation and Bills Nation? It is Options Trading Concepts Live. I've got Jamal here. I've got Ryan here. And, you know, who cares about the markets when both of our teams won? We're advancing. I was thinking about the Grace brothers because that tush push that ended up just being like a continuous push. I'm like, what is happening right now? These guys must be losing their minds.
We were.
Yeah.
A lot of fun to watch. Obviously, the Bears game as well. It was a good weekend, boys.
Yeah.
It was a fantastic weekend all around for a lot of reasons. I mean, my Miami Hurricanes won on Thursday night. And
You're going.
I'm going to Miami. Yes, I'm not going to the game. I'm going to Miami. It's going to be fun. It's going to be glorious. More about that throughout the week. Saturday, I got to give a shout out to us Wisconsin Badger fans. We took down Michigan. That was fun. 2 team at Michigan. But yeah, to start with your game, I knew it was going to be tight. It seemed like it was going to be tight. And sure enough, it was. When I turned it on, it was 3-7 and the Jags were driving. I mean, they were in the red zone. I'm like, oh boy, this is looking scary for you. And Josh was being evaluated concussion. And it's like, oh my God. And then completely that game flipped.
Yeah, he got banged up, some perseverance, but I was really impressed by how strong, obviously number 1 rush defense in the NFL, but just how strong Jacksonville's defense was. They played a hell of a game. I mean, it was a lot of fun to watch. We had great games around the horn.
Yeah, great games around the horn. And I don't know about you guys. I mean, we kind of talked about it loosely, but I was watching the Bears game in my local favorite spot, and it was pandemonium at times. And very quiet at times, too. I mean, look, it was scary for a while there. 21-3 going at halftime didn't look good. But, man, talk about coming out with a vengeance at halftime. The Bears came out and they did their thing. It was so loud in my spot. It was fun.
I mean, it's crazy to think that game in our season came down to a hobbled, leaning left, throwing left play in between 3 defenders, have to catch the ball, and he does it. And we end up winning that game.
What a throw.
Absolutely nuts.
You see the stuff that compares the way he looks like to Jordan.
The Jordan logo?
Yeah, it was great. It was fantastic. The city needed it. The city loves it. It's great. I mean, what more do you want?
Then, yeah, next weekend, Bears will play on Sunday. Do you know when the Bills play yet? Or
Bills will play the Broncos, I believe, in Denver.
Cool.
Yeah, I don't know if it's Saturday
That's going to be another banger of a game.
They say 49ers are getting the shaft because they just played yesterday and then they got to play on Saturday too. Yeah. They say they're purposely trying to injure the 49ers. It's fine. I don't
Well, did you see the 49ers stuff about how they're so close to it's like some kind of electric facility, and they were tying together all these injuries with like how the electricity that's in the area like messes up the integrity of cartilage.
Oh, really?
And they're like, this is the most injured team, and they're next to this electric field ultimately. And these scientists are like, this is what could be why this is happening.
Yeah, I'm trying to think about where they are because I've been there before. I stayed at a hotel near there like during a show one time, and I remember it's like near this mall too. You're right. There's a lot going on over there. Mm-hmm. There's got to be some explanation. Either that or they have the worst training staff in the world. Yeah. Because it's crazy how often their people are injured.
It's nuts.
It is a bizarre coincidence, if it's a coincidence. But yeah, they practice next to a giant substation, and there's some speculation that it's the electromagnetic field.
Interesting.
Yeah.
Whether there's any evidence of that or not, but they are injured all the time.
Oh, we got it right here.
There you go. Here it is.
Oh, nice.
You got it.
So,
yeah,
there
you go.
I don't know.
That's kind of interesting. It is kind of electrical substation.
Yeah.
I mean,
Kittle,
I do want to know
goes
the
down
science.
yesterday.
Off the top of my head, I can't think of any science that would, affect. But it's a good theory. I don't think off the top of my head I can think of any science that makes it make sense.
Well, it's like a microwave. A microwave works by rattling water cells, and that's what heats up your food.
Yeah. Microwave definitely those are definitely damaging to skin cells.
Yeah.
I don't know how much.
But this could be similar, where the electricity is just it's ruining the integrity of your cartilage ultimately.
I'll go with it. Yeah.
I mean, Kittle took one step and popped his Achilles yesterday.
Wild. Yeah.
That was sad.
Yeah.
It's just kind of wild. I mean, most injured practice, the only ones that practice next to literally a giant substation.
It's got to be something.
Might be something to it.
But yeah, exciting stuff all around. We've got Bitcoin catching a bid here, 2140 to the upside. E-minis and NASDAQ pretty flat. Down the Russell pretty flat as well. But I mean, silver cannot be stopped. It is still the story of 2026. It was the end of 2025. Silver up 8.5% today.
Monster move by silver. I'm assuming I haven't even looked at platinum, but I imagine that's one ape too.
3%, and then
Actually kind of chill comparatively.
Gold 3%, gold ripping higher, but yeah, silver is just absolutely nuts. Someone asked in the chat about our 100 strike calendar spread, and as we said, if we get this big rip, you're going to see this appreciate very well. It was a $250 debit. It's trading for $350 now, so we're up $100. Question is, do you hold it or do you exit? And I think for me right now, it seems crazy to say, but like I have the May contract. May.
Oh, I did March, Feb. Okay.
So yeah, I have 124 days. So I'm going to leave this on because if we keep ripping, this could be a $1,000 winner, like literally.
Yeah.
Because the 100 strike in Feb has 39 days left, and if it takes us a couple of weeks or a month to get there, that's going to lose value or at least not appreciate nearly as much as May. And as silver keeps ripping higher, we're seeing implied volatility rip as well into that move, and that's going to start affecting May much more dramatically than it is now. You can see Feb and March and Jan have super high implied volatility as they lack days to expiration. But as we inch closer to May, you're going to start to see a similar thing here. But still, I want to keep this on because this could be a home run trade for $200.
There's so many different things you can trade in here. I mean, you can do so many different types of things, especially in SLB because it's pretty liquid. So it's just good times, man. Same thing with GLD too, of course, a little more higher price point, but yeah, I was able to mess around with the strangle that I had in January 30 expiration. I think one of the days we were on the show, I closed the upside when silver went down, which again hasn't happened as often last couple of trading sessions. And then I think I could have put it back on Friday, but I was like, nah, it's not up enough. Well, today I was able to put it back on, sell an upside call, 85 strike on the Jan 30th expiration, and I rolled my put down. Rolled my put up to the 70 strike. It was the 66. So, it's moving around so much. You're able to do these things. You're able to almost even leg it a little bit if you want.
Yeah. Yeah, especially with the delta moves, you can make those adjustments. But other futures moving, corn, wheat, soybeans, all down over 1%. Corn down almost 4%. Interesting there. We'll have to ask Thomas tomorrow what's going on with that. But yeah, this story is the precious metals still. Natty gas reversing for you, up 5%. And Bitcoin, ETH up over 2%. Everything else kind of just chopping. Ryan, another good day for Bitcoin here. Catching a little bid. What do you make of this?
I don't make too much of it. I think what we're seeing is those positive correlations that we've highlighted play out here. You had a nice reversal in equities if you were long earlier, some weakness, right? There's a lot of headlines associated with or surrounding the Fed, Donald Trump. It kind of distracts people. Don't get distracted. I think you had the opportunity to buy dips in here. The volatility environment still supports that, in my opinion. And so I think what you're seeing with crypto is just it trading along with the rest of risk here, a little bit of weakness. And then once things got going, we caught a bid. All that said, and this was a theme on the live show earlier, live from the trade desk, we were talking about how you want to be where there's some action, what's in play. And Bitcoin, crypto largely, at least right now, it just hasn't been in play. There have been other opportunities, many other opportunities. And I think that's the thing too. It's really, the opportunity set is broadening. But you look at metals, if you had to pick between the two, Bitcoin, which is just going sideways between 85, 95, or silver, gold, platinum, copper, probably going to be over there. Defense tech, AI. Again, I think there's just a lot of other opportunity. So until you see higher prices, which gets people's attention back on Bitcoin, and I think the fundamentals are there for that. But until you see it, I've kind of said the same thing over the last couple of weeks. Not like super interested. I haven't been adding much. It's not a position where I think the setup is there where you really size it up. I want to have some skin in the game, of course. I've got some trade ideas for you guys, and there's areas that we can call out. But it's not at the top of my list right now of areas where I'm more active. I've got my long position, but
not a lot to talk about. The market's been kind of quiet, and you can see that reflected in crypto volatility as well. It's very low.
Yeah, for sure.
Love it. Yeah, it's been a choppy session for sure, and a choppy couple of weeks here, but nice to see some green, all things considered.
Oh, absolutely.
But yeah, some other products like MicroStrategy still similar, just chopping near the lows. We were talking about some of these alternative products as well. Mara, what were the two that we were talking about that were shifting into more data center?
Yeah, when we were looking at the pivot from Bitcoin or crypto mining to AI data centers, Iron, which I think has been one of the more popular symbols here that we've been talking about on the network. You see it with some of the trading activity they highlighted. TeraWolf, Cypher Mining, and then do you see some of those data center stocks, specifically those that maybe a while ago started off in some areas with Bitcoin mining, things like CoreWeave, starting to trade a lot better. You're going to, again, get a lot of volatility, obviously, but those are areas where if you're looking for a little bit more vol, you might be attracted to.
Love it. Yeah, we're trading ETH-A, IBIT, the IBIT position, 60-65, slight inversion, looking nice today. But yeah, we'll continue to sell premium there, lean long, and see what happens throughout the year. But I believe we have slides, that's correct?
We do.
Cool.
We've got a handful of slides here. And I even took a similar approach to what we've been doing with our crypto market update and have a table around different asset classes, more of a macro view. We can look at momentum and some of the performance in a variety of areas of the market, see how things are correlated. But to kick things off, let's take a look at large cap crypto here. So a handful of tokens that we track, Bitcoin, number one on the list. As we've talked about, this is a low vol, kind of choppy market, and you're seeing it reflected in short-term performance over the last week, over the last month. Smaller cap stuff is a little bit more volatile, of course. That's always been the case. But when you look at the last month in here, Bitcoin and ETH are kind of flat, still licking their wounds from the last 3 months when we saw that leveraged liquidation in October. That said, volatility has come down and price momentum has improved. So we have the bullish signal when we look at exponential moving averages and just crossing over to the upside. We have that on the daily basis, don't have it on the weekly. I want to see north of 94,000. I want to see north of 3150 really, so a little bit tighter or closer on ETH. That's traded a little bit better. And I want to see probably 150 or better in Solana before you start to get closer to where that momentum will shift again and you'll get that bullish signal. Until then, I think you continue to shop around and I'm going to wait patiently. That said, if we jump to the next slide here, you can see what I'm talking about in terms of very low volatility. So when we rank implied vol for Bitcoin and ETH, we use Deribit data for this. We have an IV rank over the last 3 months of 4 for Bitcoin, 7 for ETH, pretty low as well when you look at this on a 6-month or 1-year basis. I think that changes. I'm just happy to wait until it does. Bitcoin expected move given low vol here, even though the spot price has picked up a little bit, still about 5,000. ETH is 250. Solana, we're looking for an $8 move. That's pretty small. Solana, I will mention, we'll see on the next slide, has witnessed some relative outperformance recently. SUI, XRP, still chopping in pretty tight ranges. But let's say that there's a bid. Let's say that we see a little bit of chase here. I would certainly expect those moves to increase and volatility, obviously, to expand. So those are your expected moves. On the next slide here, we've got some relative performance. We use this as a signal and starting to see some outperformance of ETH versus Bitcoin. And then as we move further out on the risk curve, Solana versus Bitcoin, Solana versus ETH. And we did get that pop in Doge, but it has kind of pulled back a little bit versus Bitcoin. So keeping an eye on this, I think there is an environment in which, again, I want to see this more structurally kind of show up on the weekly basis. But I would start to lean into ETH and Solana versus Bitcoin if we get that flip. It's trading a little bit better, but I want to see strong outperformance on a relative basis on the 1 month and 3 month period. Not really seeing that yet. Same thing with Bitcoin market cap dominance. I want to see that trading closer to 55 to get started. Momentum in there has been a little bit more bearish, which should support alts, but it's still kind of sticking to multi-year highs at 59%. So a couple more slides for you guys. Quick look at cross-asset correlation as we run through our approach here. Short term, the positive or strong positive correlation between crypto, Bitcoin in this case, and the equity market, that's come in a little bit. You're starting to see a positive correlation, at least for now, between Bitcoin and the dollar. So the dollar's trend possibly has reversed here short term. It's been a little bit stronger over the last couple of weeks. You're seeing a positive correlation between the dollar and Bitcoin, not something we typically see on a longer term basis. You look at the 1 year in there, it's negative. And then not really much of a correlation with gold as it does its own thing and continues to press to new all-time highs. Not much of a correlation or inverse correlation between bonds and volatility, kind of doing its own thing, which again, I think is, when you look at the correlations and the breakdown, somewhat reflective of this low vol, choppy market we've been in when it comes to crypto. Crypto's been on the back burner, I think, for a lot of investors at the moment. That said, I wanted to just run through this and take a similar approach from the macro perspective. So if we jump to the next slide, you can see here, when we think about how these things might be moving together, what other trends are we observing in the market? And then how do we position for that? And so when you look at the S&P, look at the NASDAQ, you look at the Russell outperforming Bitcoin outperforming the S&P and the NASDAQ. But the point to me here is that everything has been very positive, very bullish. When you look at it the same way that we do from a crypto perspective, you look at that price momentum, seeing the same thing in equities. So it remains an environment in which when you do see pullbacks, as long as we don't get a breakout in volatility, which has a pretty bearish trend at the moment, maybe trades all the way down to 14, 13, we'll see. But as long as you're in that environment, I think you buy dips in equities. You continue to, I wouldn't chase metals, but you continue to buy dips in metals, and you keep an eye on what's going on with the short term and kind of the middle of the curve, not all the way out at the end. But if I look at 2s, 10s here, we have a yield curve that's steepening. And that's a pretty good sign of the environment that we're in. You're seeing broadening of outperformance when you look at the Russell and some of these other areas of the market versus just the crowded kind of Mag 7 or tech exposures before. So I say all of that because crypto's looking better, and I think that it's in a market that will certainly support higher prices, even if it's not front and center. But when I look at the market at large, it's still very, very bullish in my opinion, very supportive of even higher prices, though I just wouldn't chase things. But it's a market in which I still think you want to buy dips.
Yeah, totally. And when you look at the slope of the volatility curve as well, from the G to the H to the J to the K, there's a 1 point contango between all of those contracts, which is signaling to you that even over the next couple of months, there's not much implied volatility priced in here. So to your point, when we have these environments where we're in a steep contango and falls low, you should not be surprised if you see a chart that's up and to the right for the most part.
I'm just trying to think of a last time where we had, I really think it's hard to say. This is really unprecedented in a way. By that, I mean like the lack of volatility and how quiet and essentially Bitcoin is consolidating at a level that's like below a major level. You know what I mean? Because again, when I look back at the graph, I look back to the July, August time period, probably doing around the same thing, not a ton of volume, kind of consolidating, but it was still already around highs, right? And now it's doing this at a level where it's not like all-time low or anywhere near it. It's not really at all-time highs. It's just in the middle. You know what I mean? And I'm not sure the last time it did that. Again, April, July, February, July, March, April last year, I mean, everything was kind of falling down. So that doesn't count. And I bring it up because you pointed out everything else in this environment is either at highs or near highs, or gold, silver, the market. And Bitcoin is not participating, but it's also not getting shellacked. It's not like getting, for lack of a better phrase, shitted on. It's just in the middle. It's lying in the weeds. And at some point, it'll turn around. So I just find it kind of an interesting time period in Bitcoin for that reason alone. Like, again, it's not near highs. It's not near lows. It's just kind of in the middle.
Yeah, I think structurally it's still pretty positive then in that, you've maybe seeing a bottom in here. You're going to need a catalyst. And that's the same thing for any further downside, given what we're seeing with the price action that you're describing. But I think that when you look out, there are more potential. Obviously, tough to point out what the negative or bearish catalysts are that could be hiding in the weeds. But there are more potential bullish catalysts in terms of kind of structural, market, regulatory, et cetera, that could push this higher. And I again, wouldn't be surprised if you did retake 100,000, you probably move pretty quickly to new all-time highs. But we're not there today.
Yeah, and looking at continuous Bitcoin futures on a weekly basis over the last 5 years, you can see the initial rip, but it's been a similar story where like during this period in 2024, we had this chop, and I guess chop is the wrong word because it was between 50 and 70K, like it's still volatile. But if you just look at it from a 30,000 foot view, we flattened out at this level and then we had the big spike. And now we're creating that similar scenario where we're flattening, but it's around 90K. Where's the next spike going to take us if and when there is a bullish catalyst? So yeah, I think just given the positive correlation with the overall market, and if we expect this market to be a low vol environment, and we're up another 10, 15% this year, I don't see how Bitcoin doesn't follow suit just from an investment standpoint.
Yeah, I think the only thing that really knocks this lower, in my opinion, or maybe the most impactful kind of variable here is just really what happens with the economy. You know, if you were to see in the same way that we'd see volatility in the equity market, you know, if we were to see an environment in which growth is really slowing down, inflation is accelerating to the downside, which is to some extent going to be a function of that growth, and you have a kind of more scary or recessionary environment, that's one in which this is going to just get blown up and take you to levels that we probably can't really fathom or stomach at the current point. That's the same thing for earnings with companies and what you'd probably see in terms of long duration assets in the stock market. A lot of the speculative nature and that capital kind of comes back out of it because these things are much higher volatility. But I don't think that you're in that environment for one, and nor do I think that you're headed into it anytime soon. It's not impossible for it to show up at times, and you can get a growth scare. But as we stand right now with the data that we're getting and what you're going to see this week, you got CPI tomorrow. I don't think, again, you're in that environment where this jumps off a cliff. So you kind of trade the ranges accordingly, but I would look for more upside.
Yeah, and especially when you consider CPI and PPI. CPI is tomorrow at 7:30 Central, and then PPI is Wednesday, 7:30 Central. Normally, when those releases are expected to move markets, you'll see an XPX weekly expected move of well over 100 points. You're just not seeing that. You're seeing 66 points through Friday, which is very low. Like 66 points from now until Friday is really nothing. So I think that speaks to the fact that even though we're getting this data, it may not spook the markets, or at least it's not being priced in right now. Beautiful. Well, thank you for that. Love it. Love to see the shift higher. Seen some more green squares on the momentum data. But yeah, why don't we pop over to the YouTube chat now? If you want to join us there, we're streaming live. Just head over to Tasty Live. You'll see this video front and center. You can throw in your trade ideas, questions along the right-hand side chat. I've got the big deal pinned to the top of the YouTube chat, tastytrade.com/big deal. You can get matched up to 10K if you open a new account, and you get 30 days of commission-free trading, 4% cash match on qualified deposits. You can scan that QR code. It'll bring you there, or just go to tastytrade.com/big deal.
Big deal.
What else are you guys trading right now in terms of just exposures, themes? Like what's on the radar?
I was long oil into that sell-off as we got down to 55. I got out last week. I've got this year-long trade in MES, year-long trade in IBIT, just selling premium with an upside lean there. Amazon, bullish position there. We've got some crab trades in Net, Palantir, really just exposed to tech stocks, and then just some leftover stuff here from earnings and whatnot. But yeah, mostly tech exposure, leaning neutral to bullish with undefined risk short premium trades in 2 products, and then just patiently waiting for earnings, which are coming out this week, really, or starting this week, I should say. The banks tend to kick it off each quarter. And if we look at Bank of America, 14th before the open. JP Morgan, 13th before the open. So tomorrow we'll get our first number. But then you have your Goldman Sachs, 15th before the open, Wells Fargo, 14th before the open. So we'll see.
Yeah, it has the makings of actually a busy week. I forgot about CPI. It looks like PPI might be from Nov in October. So who knows how much those are. CPI is actually going to be December. And then obviously it's expiration week, right? I mean, it's Jan expiration, which makes you start to think about the VIX, which expires a week later. So it's after expiration. I think this was a longer VIX cycle. But yeah, I mean, it seems like it's going to end up being a fairly busy week with a lot of different things, especially with the banks starting. We'd be remiss if we didn't mention some of these credit card names today. Those are moving quite a bit. I've looked at them, haven't done anything. I guess there's news about, or there's threats, it sounds like, from the White House about credit cards need to cap their max rate percentage. Obviously, this would cut back on them revenue-wise. You can see them reacting as such in kind. Capital One's down. Who else was down? JP Morgan is down a little bit. American Express, obviously, is another one that's taken it on the chin. I would say those are the two bigger ones. Visa and MasterCard to some degree. Kind of interesting.
Yeah. American Express down 4%. Capital One down 6%. MasterCard, Visa down a little bit. But yeah, that'd be crazy. That'd be nuts.
To start the year, we've seen some interesting stuff across some of these landscapes, right? Like some of these groups. You're seeing this today. Last week, there was some movement in the defense names, right? We saw heading into the beginning of the year, we saw some big moves with the banks in the positive direction, actually, and healthcare. So again, I think the year is still trying to figure itself out, but you're seeing these groups. I always like when I see groups of names move, honestly, because you get an idea of what really affects the sector and what doesn't. And this is an example of one of them. You can see the immediate reaction by American Express and Capital One, among others.
Yeah, a lot of the banking financial products leading the way to the downside in the S&P 100 at the very least.
Like Citigroup's getting smacked. I think the ones you're seeing that get smacked the most obviously tells you how much they make off of that revenue on the variable interest rates, basically, is what I'm seeing.
Yeah. But yeah, good call out there. Looking at the NASDAQ specifically, Qualcomm, Intel, Intuit, Adobe, some big names to the downside. And then upside movers, Costco, continuing on.
Costco.
Walmart, Costco, Starbucks.
I put on a Super Bowl in Costco in February. And by the end of the day, I think on that, we were talking about it. It just seems to have the look, man. It's got the looks. I've been the 890, 900 put spread that I'm short, and I'm long the 1,000, 1020 call spread.
Yeah.
Come on.
It's just surging through this range here. But yeah, Costco, you gotta love it. Gotta love it.
About time.
Mm-hmm. But yeah, other than that, just kind of keeping it small. I'll definitely play some earnings trades this week and next week. But it's kind of that weird time where like I just want to wait until the earnings announcement or the day before to place the trade. So kind of in a little bit of a holding pattern outside of the year-long trades that I'm in. But with that said, let's see if anyone in the YouTube chat has any questions or trade ideas. Let's see. What do we got? If there's a cap on credit card rates, requirements for credit cards or for credit will probably rise. And people who are paying 28% or whatever it is probably wouldn't even be able to get credit. Am I wrong on that?
Yeah, I would think so. I mean, I would think that if you were to step in and kind of toy with free markets in a way, you're going to have a lot of knock-on effects, right? The other thing that I think you're seeing here is people have started to talk about would be the impact on points programs and why people are even there to begin with. So American Express getting smashed here has an expensive program through the Platinum card, has, you know, a certain type of user there that likely is paying off their credit card for the most part. each month. So I don't think, it's the interest piece as much with something like that. Whereas if those points programs were to go away, would the demand for those cards and the associated revenue go away as well? I think that's one knock-on effect, but totally, right? In the market, you don't have to approve, if you're American Express or Visa, you don't approve all Americans for credit immediately, right? You have to meet certain conditions. So I think you would tighten your lending standards. I don't think this goes through. I think it's just kind of Trump talking things up.
Right. Like, I don't even think they can enforce it. I mean, that's the interesting part.
There seem to be a lot of questions around whether it's legal. But yeah, maybe it creates an opportunity in the stock. So something like American Express, not that you rush in and try to buy the immediate dip. We'll see if this has legs. But if volatility picks up, could you sell some puts lower, 1-2 months out? At some point, right, those options, depending on where they are, they don't get any more expensive, even if there is still the delta move.
That's the thing about these types of things, right? I mean, this is flashback to last year. I don't know about you guys, but I was just like, what, tariff stuff? Like, come on, why is the market reacting like that? I just really couldn't wrap my head around it half the time. I was trying to be smart about deploying capital, but it was like, where's this really going to go? Well, we saw what happened. So I think if you're going to do something, you might want to take a similar approach here. Again, I don't know the answer. I don't know if they can enforce it, but I know the stock is reacting. That's all I really need to know.
Thank you, Jackie. WASD report came out, which is why the grains are all moving to the downside. They've had a tough couple of years, those grains.
Yeah. Yeah, they moved initially on the report, didn't they? All moved down.
Yeah. Yep. Harsha, Carvana call spread expiring this week, fully in the money, 464.70. Collected around $3 when I sold it, marked for $6.25. Is there anything I can do to defend it or just close and reestablish for later? Yeah, if it's expiring this week and you're right there, 460, 470 is, right on that dance floor. I think if you wanted to risk it, you can. You've got basically a fully in the money spread here, but it's moving to the upside today. If you get a similar downside move tomorrow, you could see maybe a scratch, something like that. But yeah, other than waiting, rolling it out to Feb or March, you're going to pay a debit to do it just because your long option has more extrinsic value now than your short. But that's really it. I don't really like the idea of throwing out a put spread here unless you do it out of the money, like a 440, 430. Picking up another $1, I think that's possible because you only have 4 days left. So the narrow range means it doesn't matter as much. But I wouldn't go to like a butterfly, like the 460, 450. That's when you're just kind of killing the trade, killing the pop, and now you need this very narrow range. But still 22 points of an implied move through the end of the week. So you could definitely get that downside move if there's a broader market sell-off, but that's pretty much it.
What did they push the tariff stuff last week? It was supposed to be Friday. Pushed it to this Wednesday. Is that what they said?
It's a good question.
Right.
I wasn't following
actually
that closely. Yeah.
Who knows what's going to actually happen?
In terms of and you're talking about the court decision around the legality of some of these tariffs, where we could see some stuff get reversed.
Last Friday.
Okay.
And I know they pushed it. I can't remember. I thought maybe they pushed it to Wednesday this week. I'm not sure. I just thought about that. I think that's what might have happened.
It's very possible.
That looks like it's the 14th, I think.
Yeah. See if they actually go through with it. Just another thing on the docket here.
That's a good call out.
Yeah. Circle calendar spread. Very interesting setup, similar to the other ones we did. So long April, short Feb, reducing basis by about 30% with your short option against the long. So yeah, I don't mind it. I think this one, I might wait until earnings and just throw on something like this when earnings arrive. But looks like it's not too clear when the earnings announcement is priced in here. I mean, you can see a little bit of a bump in IV for the 32-day cycle, but I think there is a little uncertainty around the exact date for this announcement, but we shall see. How about a JP Morgan earnings play for tomorrow? Bullish, bearish, neutral? Any thoughts? Really low implied volatility here. 11-point expected move on a $300 product is very low. So I personally would not be selling undefined risk premium here, given the low IV. But with that said, still a decent ratio, 11 points for 4 days versus 20 points for 40 days. So you could get something on here, probably pretty cheap, but I would just lean diagonal spread, calendar spread, something like that. You have any interest in trading this?
Not really. I'm not that excited about it. Yeah, when I look at it, yeah, I mean, I'm sure I could talk myself into a diagonal, but not really that excited about it.
Yeah, I think
I don't know.
They opened the year, they're ripping to start the year, but now with this credit card stuff, like what if it actually does go through? How does that affect? I mean, obviously it can't be good for them, but
yeah,
I think that
for
it's
sure.
a curveball. It's a curveball for these earnings. But
Goldman looks pretty smart getting rid of that Apple credit card now.
Yeah.
The charts all look pretty good, obviously, up and to the right. But, if you go through the same indicators that I use, at least from what I have on my screen here, and happy to share in other ways at times in the future, but everything's still flashing green. You've pulled back quite a bit off of the top end of that range in JP Morgan, at least short term. So if you were selling out of the money puts, to your points earlier, vol is low. I think there's only like a 3-point difference between realized and implied. It's like 30 and 27. But, you're kind of getting down to levels where if this trend's going to continue, you might bounce off of here. But I would probably take more of a wait and see approach, meaning you could miss the move to the upside. But I think you want to buy dips in these things. It's still an environment in which financials should do well, right? You look at some of the credit card related noise, the headline risk that pops up at times. I think you still want to own these companies in this environment.
Yeah. Yeah, it's a good point. I think looking at the implied volatility, like for a standard setup for a diagonal spread to the upside, 325, 335, long Feb, short the weekly, still paying $8. So the risk is definitely there. I would like to see this closer to like 6 or 7, which you would get if you had a much higher implied volatility for the weekly cycle. You're just not getting it. Again, 10 points on a $300 product is very low. For almost all other equities, it's somewhere between the 5 and 10% range of notional, which would put this at between 15 and 30 points. And we're sitting at 10.9. So not a lot of premium to offset costs on the long option. So yeah, I might take the wait and see approach here. And really, if you assume that these banks are going to move similarly like they are today, if you get a bad JP Morgan result or a really good JP Morgan result and you see the rally or sell off, you've got these other banks reporting the next day and the day after. So you could wait, see what happens here, and then play for a similar move in the other companies. I think that's a more conservative way to do it.
Or even if you want, play like Goldman for JP Morgan's earnings, because again, I mean, it will still hold up. You don't have to deal with the vol crush in Goldman. Not that I don't know how much vol is going to get crushed from here, but obviously there's always vol crush with earnings. You don't have to worry about the vol crush in whatever play you make. If you're going directional, if you care about a vol crush, then obviously go with JP Morgan. But the idea of getting the free look, like you mentioned, the free look with something that's not going to have its volatility surface change meaningfully on the earnings of another one, but it's still going to do that move, is always kind of interesting.
Good point from Jared. Bonvoy, Hilton, airlines might take a hit too on those regulations if they pass due to the point aspect. Yeah. All those companies have their credit card.
I know that, and our very own Chris Vecchio mentioned that. I mean, I think that's such a smart trade. It's almost too smart. Just go with the credit card companies. I mean, why bother trying to play the secondary thing? I mean, personally, I think the credit card company's going to move more, but what the hell do I know? But, I mean, you could just see right now they're the ones that's moving the most. I think there will be a knock-on effect when you look at the Hiltons and the Deltas of the world, but I would just play the credit card companies.
Yeah. Are we still doing the one-day SPX Iron Condors? I haven't recently, but I had a decent run at the end of the year. I think you totally can if you think if you think that the CPI and PPI will be nothing burgers, you could totally do it. I just do the same thing over and over again. 5 points wide, collect $2, close it the next morning. Yeah.
He's very low vol though. Like maybe you might be able to get 2 ticks out of it, maybe.
Yeah. That's one of the issues is like if I would rather do it if there was more implied volatility around these numbers and then the numbers resulting in nothing. Where like now you have a 30-point implied move, which is just nothing. Like 30 points you see day to day. Now you pair it with a binary event and it's more risky. If you run this 1,000 times, there's more risk, of course.
We don't want to turn into Captain Condor.
Yeah. Let's see. What else we got? Do you think the Clarity Act will make any progress this year, Ryan? I know you brought this up to start the year. If so, that should be bullish for crypto prices, and it isn't necessarily priced in currently.
Yeah, so I think last I checked that at some point this month, it was going to committee. There's a discussion around it. I don't know where we are in the process. I know it's either past the House or the Senate. I'll have to double check. But I do think if you finally get some more regulatory developments here in the U.S., which presumably we will, that's generally a bullish tailwind for crypto. Doesn't mean that the prices are going to respond to that, right? These things will get priced in. Things will become known in short order. But I think structurally over a longer time frame, like that's obviously very bullish. It's going to bring more participants to the market because they have a clear set of rules they can adhere to. There's a framework, there's an approach. And so generally speaking, it's going to bring bigger participants that maybe haven't been involved. I think regardless of when it passes, you'll get passage, you'll get clarity. But I don't know how much it matters in terms of like that train's already left the station. The ETF flows are real. The institutions are here. The adoption is ongoing. I think this just further supports it, but everything is moving in that direction.
Does seem to be.
Yeah. Looking at prediction markets, the market is not that liquid, but a lot of people saying yes, that it would be signed into law 2026. So we'll see.
Yeah, so what I'm seeing as of the 11th, this is from CNBC. 2 Senate committees will hold hearings Thursday to work on their parts of a crypto market structure bill. There's been some back and forth as to how DeFi protocols will be treated, I believe, and developers of these protocols. So there's some nuance to it, but I do think that we get something this year. And sooner than later, I would probably target the first half of 2026.
Love it. Zebra trade on target, 91.05, trades up 55%. Would you roll up the calls and lock in the profits? I'm still expecting more of a move up from here. Yeah, ratcheting is what we call it, which is if you're in July, the 91.05, great trade. So you're in for $3,000. Yeah, you could close this and just restructure it for more near term, or you can move it slightly out of the money. You can do a lot of different things, but yeah.
What are your thoughts on selling one of the in the money calls and rolling that up? I've seen people do that too. I mean, personally, I've usually just kind of closed and restructured, but there's a school of thought of selling, one of those 90s and going wherever you want to go. I don't know.
Yeah, so getting rid of this.
Yeah, and then just buying another upside or something. Yeah. Based on whatever your thoughts are.
Yeah.
I don't know what you guys think about that. I've done it once. I didn't really love it. I don't know.
I mean, an in the money spread like this, I would rather just close the whole thing and just restructure a near term one. But to your point, it's like now you have a 200-day call spread that has $900 of risk, $590 of max profit going forward. It's basically a put spread in that sense.
Yeah, and say you bought, and then you bought but you'd still have that call spread, and then you buy the 115, let's say, or even Yeah, called the 115. So now you've locked in pretty good profit.
Yeah. You reduce risk
Less
by
risk.
like $1,400,
Right.
something like that. Yeah, totally possible. I mean, the whole idea is just getting that unlimited upside delta. If you close this and you went to like a near-term Feb one, like what does this look like? $1,100 for the same 100 delta to the upside. So yeah,
A third of the risk on that.
yeah, lots of different ways to slice it. But yeah, great trade, especially if you got in sub 90. Great trade.
Target. They're out of the woods.
Target. Bought long dated 260 COF calls this morning. So yeah, playing for a reversal.
COF. I did just look. I mean, you could do a diagonal for a little under 5. You do the 240 in Feb and sell the 250 and the Jan 23 expiration, $5.48 if you want.
Yeah.
It's
Definitely possible. And yeah, to Ryan's point, like this is an absolute gift. If this doesn't go through and you get back up to highs, 6% sell off on news that might not go through.
I want to wait. I want to see if it is follow through. That's been my new thing now. I just want to see if there's follow through. Is it just a one-day move? I want to see if there's some real follow through.
Yeah. But either way, if you throw this on and you're right, or if it just reverses a little bit pre-earnings, your debit paid is well under the max value. So this is a 10-point wide, $1,000 max intrinsic value. You're paying $548. So even if you got the reversal prior to earnings, you would still make a couple $100 in this trade, even though this short option would appreciate against you, just because your debit paid is well under your max intrinsic value. So something to keep in mind. But yeah, if you think it'll reverse pre-earnings or it'll rally on earnings, you're getting a nice setup with this sell-off today for sure. Delta Airlines, they have earnings tomorrow. Yeah. A little bit better of implied volatility here for $4.50 on a $70 stock price. Still pretty low, but it's over 5%, which is nice. And this is a $70 price point. So yeah, you can get real cheap here. Upside or downside, you're probably looking at like a $3 diagonal spread or a $3 cost, $4 cost on a diagonal spread that's 5 points wide. If you want to lean directional in either way. But I think I'll be hands off until the bigger names come out, personally.
Agree.
Silver, 71 strike put, 39 days out.
What do you want to do?
Yeah, I mean, the only way I'm doing this type of trade is if I'm taking stock at 70 or 71 here. You are collecting 5% cost basis reduction on your short strike, which is nice. Collecting 370 on 71 strike where your intrinsic value starts. Not using that much buying power, $800 is very palatable. But personally, I'm still just leaning to find risk here just because this thing has been so nuts. But yeah, if you're trying to acquire silver at 71, I think it's okay. Where do you think silver is going to go?
I think it goes higher. I think there's real reasons structurally in the market for that. When you take a look at, supply demand imbalance where there's more demand right now, you're seeing squeezes in this just given how volatile it's been and how much, attention is on the market. But I also think you're in a macro environment where, if we look at industrial metals, not just silver, but copper, we look at platinum and others, there's those demand drivers there. It's a market environment that should support it. So tough to say where it goes, but given like what we're seeing at times are just massive, volatile, squeezy types of moves, maybe you get to 100. I think this is a market where you definitely want to be participating. I just wouldn't chase at highs here. You're up 7-8%. You might be down 5% the next day on your way to that next 10-20% up if that's where we ultimately go. So I would personally Just wait to see if you get a pullback, see if you fill that gap. Do we get back down to like, I don't know, I'm looking at the ETF, SLV, but in that ETF to get down to 73 or so, I would just look for some pullback and then sell that put spread. I think volatility is going to stay sticky here. But in terms of just the price action, yeah, I think, until the market and what might be driving this shifts, I think you have to, or, the way you want to lean would be to buy dips.
Yeah. HG officially has reversed the entire move early August, which is nuts.
Amazing.
The vol in silver is crazy, though. That's the thing that I really want to call out for people. When you look at what's happening in realized terms in gold versus silver, silver realized vol on a 30-day basis is like 70%. This is trading a lot like crypto. So if you get a pullback, it could be huge. And that's, I think, to your point earlier, patience here. I'm talking about not chasing it to the upside, maybe wait and see. But I do think that you'll have an opportunity to enter a position, and I think it could go higher.
Yeah. And I think it gets more legs, especially when it spans through all the precious metals. And when you think of silver, gold, platinum, copper, whatever it is, like it's moving to the upside. But yeah, to your point, Ryan, I think it's always very interesting to me, like when you have this divergence. So silver implied volatility, realized volatility, super high. Silver is reacting, and the pricing and implied volatility is significantly higher than gold. But gold never really, like even into this move, when we went from 300 to 400 plus, gold implied volatility was still very low. So like if it's coming to selling premium, I'd rather sell premium in silver versus gold, because gold you're still at 25%, and this thing is still moving. So just something to call out from a strategic decision standpoint. Always got to look at implied volatility with IV rank. Like yes, gold's IV rank is high, but gold's implied volatility is still very low, especially when you compare it to silver. One last question here. Can you explain why you trade diagonals when you look for a debit that is half or less of the width of the strikes? It's not necessarily that we look for it. We want to make sure that we're paying under the width of the spread, just so that we have no risk in that direction if it goes fully in the money. But if it just looks better when you're paying half the width because your max profit's higher. And generally speaking, if you go longer term, like in GLD, if you look at long March, short Feb, you're going to get into spreads that look a lot better than long Feb, short the weekly. Unless it's an earnings report. If it's earnings, we usually will sell the weekly cycle and buy or inventory delta in a longer term cycle. But just looking at gold, like long March, short Feb, a 10-point wide is $8, but a 20-point wide is $12. Like I'd rather get into this. I'd rather do the 20-point wide, pay up a little bit more, just because I know my max profit's going to be significantly higher if we do get that rally. But really the key is just making sure you're paying under the width of your intrinsic value. That way you have no risk in the money side. I think that's it. We're out of time. Thanks for tuning in. Tasty Crypto does have a newsletter, so check that out. I will put the link in the YouTube chat right now. tastycrypto.com. You can find it on the homepage as well. If you want to reach out to us on Twitter, you can always find us there. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Ryan is at Ryan Fred Grace. And give Tasty Crypto a follow as well. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Love to see the Bears. Love to see the Bills both advancing. Incredible stuff.
Great stuff.
And tonight's game will be a fun one as well. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then.
Peace.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof! Take one. Hey, baby. I like the looks.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Let's celebrate, dance to the beat. Forget the walls and stomp the feet now. The fun and games and memories I love to share with my family. And everything is better when we get together. Everything is better when we are side by side. Hey, side by side.
What is going on, everybody, and welcome back to Risk and Reward. The banks are tanking, crypto is popping, we got volatility rising and falling. The market cares not about such frivolous things and moves higher. I'm joined today, as always, by my wonderful co-host, Errol. How are we feeling? What's going on?
Feeling good, feeling great. I think a little bit of the Chicago energy has spilled off onto me a little bit since the cheese has been grated. So
Cheese has been grated.
Heard a lot about the city last night. It was pretty loud last night, so it was good energy all around, even though we're going to hit on some of the banks and crypto and things like that, but doing well. What about yourself?
Yeah, absolutely. Yeah, I went out for the Bears game with a large group of Bears fans
Nice.
on Saturday night.
How was that?
It was a lot of fun. Yeah,
Yeah.
obviously I found myself rooting for the home team, even
Okay.
though I don't truly have a dog in the fight.
Yeah, it
but,
happens. It
you know, good to see everybody happy. And then yesterday I discovered that my upstairs neighbors are very much 49ers fans.
Okay, no way.
It was hilarious. As I was watching the 49ers-Eagles game, anytime the 49ers broke off a big play, they would start start going crazy above me. And I have never once heard my upstairs neighbors before, save for like 2 times when they've dropped things on the ground and I've heard things like bounce or whatever. But yeah, I could hear voices very clearly shouting some profanities at the television. So congratulations to my upstairs neighbors on advancing in the playoffs as well.
I take it they're advancing right now. I haven't been keeping up with the 49ers at all. Based off of what you know, how are they looking, into this playoff rounds?
Yeah, looking good. They've been very injured. They've had crazy injury bug all year. Has kind of been the prevalent issue. Particularly the defense has been really banged up, but they just keep on finding ways to win games, even with the replacement pieces. And now they're on to the second round. So your Broncos get they get the Bills.
I'm excited.
Is the second?
We needed the first round bye again. We've barely been getting by, so I'm looking forward to it. I was trying to call it maybe some Bears Broncos action. That would be wild. But I'm hoping for it.
It's certainly looking more plausible by the day. But I will throw out a fun fact for anybody out there who's interested. Puka Nacua has never in his life, high school, college, NFL, ever played a game in sub 40 degree weather. It's a high of 18 degrees here on Saturday. So maybe fade Puka Nacua a little bit. That would be my advice there. Congrats to neighbors of Gus. Yes. But yeah, we got some excitement in the market today. Banks are tanking on the news that Trump is looking to limit credit card interest rates to 10%. Interesting implications, sweeping implications, should that pass. Some of them good, some of them bad. On one hand, I totally see the view that perhaps credit card interest rates are a little bit predatory. On the other hand, should this get through, it probably means credit cards cutting down on benefits, maybe less miles being awarded for your airline cards, things like that, as credit cards have to tighten up a little bit as incomes get cut down on there. So yeah, banks are sliding. Pick your bank. It's down today.
Pick your bank.
Crypto rallying a little bit in lieu of that, and then also the buy now pay later services, much to my dismay, are catching a bid today. As people believe that maybe they will start to be the big dogs in the market here, especially if credit card companies get more aggressive with declining people on account of not being able to gouge you should you miss payments. And then crypto rallying a little bit in light of all this news as well. So. Interesting stuff going on.
There we go. In light of all the news, we got some crypto coming through. So looking forward to touching on some of these banks. Maybe we get some increase in volatility, maybe some juiced premiums, maybe some opportunity out there in that sector that we can look at, keep an eye on.
Yeah, absolutely. And then I got some winning trades coming home for me as well. I guess 120-ish days ago put on a set of trades that are all coming to fruition here for me. So
nice.
Very, very pleased with that. And among them is the position I have had in my portfolio for the very longest. It's a Nancy Pelosi trade on VST, which has worked out swimmingly for me. No chance that does not get home. It would take something catastrophic to blow this before the end of the week for me. So
it's a nice.
I'm a happy keeper.
Yeah, it's a nice. What is this? The second full week of the trading year that we're getting into. So it's a nice start to the second full week of the new year. Got some names coming through. As we do that, I guess we can take a look at some of these names too.
Yeah, let's do it. We can hit the run around here. John Deere is one of my big winners here. Yeah.
What you had going on over there?
I took a short put vertical 151 days ago. It would seem they've rallied out. Let's see, 151 days ago. My public school math tells me that's 5 months. So that's my public school math tells me August.
What was that ticker for John Deere again?
DE. Was it DE is the John Deere ticker. So yeah, it was this August 13th. It eludes me whether this was a bad earnings report or exactly what the catalyst event was, but took a big gap to the downside and I got long, had to sustain, and I mean really sustain some drawdown, but we finally were able to get those back up and into the money. So SPX starting with high of day for the third time. Nancy Pelosi trade salute emoji. Yeah, Nancy Pelosi, her retirement is going to have legitimate impacts on my portfolio. not being able to blindly follow everything that Nancy Pelosi does anymore, but I'm sure that I will find the next greatest trader in the world and nothing more. Not making any accusations. These people are just really, really, really good at trading.
No, I see the third all-time high SPX over here we're trying to pull, but we can go ahead and pull up the Tasty Trade platform over here and we'll take a look at it at the same time. But John Deere, okay, wasn't expecting that one to be on the radar for the beginning of the year, but we'll take it, right?
Yeah, John Deere was one that I just caught on the Tasty Fast Movers list.
Okay.
On that day, it had really taken a dive, and it was one of these trades that I love so much, where I don't even really do an ounce of research. I just say that's got to be too much, and I get long.
Like it.
And it's worked out swimmingly. I have a 440, 450 short put vertical, I believe.
Nice.
Yes. So yeah, well over 450 now. Obviously,
Nice.
that was pretty much at the money when I put it on, but there was juice premiums to the put side after that drawdown. So yeah, please
Makes
do
sense.
that.
What else catching your eye over there?
And then VST is
EST.
That's my Pelosi trade. We'll need to zoom out on this one so you guys can get the full. Can we go like year long here?
Yeah, let's zoom out a little bit further. A little bit longer than a year, or just 365?
Yeah. 365 is good. Or yeah, let's flip to like a 2-year time.
Okay,
frame.
we'll go to a
just so we can
do a 1 day, 2 year.
Yeah, so we've run down, but I put this on close to the beginning of last year. I've had this on for 319 days, so that's like early March last year, and it just went straight to the upside. I mean, there was
only ripped.
Yeah, drawdown with Liberation Day, and then since we've come down a little bit off the highs, but I have a ridiculously in the money vertical on this one. I'm at 105, 110. So trading at 174. Very pleased with that. And then I also have a position on Pinterest, which is pins, P-I-N-S, which is coming right down to the wire here. This one I have a 27.28 short put vertical. So we're right there in that range. This was a much shorter dated 168 days, which is that giant gap that you're seeing on screen there in mid-October. And we have not really successfully rallied out of that gap yet, despite the fact that I took pretty generous strikes towards the bottom of it. So we'll see if we can get over 28 by the end of the week on Pinterest, but that'll be something I'm monitoring closely in the coming days.
I think Pinterest is still one of those applications that is probably one of the most underrated when it comes down to like inspiration, like visual inspiration on a specific like theme that you're looking for, whatever it might be, or if you're even like looking for furniture. And then it gives you the algorithm for Pinterest is really good in terms of giving you things that are very similar to what you were kind of looking for. But it goes so overlooked because Pinterest, who would have thought?
Yeah. And I believe Pinterest has tried to, and fairly unsuccessfully tried to make some moves to find other revenue streams outside of advertising. It's pretty much the only way that they're generating revenue
That's
right now.
what I thought. Is that the case? I haven't really looked too deep into it, but I don't know where else they'd be squeezing a buck out of.
Yes, and it seems very logical that they would, and they have tried to integrate things such that you affiliate links. Like you're looking at something.
A ton of affiliate links.
Yes, you're looking at a picture of bedroom inspiration, and then on the side there is a bunch of Amazon or Wayfair links that say get that dresser, get this bed. And I believe that they've tried to integrate that. It just hasn't fared as well as they thought.
Yeah.
So I don't know. It seems like a great idea.
Yeah. Hey, it works really well on the user end. I don't know about like from a business perspective how profitable that is for them, but I mean, pretty solid model they got there.
What was Nancy's P&L for 2025? Just P.
You don't even want to. You don't even want to know. You don't even want to know.
Just P.
I just seen the comment.
Hold the
That's
L.
good.
I can figure that out real quick.
Just P. Hold the L. What was Nancy's? Well, yeah.
Let's see. Nancy Pelosi. She's up 845% since 2014. So last 10.
You know what?
11
That's a little
years.
bit more modest than I would have thought it was going to be.
Yeah, I mean, an 8x though is pretty.
No, that's nuts.
Pretty significant. I can't find anything on a perfect percentage basis this year, but she's up $6.2 million in 2025.
Okay.
So pretty good.
Again, that's
just really good at trading.
Yeah, amazing. Shout out to Nancy.
Just over 50% for 2025. Yeah, that sounds about right. Yeah, because she slings options, which I respect because she's such a great trader. She slings options.
Just P hold the L is such a fire joke. Like, don't let that one just be slapped.
No, yeah.
That was so good. With that being said, though, only thing exciting on my end for the day, at least, Gus, is Netflix. We're kind of on the dance floor there, sold an out of the money put spread. The 90 strike that we sold is being tested right now. So we're going to just have to be a little bit more patient in there. 39 days left to expiration. I don't know if you've heard anything more about the Warner Bros. Situation, but I haven't so far yet. And kind of just trying to ride a little bit of the volatility on that end, but sitting patient in the Netflix position. But That's what we got going on this end.
Yeah, I'm happy you bring this up because Paramount has sued Warner Bros.
Okay.
It has happened. So I would have actually expected the market to respond positively to Paramount, as generally the market likes when you get more aggressive with your takeover, try.
Yeah.
But it has worked out the other way. Netflix slightly green and Paramount slightly red on the day. But yes, Paramount has sued Warner Brothers, and it's actually not an insane lawsuit. They don't want money or anything. The lawsuit is just that Paramount believes that Warner Brothers is withholding details about their package from their shareholders to try to, get them to vote for Netflix instead. So Paramount is simply saying, at least they claim to simply be saying, you got to tell your shareholders everything that we're doing here, so they can actually make an informed decision.
Yeah.
So that's what the lawsuit is. I would imagine, I have not checked, but I would imagine that the odds for this deal not to close by June of 2027 have increased amid that lawsuit, because I'm sure they're going to have to shake all that out before you can actually choose a suitor for this now. I'm still not sure when the formal vote is, the shareholder vote is for who they're going to go with here. If anybody could give you that information in chat, that would be great. I've been really in the loop with everything except that one bit of information. But yeah, Paramount is going nuclear. They have chosen the nuclear option and are suing the company that they are trying to buy.
They're not going down easy. Nancy Naked Calls is an awesome metal band name, by the way. Nancy Naked Metal Calls.
Yes, and Steven, you are correct. She mainly buys calls, and she buys very deep in the money calls. Like, she would take, what's Apple at right now? She would probably take an Apple, 100 strike call right now.
Okay.
She got money to throw around.
Yeah,
the premium ain't
My
no
bad,
problem.
Nancy. I was
She
not
wants that thing to
familiar with
stay
your
in the money.
game.
Yeah, but she will go naked calls, which is crazy to me, because you got to be pretty convicted about something to go with naked calls. But of course, she's the oracle of finance.
Oh, she's on the tail end.
Better trader than Warren Buffett, so I would never doubt her convictions.
Tail end of her career, she's going out with a bang.
Yes, and big deal. Yes, to your point, I think her husband might be even better at trading than her.
That is funny. No, I mean, with that being said, we can take a quick look throughout the watch list, high options volume watch list, see if anything sticks out to us. Maybe we can get on some long or short delta as we start this week, see if anything sticks out before we jump over to the TradingView platform.
Yeah, CoreWeave is printing for me today.
CoreWeave?
That's the biggest winner in my portfolio today. I still have some legs left in those contracts, but
What's
I
that
see
again?
it's jumping off that movers list. CRW.
CRW.
Yeah, catching a nice move today after some drawdown, but. Yeah, finally.
Massive move on the day, yeah.
Yeah,
massive move.
Swinging back through.
8-9 points.
Yeah, on this one I have two 80-85 short put verticals, so
nice.
Over 85 were solid, and that was looking a little bit sketchy before this move today. So now I'm just in the ever so joyous boat of praying they can hang on to these gains, which companies seldom can. After having a day like this, you're usually pretty prone to a red day to follow. But we'll see.
That's nice. I mean, literally the first 30 minutes of market open on CoreWeave, we went up about 8-9 points, and literally the first 30 minutes of market open. So that one's gonna be sitting nicely. You can be really patient on that one.
What's up with the ag commodities here today? I haven't thought about ag commodity. Can I get ticker cow? Can I get the chart on ticker cow?
Ticker cow. COW.
Yeah,
for real?
COW. Yeah, it's the agriculture, one of the agriculture ETFs.
I got nothing on cow.
Oh,
COW. CW maybe.
Right now. No, that's COW.
COW. Cow.
Not crazy. Cocoa, coin, soybeans, all getting hammered. Corn is the other one. Corn is a corn ETF.
Is that a corn ETF?
Yeah.
There we go.
There you go.
Yeah, getting absolutely slobbered.
Yeah, I don't know what the heck is going on with this.
Zoom out a little bit.
Crazy sell off on corn. You want to? There's lots of cornfields around here. Well, I guess it's not harvest season. How can we get our hands on some physical corn?
Yeah, because
let's say for the grocery store, they're marking me up. I want bulk corn. I want dump truck of corn. How can I get it?
Is silver still pushing? Yes. Let me log back in over here. Yeah, let's take a quick look at silver. I know silver made another high, so I know we breached the 83 level. I think it barely reversed that. I think last week.
Thank you, Mo Trader. Waste report bad. Oh, what? WASDE. WASDE. Department of something there at the end. I'm gonna trust you guys know what you're talking about. Agriculture, yeah. There we go. WASD report. I'm with it. More supply on the market and larger projected crops, along with decrease in feed demand. Decrease in feed demand. Dump truck of corn. I just want a dump truck.
Did you have any thoughts on this silver over here? Absolutely insane move. So we had the pullback. It's not over. We started to consolidate a little bit. And then now this morning, we're taking all-time highs once again on silver. We can take a look at platinum here in a minute, some gold and copper and those things, but silver is still putting in some astronomical numbers, some numbers we haven't really seen before. I mean, movements we haven't really seen before. We've never seen these metals with so much tenacity to the upside.
Yeah,
we've seen
good
on
word.
silver.
Good word, tenacity.
Tenacity.
Yeah, no, this is it's insanity. I mean, my thoughts remain unchanged. Every time, and that's the thing too, is every time silver makes a higher high, it's not like, SPX right now, where it just keeps eking higher and higher, and it's this slow grind up. I mean, this is vertical. This is a vertical line. It has just continued to stay a vertical line for now going on 3 months, which is completely bonkers to me. I don't know. Honestly, my thoughts are that the voice in my head telling me to get short is coming back. And I'm so scared to do it. But is anybody long silver? If we have viewers who are long silver, I will happily get short silver so that you guys can win your long trades, because I haven't been able to time this even a little bit.
Yeah, no, let us know. Let us know what you're doing on that end. I know we'll be keeping an eye on gold. Gold isn't as volatile, smaller product, smaller multiplier on the contract. So whenever we see that crack of weakness, maybe whenever it looks like that top is being put in a little bit more on some of these metals, maybe we can look at gold or something like that. But until then, I feel you. I feel you on the short sentiment, because I'm kind of in the same boat as well. So it's going to be an interesting week for the metals. It's difficult knowing where to get involved, but we might be able to catch something. So we'll be patient on that end. Gold trying to pull back a little bit more here now. You're long silver base. I mean, being long silver, kind of sounds like the move. It sounds like being long in general was kind of always the move, even, over the last few days as well, based off of all the uncertainty and us just sitting near those highs. But such a tough long to pull the trigger on, you know what I mean? It's like we were able to catch some of the volatility, but sitting through that long was a tough one. So, I don't know. Maybe we squeeze out maybe 90 on silver. I don't know, but we'll be on the sidelines being patient for it. It's one of those where it's like the risk to reward. It's like the run to the upside is just insane. It's hard to fathom it, but the risk to reward is also so skewed out of your favor. It's tough to pull the trigger. But if you want to be in, you probably want to be in long, I was short silver last week and split when we decided to become Venezuelan oil dealers. I mean, even sitting through that, right? Sitting through the news on Venezuela, that's a tough trade to sit through. With those geopolitical events going on at the same time.
Absolutely. And I saw Exxon is getting whacked a little bit today on that front.
Okay.
Trump said something negative about Exxon. It's XOM is the ticker. I can't remember if somebody could just XOM. If somebody could give me that exact Trump quote from this morning, but it made me laugh. He said Exxon is being babies or something like that. He said they're too needy. I forget what his exact vernacular was, but it made me chuckle. But yeah, it's some not so kind words from the president in regards to Exxon today. Sold a put in SLV. I have a zebra in SLV. All right, guys, I'll get short silver, and I will keep this going up for all of you. This is enough. I'm gonna try it. We'll do something small, and I kind of want a flyer because I feel like when this comes down, it comes down hard. So maybe like a naked 65 put, and we'll go kind of aggressively dated. Like, could we get I don't know, what's like a 32 DTE 65 put going to cost me?
Well, yeah, what's it going to run you right now?
$1.50. It's a little bit aggressive. What if I come into the 25 DTE?
Short put green and silver, probably going to get out tomorrow if you can. Nice range. It's pretty solid positioning. I mean, especially if you caught some of that run.
Yeah, good looks. And yeah, base 8. Congratulations to you if you have a zebra in silver, because holy cow.
Yeah.
that had to work out really well, and I totally agree with the selling a color call against it today. Might as well start to lock those in a little bit.
Oh, yeah.
Yeah, long put. I'm going to go naked 65 put, gamma play, 25 DTE, which is February 6th.
Nice.
$1.18, 118 notional. Boom. We're in. All right. You're welcome, everybody. Silver will continue up through February 6th.
Let's go. Those are more record numbers to put in.
Yep.
More record numbers.
This is I've tried this 2 times. This is now my 3rd time trying to short silver amid this run. One of these times I have to be right, but I would have to be very right to cover what's already gone out the window.
I mean, man.
Will they mine human bones for oil in the future instead of dinosaurs? Actually, a very interesting question. How long does it take something to fossilize? It becomes the more prevalent question there, because it's not just bones. It's fossilized organic matter.
Oh, yeah.
Can it be any fossilized organic matter? Like, do fossilized plants also count? I must say, I actually don't know much about fossil fuels.
I'm just creeping around in this orders chain right now, just seeing what some of these contracts. Yeah,
I'm long core weave ranch to answer your question. But I'm defined risk at 85 basically. As long as it hangs over 85, I'll be fine. Was tempted to get undefined risk and or just a little heavier in these longs, but couldn't quite get there with the doldrums that this sector was going through at the time. But obviously now that I'm catching the bid, I'm having a little bit of FOMO there.
Look at this chart.
Still sitting on puts in the low 60s. I just joined you, BDH. 65 puts have hit the account.
Look at this chart. Absolutely wild.
Selling puts. Oh, I see. Been selling puts on silver and gold, 30 delta since June. Only assigned one lot, and I'm now up 100% on that assignment. Nice. Yeah. I mean, yeah, it would be hard to be wrong if you were long silver at any time in the last 3 months. I respect anybody who was willing to get long. And since June, as you were seriously ahead of the move on that one, I respect anybody who was willing to get long like in December when I was aggressively trying to get short. Because you had to have some cojones to go after that with the run that we were seeing. That was quite parabolic.
You know, I don't hate the at the money call spread on SLV. I don't hate it. You got a little bit extra time, got a little bit of a cushion. It's a credit, so we have a little bit more of a cushion because of the break even. I don't hate it.
Most oil is actually plankton. Most oil, I think, is plants. Fossil fuels is a mistruth. Interesting. I was on track to become a petroleum engineer for my first year of college, but I never got to any of the actual petroleum classes. It was just a lot of Cal 2 and physics.
Go 169. See if we get filled on there. There we go. We'll get filled on SLV, so at least we have something in there.
So what you just got long?
No, I just got short. Okay. So I sold a call spread. I mean, I'd rather get long, but it's a tough one to get long in. So to not be as directional, just selling a call spread just to get some short delta on it, even though it would have been tough to use the contracts.
Now you get to feel the pain that I have felt 2 times already. Is this thing just gaps higher every single day somehow for the rest of time? You know what? Silver to 1,000, SLV to 1,000.
No, this thing. I don't know, maybe 1,500 actually. Maybe 1,000 is a little light. I'm just kidding. I have no idea. We'll see.
We drew the moon on the gold chart like 2.5 months ago now, and we thought it was hilarious when the moon got passed. And I forget what that moon level was, but it's probably been like tripled at this point. Yeah, it's insane.
This definitely feels like it's getting to like mania type levels. You know, in some of these metals. So
yeah, I mean, it's what I keep saying. It's just like it's so odd to me that it doesn't even ever take, more than like a day to breathe. We'll have these little drawdowns. Even when we get the drawdown, those candles just immediately reverse back into, green candles. We open down and then move green, and then it's just green for even longer. There's never been like a 1 week breathing period in silver at any point throughout this run. And I don't know what's doing it. It's insane. But yeah,
it's nuts.
Massive congratulations to anybody who's been getting long through this whole move.
Especially if you have on the silver contracts, because if you have even on just a micro, the way that silver is moving, your contracts are moving very favorably in your way. So no, with that being said, I know we're running out of time here. Anything else top of mind? I know we got metals for the most part, but I don't know. Anything else sticking out?
I don't know. Starbucks catching a nice move today.
Starbucks.
We can close with that. Little
S-Bucks.
S-Bucks. Yep.
There we go.
Yeah, finally catching a little bit of a sustained run. I have a 75.80 short put vertical on this one, and just forever it was just going right in the middle of that range. And every time I got excited, it would move back down.
Nice.
We finally strung a few good days together here, and I'm feeling good about those. I was never really stressing. They're still 157 DTE. That was a dang. I put those on 210 days ago. I feel like that was a very recent trade. Time.
As legend has it, Tom put it all on silver. That's why. Yo, if he did, good lord, because he probably has his own reserve himself. The way silver's been moving, so
no kidding.
You're just in SLV. Yeah, we'll see. Again, it's gonna be a difficult one. Maybe we take advantage of the futures contracts. It's just it's a very directional product using the futures contract. It's a very large product too. So
but a zebra and SLV is synthetically going to be fairly similar to if you were to attack the futures directly.
100%.
So.
That is true. But that multiplier on the futures contract, I will say, is very aggressive per point. And then I think the delta would still kind of soften the blow a little bit if it was a zebra. I learned metals and equity index and gas and
That's a good synopsis. That's a good synopsis of what we've covered today. Thank you, Evie.
Yeah. No, but that's going to be it on my end. We'll be babysitting this Netflix position. We'll see if any more headlines comes out about Paramount, Warner Bros, and Netflix, the whole 9 yards, and then this metals. We'll
one
see
of us shall win and one of us shall lose, and then the Paramount Netflix.
Which one does it get? What
debacle?
You're long Paramount.
I'm long Paramount.
Long Paramount.
We're along the competitors here.
Everything's going to go up.
Yeah, or this lawsuit will make everything stagnate, and neither of us will get what we need.
And if the economy stays the way it is, everything might just go up, bro.
That's
so
true.
I think it doesn't
That's
even.
true.
As long as you're in a boat.
Stonks.
As long as you're in a boat.
Peak stonks environment. As long as you're in a boat. All right. That's going to do it for us today. Thanks so much, everybody, for coming to hang out. We seriously appreciate you taking the time out of your day. We never take it for granted. Errol and I'll be back here tomorrow, same time, same place, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power Hour coming on next. We will see you guys next time.
It's option Jive. It's time for an option Jive, and we got my man Kai in the house. How are you, my friend?
I'm doing great.
Good to see you. You were a little bit under the weather. You had that mysterious flu that's going around.
Yeah.
3 weeks is about how long it takes to stop coughing. How was yours?
The whole family was 2 weeks.
2 weeks. All right.
The whole family, yeah.
You guys were overperformers. You guys did better.
Yeah. Starting from the little one and the older one, my wife, and me eventually.
Yeah.
We got everyone.
Yeah, it's crazy. Well, what do you got for us today? I know we got an option Jive that we're looking at, and you did a great market measure. We'll be doing that at 9 o'clock. Good work out of you. I just want to tell you that ahead of time.
So this is the first piece in the new year with you guys.
All right. Well, let's do it. Let's do
All
it.
right.
Research Corner.
Research Corner. Something happened last week. Not too much, but definitely positive for the stock traders. Hit record highs for 3 out of 4 indices, except the NASDAQ.
That's been your underperformer, if you can believe that, at all-time highs. Did you have the NASDAQ on your bingo card?
that's
That would be the underperformer. If I told you 3 of the 4 indices that we watch are going to make
Also, probably the first name pops out.
Exactly.
Russell's
Same
the
thing.
strongest.
And it's
Even
the strong.
today.
It's just amazing. It really is. When you least expect it.
Yeah,
kind of thing.
exactly opposite. Actually, small caps outperform all the other indices. It went up almost 5% last week.
Yeah.
And also other sectors like energy, consumer, discrepancies, financial, all did very good last week.
Yes.
And the second one is the job reports. It's kind of mixed signal for the Fed rate cuts. So higher probably they expect the next cut is probably going to stay the same rates. Because all of these economic news.
I haven't looked at the Fed Watch tool in a while, but last time I looked, it was something like 95% that there's
was that before December?
Yeah, it's still 95.
Still 95?
95? Okay, all right.
End of January.
I mean, bonds haven't moved. I figured that number hadn't
No,
moved.
not at all for quite a while, right?
That's been the dead product, the bonds, really. I mean, if you've just been, I know the Ivy rank is relatively low in there, but if you've just been selling premium in the bonds, it has gone nowhere.
Yeah, unfortunately, I allocated more portion in my 401k to the bonds, and after that, it just
you went with the genius model. You knew what was going to happen with interest rates and
stock market's so high.
Got it.
Right.
Well, you might get paid. You might get paid.
my goodness.
Maybe you're just a little bit early, skosh early.
Hope so. And so last week or in the past 2 or 3 weeks, the commodities probably has the most volatile moves: copper, natural gas, precious metals. Of course, this morning, gold and silver increased a lot too, like 7% of silver again. So these are
84 and change.
Yeah,
silver, nuts.
Wow.
It almost flirted with 86. It's 84.25 right now. So definitely up around 6%, 6.5%. Gold up 2.5%. But again, all-time highs. Nat gas, on the other hand, has been one that has been going lower. It's been going the opposite
getting close
direction.
to $3. I didn't check the price.
Yeah, 320 and change. It traded down to 318. Yep.
Yeah, and the Supreme Court decision is actually pushed to this Wednesday. Expected. Who knows? The interesting thing is last Friday in the morning.
But volatility had stayed low all week long going into that, almost like volatility knew that they were going to kick the can down the road, which is what I said on Wednesday or Thursday. I'm like, volatility should be higher here with this decision on tariffs that we were talking about to be made. And now it seems like volatility, and I know the E-mini S&Ps are down 40, so let's see if volatility stays in this area if E-mini S&Ps in the market ever rally, going into Wednesday's number. I think it's going to be going kind of sideways to a little bit lower, but we'll see.
But the VIX 1D and the 0DT price
they did
really
pop up.
reflect in that risk.
Yep.
Because before the 9 a.m., the premium was much higher, like a 30% higher.
Yeah.
They bid volatility into Thursday, which the 1D VIX is 0 in 1 day. So they bid it into Friday. It wasn't on the indice level because 30-day implied volatility VIX, which is the VIX, didn't really move. But people were protecting themselves into Friday. And then they smashed volatility
immediately
in 1 minute.
In 1 minute.
In 1 minute.
You're right. So the expected move has been around $25 on the E-mini S&Ps pre-market. It's $25 right now. It went to about $35, $38.
Oh yeah, exactly.
For that decision. Then when they came out and said we're going to kick it down
which was 30 minutes after the open,
it went down to 25 again.
9 Central was when we were supposed to.
Not only the premium was much higher, and also the break-even point is like 25 points much wider.
Yep. I said it on the show. I said, you Cowboys that...
I heard your comment that I took off majority part of my 0DT. I just leave one contract.
Yep.
Because I didn't realize. I check all the news. Like I didn't see that one. So why the premium becomes so juicy compared to the first 4 days.
Yep.
Yeah.
And I held that.
Glad I can help you. Don't worry about it. You keep the money. It's fine. Don't worry about a thing.
So
Don't
the
worry about a thing.
premium.
But I appreciate the shout out.
The premium dropped like from 540 to 350 like in 1 minute.
It was crazy.
Yeah.
Yep.
So
I had to use that line with the kids on Friday.
Which one?
You don't take my losses. You can't spend my profits. Because I was sitting there and I was showing them how to like buy stock, and they were giving me like stock tips.
Yeah.
They wanted to buy like Palantir. So I bought 100 shares of Palantir, and they were like, "You just put like 17,000." And I was like, "It's not going to go to zero." Blah blah blah. And then I closed it like 2 minutes later, and we made like $8 or $10 or something.
Yeah. They want you to split it around the room?
Yeah, they were like, "Oh, that was my idea." I was like, no, that's not how it works, gentlemen.
True.
So this upcoming week, next slide, we have some economic reports tomorrow and Wednesday. And also we said again, the expected court decision is going to be on Wednesday. And very importantly, the new earnings season start this week, starting with the banks.
Yes.
We have tons of banks and TSM.
TSM, a big one too.
Yep. JP Morgan and Delta Airlines for tomorrow morning.
Oh, that's right. Yeah.
Very good.
So from last week, very different from the week before. The week before, all the indices. Can we go to the next slide? Down like a 1 to 1.5%. And the last week we're up like from 2 to 4.5%. 4.6%.
There's that big move in the Russell that we were talking about. You would think that would be the last one to make all-time highs, but
it's been pretty good for Russell for 2 months or so, right? 2 to 3 months.
Yep.
Start to catch up eventually. And talking about the expected move was 1.1% from the week before, from last week, but we actually ended up with 1.6%. Definitely some move in between the Friday. And this week, we still have the exactly same VIX. I'm checking the yesterday, and also the same percentage of the expected move, 1.1%. 1.1% is nothing.
Yep.
You're right.
Very low relative to what we've seen over the last.
Yeah, so got to be careful.
Yep.
And the next one, the IVR. IVR is kind of mixed. The equities is kind of unched. I wouldn't count like 1 or 2% IVR as a big change. Bonds, euro down to 2%. This is actually pretty low right now, the lowest in the past year. And as we said, the commodities, precious metals, gold didn't change that much. Natural gas 74%, which pops out, and also Bitcoin down a little bit. So it's kind of mixed.
Yeah, Bitcoin down a little bit, but it doesn't seem like it has its legs underneath it. But hopefully that'll change.
Not too much.
Yeah.
Bitcoin can change like 15%, which is nothing for
Yes,
FDR.
overnight. So can silver and gold. Those can move 15%.
Yep.
Right now, yes.
Yes.
And the next one, the top 5 and bottom 5 performers. Intel had a great run last week, up 16%.
You jumped on that one.
Yeah, we traded it on both sides.
Yeah.
I mean,
I think I heard you guys talking about it on Tuesday or Wednesday.
it's another one where you're like, 10% moves are the norm now. And
And it
Amazon's
used to
another
move
one.
10 cents.
Yeah, it used to move 10 cents. Now it's moving 10% every day.
Intel has been dead like for years, right?
Yeah,
No one
not anymore.
wanna trade.
Not anymore.
America.
Yeah.
In the America basket.
Yeah.
So
I'm blessed.
LMT, Amazon, almost up 10%. Home Depot, Costco. Yeah, Costco and Home Depot had a good week last week.
Yeah, Costco's been on its butt too, though, so it rallied from
Right, exactly.
lows.
On the downside, AMD suffers a lot. Nvidia too. AMD down like a 9%. Apple, Cisco, all these down like a 3-4%.
Yeah, we got some long delta in AMD, long delta in Apple. So we're
AMD down about $1.50. Apple was doing the
Nvidia,
same,
we
I
got some
believe.
long delta too. So we're buying some dips. We caught Amazon, we caught Intel to the upside. So we're in these.
Just waiting to catch the others.
Yes.
That's good.
Nothing is safe from my trigger finger.
No.
Talking about some interesting movers last week. The first one I definitely want to mention is indices. The SPX was hovering right below 7,000. Not right now, like last Friday. ES already exceeds 7,000.
Shout out to Donna, our SPX winner for Q4
Contacted
last year.
you? At the end of the year? Yes. Won herself $2,000?
Yes.
How close was his result?
Pennies.
Really?
She had 68.45.23, and we closed at 68.45.50. It was like 27 cents.
Yeah.
It was insanity.
Oh, that's good.
Incredible. All of our guesses have been like, what? I mean,
All the winners have
data,
been
have been
within
right there, which is
dimes of them. Yeah.
Yeah.
That was great.
Yeah, if you did that at the beginning of the year, you made some dollars.
Yeah.
Dollar.
And next one is the copper.
Yeah.
Copper actually climbs to $6.
Yeah.
Wow.
We got some long delta there, Mr. Vecchio.
In like
Shout
an
out.
FCX kind of thing?
No, we did. I did the.
Oh, you did in copper
I
itself?
just sold a small put spread in copper.
Yeah, you could trade the options in a
You just got
small way.
You can't do anything. The bid ask spreads widen out.
Yeah.
It's not a
Future
great
is
trade.
a big contract.
Yes.
There's no micro future to it.
There is a micro, but it
doesn't trade.
And it's big.
Yes, right. It's a big.
Is it bigger than the silver contract or natural gas?
I think it's more. It's more
I never
like
traded copper.
So there's I don't think the copper contract is a mini. Is it a mini? Yeah, no, it's a full contract. So the smaller one is a mini, not a micro.
Mm-hmm.
I think it moves like $25 a tick or something like that.
Something large.
It's big. It's
Yeah.
big.
Yeah.
With like QC, or is it QG, which is the natty gas one? I think
Natty gas.
QG, which is the E-mini natty gas. That one is $25 a tick, which is a big contract, even though it's smaller than the natty gas futures.
Right.
It's still big.
Too big in my opinion, for most retail. Yeah.
And the last one I want to mention is the natural gas. Natural gas has had huge swing in the past couple of months. It went up all the way to close to $6 and went down to $3, which I think is a reasonable price right now.
You're right. In December, it was $5 and change, and now it's flirting with $3. Big moves.
Yeah.
Big move.
So commodity market, really volatile, unlike the...
But you don't usually say that, right? Like, maybe the NASDAQ stocks you could say is volatile. Usually don't get the commodity markets to be that volatile. They are.
Exactly. And the last slide, we were talking about the earnings. So the earnings season officially started this week. So definitely tons of banks, JP Morgan tomorrow morning. So if you want to put trades this afternoon, right? Delta this afternoon. The other banks, Wells Fargo, Citibank, Bank of America, Goldman Sachs, Morgan Stanley, BlackRock. Wednesday, Thursday, Oh, they actually are all before market. Before market
Yeah,
opens.
before the market opens on Wednesday. Yeah, nothing after the market closes.
Yeah, oh, that's interesting. And definitely one of the biggest one is the TSM on Thursday morning too, right?
Yes. Yes.
Yeah, that's a big one.
TSM January 15th before the market opens. Good job out of
Very
you.
nice.
All right, my friend, E-mini S&Ps, you've had the most profound move on the E-mini S&Ps all day long. They are down about $2. They've only been moving about $1 since we've been.
Yeah, but he gave us a little bit of sell off in the middle.
Yes.
Yes, they're down
Give us some
39 right
medals,
now.
yeah.
Yeah, they were down 37, 38 all morning.
Yeah.
So you did a good job. We're going to take a quick 90-second break and come back. We got the opening bell. It's imminent. We'll be back in 90 seconds. Tasty Live. Last time that happened, market really fall. Imminent. Nicky, we are back, son. And you know what that means? Nothing says Monday like this, man. Dr. Jim, the Skinny on Options Abstract Applications. How are you, Dr. Jim?
Man, what's going on? We're back. You know, we're doing it. We're doing it, man. Guys, our Bears, dude. Did you guys see our Bears on Saturday night?
I was wondering where you were going. It was our Bears.
They did not look good. Look, they did not look good, right? I was nervous.
Yeah.
I mean, I was nervous. I mean, I haven't felt this excited since 1985, right? And so it's like, man, I mean, this is it, man. Like, could this be the year?
Oh, man. I don't know, Jim. I don't know if we can bring it back. I mean, we're a welcoming, you know, it's a
We're forgiving. We're a forgiving crew.
Midwestern nice, you know. We can. I don't know though. I'll take you back, Jim. I'll take you back.
I appreciate you.
Look, he's taking you back.
I appreciate that. But you don't really need to, because the problem is that they're going to run into my 49ers this weekend.
Oh,
so that's a problem. That's a big problem.
No, that's
right?
the
Rams. The Rams.
Yeah, the 49ers got to
Oh,
win.
is it the oh no,
Yeah.
yeah,
Bears,
no, it's my Rams.
49ers.
Sorry,
Your
it's
other
my
team.
Rams. It's
Your
my
other
Rams.
team.
Sorry.
Yeah.
Your other team. Your other bandwagon.
Yeah.
Well, Stafford again? Stafford in Soldier Field?
Mm-hmm.
Hasn't he like never lost in Soldier Field or something crazy like that?
I don't know about that, but I know that there is a stat of him this year outside the dome. His stats are very, very
mediocre. Yeah.
So that could be good, but
He likes the warm weather.
he likes the warm weather.
He doesn't like. Yeah.
Yeah. So I mean, so where are you guys at? I mean, I haven't followed it too closely, but apparently the MVP race is a big deal between him and Drake May. I mean, just looking at it as a very casual observer, I don't know how you don't give it to Drake May. I mean, I don't know how it's not Drake May. I mean, where are you guys at on this?
Stafford in cold weather games is something like 1-9 or something like that. He doesn't play well. He hasn't played well at Soldier Field. I can't find a thing there, but it's.
I mean, Drake May as second year?
Yeah.
Team was crap last year. Brings them to number 2 seed, and they're in the playoffs. That's a tough one. But Stafford has broken like 1 million records this year, and I mean they look.
Oh, has he really? Because it hasn't been that good.
I mean,
he's not doing like what Peyton Manning did in 2010 or whatever.
No, but from a longevity standpoint, I mean, he's been in the league like 16 years, 15 years.
Okay. So that's what we're doing now. We're giving out lifetime achievement awards. Okay.
Oh, wow.
Well, if they are, you guys are late with mine. All right.
I'm just trying to understand.
I'm looking for mine.
Yeah. Nice.
Yeah.
Okay. Very, very nice. Very, very nice. Oh, you guys want to hear a funny story? So this is funny. You guys
I doubt this is going to be funny, but I'm ready to hear it. Go ahead.
Man, look at you. You haven't missed a beat. Beat.
Thank you.
So my daughter, Penelope, her birthday was Saturday. She turned 11. And so for her birthday,
happy belated.
And my youngest daughter, Amelia, who's 5, she'll be 6 in March. Well, they wanted to get their ears pierced. And so we took them to a tattoo shop, got their ears pierced. The guy was amazing. The guy was great, whatever. Like, it was great.
Tattoo shop? What do you live in Florida or something like that? I mean, we just go to like Claire's or some.
No. See, that's what the rookies do. That's what the Johnny Publics do.
Oh,
like,
you take them to where they're going to go
man.
get their tramp stamp in a year or two. I got it.
No,
so they make
man,
a relationship. I got it.
This guy is the best piercer this side of the Mississippi. I'm like, I'm taking my girls to the best of the best. So we went there. Guy was amazing, whatever. But anyway, leading up to it, they were they were nervous. They were anxious, whatever. Well, here's a funny story about little old Dr. Jim. So you
got your belly button pierced.
Freshman year of college, I got my ears pierced. I had gold hoops.
Both of them?
Of course. I had gold hoops in my ears freshman year of college.
Oh, you shouldn't, say that on air, John.
If you have a picture of that, I would pay big money.
I got to dig up a picture. I got one somewhere. I know that I do. I just would have to dig it up. And so, my girls were they were very, very confused by that.
Did you give one each the gold hoop from yesterday?
I told them we got them around here somewhere.
I mean, come on. You got it.
Anyway,
you take one from your belly button and give it to her.
I was able to ease their concerns, and they did great. And so, they're following in Daddy's footsteps.
I love it.
And so all I know is that if I'm going to get my ears re-pierced, I'm going to see my man Billy at Monique's tattoo parlor. That's who I'm going to see.
Monique. What is it called? What is it?
Monique's.
Monique's.
If you're in the Florida area,
it's not
let me give a shout out to my boy.
It's Monique.
Let me give a shout out to my boy Billy. My boy Billy at Monique's in Clearwater. He's the guy. He's the guy to go see. Tell him I sent you.
Awesome. Awesome. I don't know what to say.
So there you go.
Yeah.
I don't know what to say about it.
Yeah.
Never saw it
It's a
coming,
new year,
Dr.
man.
Jim.
We got to come with, we got to do what we can.
Yeah.
To kind of to push it out there.
I didn't see it coming.
Yeah, there you go. All
Good job out of you.
Well, speaking of not seeing it coming, you guys want to do something else? Finance related?
Sure. Let's do it.
All right, John, go ahead and get us going here on the slide. Super high probability trades. Gentlemen. We are high probability traders. But would you consider yourself a super high probability trader?
I don't even know what one is, so I'm going to have to. So are you saying that one that has like 85% or more probability of success?
I'm saying, no, man. Let's go
95.
90. Let's go 95.
Oh, okay.
Why not sell those 5 Delta puts? Why not?
That kind of
Hey,
thing.
man, you've been looking at the slides this morning. Look at you.
No looks. No,
I am not.
All right.
I am not one of those. I am not one of those.
Okay. All right.
Definitely
Okay.
not
Well,
one
let's
of
do it. I'm going to see if you guys are some super high probability traders. I've got a trade for you guys this morning.
Okay.
I'm going to see what you guys think about it.
All right.
So, John, go ahead and kick us off here on the intro slide. Okay. Inside the Tasty World, short premium trades continue to build the foundation of our portfolios with both the positive theta and higher probability that accompany these trades, giving us multiple ways to win on these positions. But as we seek out high probability on our short premium trades, a natural question arises. Can you push your probability too high? So can you have too much of a good thing? Now, before I ask for your answer to that question, let me give you a specific example that I pulled off from last night. Now, this was last night when the markets were closed. This was also before, you got the DOJ, you got Powell coming online on a Sunday night. I mean, it was crazy stuff last night. Mm-hmm. And so obviously things have changed. Has the market recovered?
Pretty much. It's pretty much.
Did it go down? I mean,
it didn't really even go down.
Right.
No.
Right.
It's
well, it was
back.
down. I mean, the Nasdaq was down a couple hundred last night.
It's
but a couple of hundred on a $25,000, almost $26,000 product is not even 1%.
Yeah, it's
understood, man. Understood. But in these days, Tony,
200.
That's like getting.
That is a dip. That 0.75 of a percentage point is a dip.
Yeah,
we proved that so far this morning.
According to the internet, that's more than a dip. That's like, man, we got to be shuttering the windows.
Yeah,
and it's like it's over. And so, all right. So, John, get us to the next slide. So, what do you guys think about this trade from last night? So, as Nick kind of foreshadowed, it is a 5 Delta put. So here I'm looking at Tesla. 445. This was last night, of course. It may be different this morning. I'm looking at a 5 Delta put. I can sell that today for the one-time price of $1.65 credit. And with this being a 335 short put, it's going to have a probability of profit that is north of 95%. And so, in other words, almost every single time, this is going to be no problem. What do you guys think about this trade?
Free money.
That's what I'm saying. My man. That's what I'm saying.
That's the paycheck trade, as my peeps would email me.
Okay.
The income trade.
A lot of people. Do these
get me
longer.
going on some income.
Yeah, the income trade. You know.
A lot
let's
of people,
go,
I shouldn't say
let's
a lot
go.
of people, but I get emails from people who do this longer term too, who really like, why not? You can go even further out of the money and collect, X amount of percent, 7, 8, 10% a month on your.
If you have capital, it's one thing.
Well, it's a tough trade, especially longer dated.
Yeah, but when things hit the fan, that's when everybody like.
You eat like a bird, you poop like an elephant.
Yeah, but it's when size shows its hand.
I like it better not most of the time. I get more about this on ETFs than I do on individual stocks.
Yeah.
But if I was looking at an individual stock, if you were asking me to do this, I would say I would do it on an individual stock more than I would do it on an ETF, even though an ETF would have a smaller relative percentage move to get to that, because you've got that IV rank that expands. So out of the money puts trade a lot more expensive. Here in a Tesla, you're going to have call skew, so those puts are going to trade a little bit cheaper. You just don't usually get those 2 standard deviation moves in some of these stocks, as you can get that 2 standard deviation move to the downside in an ETF. So I don't know.
E-minis down 5.
So hold on. That's really interesting because normally, I mean, I would view that the other way.
Yeah, I
would
that.
think, yeah. I mean, that's really interesting that you feel more comfortable in an individual name than an ETF with a strategy like this. Okay.
I do. Now, because here, let's think about what you're doing. It's an individual stock that, usually people that do this have knowledge of what the stock is going to do in the future, which I am going to fight with anyway. But I'm going to go with, okay, so you have the knowledge, you did the homework. Like, you did the homework. You got to put money where you listen. If you're going to take the time, the minutes, the hours to figure out what a stock is going to do in the future, knowing that it's a 50-50 shot, put some money where your mouth is and do a strategy like this. I have no problem with it.
Yeah.
It's not my preferred way of doing it. I'm not going to do it, but sure, go right ahead. I don't have a problem with it. And it's worked at all-time highs.
Yes.
Which makes it even better.
Okay. All right. So Tony gives it kind of like a greenish type of light.
Yeah.
Nick, what are you giving it? That surprises me a little bit. A lot has changed since I've been gone for 8 days. A lot has changed. Okay. All right.
I don't like
Nick?
this. I just don't.
Yeah, my man.
I think
my
it's
man.
just too much risk, and it's just not an efficient use of capital. Like, I would rather
definitely not official use.
I would rather you, instead of selling this for $1, I would rather you sell a closer at the money short put spread
100%.
and use a ton less
put
capital.
spread, you said? I'd rather see you sell a $3 put and close it at $2.
Yeah, too. That's another way to do it.
Yeah.
I just don't. Trading on the tails it looks great on paper. High probability, you win a lot. Majority of the time it's no big deal, and then you hit the one occurrence where it erases everything and then some. And I think it's too much.
Yep.
Okay. All right. Very good. Trading on the tails. That's good stuff. I'm gonna steal that. That's a good line. That's gonna be the title of my memoirs.
There you go.
Whenever they come out one day. Well, I mean, I'm in agreement. I'm more in agreement here with Nick than Tony when it comes to, yes, I mean, eat like a bird, poop like an elephant. I mean, it's gonna, especially as the market just keeps grinding higher, it does feel like free money. Like, it 100% feels like free money, but there is a mathematical reason why this can be a very, very dangerous game to play. And it has more to do with just, being at 5 delta and more to do with just collecting only a little bit. There's a second level Greek that could potentially lead to very, very surprising results that I kind of want to get into here this morning. So, John, hit us on the next slide, though. So when we think about risk return, though, right, as premium sellers, like, let's be fair about this. We're always, aware that to get a higher probability, 60, 70, 80% pop, whatever, you have to be willing to risk more to make one. You have to be willing to risk, $2 to make $1, $1.50 to make $1, $2.50 to make $1, whatever. So we're okay doing that. Like, that's the baseline assumption that we have as a reference point as a premium seller. But at a certain point, I think you have to draw the line somewhere. You have to decide, all right, I'm not comfortable going to single digit deltas. I'm not comfortable going to 5 deltas. I'm not comfortable going to 2 deltas, whatever it might be. And this is where Vama enters the picture. Vama is a second level Greek. And Vama shows you how Vega changes as volatility changes. And we actually saw a real-time example. Do you guys remember? This was, I think it was last August. So this would be like 18 months ago, 16 months ago. Last August, that night when the NASDAQ dropped like 12 or 1,400 points, and the following morning, volatility the VIX had spiked over 60. I think even volatility futures were like 45 or 47. And do you guys remember that
Sure.
night and that morning?
Sure.
Yeah, exactly. That was a great example of how dangerous this game is, because when that happened, not only did you have all the delta exposure, but now you have all this Vama exposure that's picking up on these low delta options because of the way that Vama is structured
Dr.
around.
Jim, if you're selling puts directional bias and you're selling a 30 delta-ish to 15 delta-ish like we would do, or a 5 delta-ish like you're mentioning here, Vama doesn't mean bull, because price is going to change on the example that you're giving there. Really what you're looking at, more towards what Nick said, is the amount of capital you're using. You're using basically the same amount of capital and getting a lot less premium for your risk when you're going so far out of the money. If things go wrong, both trades stink. One stinks a lot more than the other, but they both stink a lot.
Well, what Jim is getting at applies a lot more to like futures side of this, because in that situation, Jim, you had options that are still, even if you sold the 5 delta into that sort of move, they're still out of the money. But those options, especially in futures, explode in terms of like the capital that you have to hold to be in that position. And so your position from a size perspective doubles, triples, quadruples, even though it's still a free money trade because it's so far out of the money. And that's really the biggest part of this Vama discussion is like, not only does the position get big and you have this marked loss, but the actual capital to hold the position gets a lot bigger. And that adds to kind of the fear and the same thing is happening like in the metals, like where these positions, even if you're long into the move, the positions get so much bigger because vol is expanding in here. And that's really your biggest risk here.
So everything you guys both just said is correct, but I disagree with the fact that Tony said Vama doesn't matter, Vama's bull. I totally disagree. Because what happens is, you're right, the bull trades stink. You're going to be bleeding capital, you're hemorrhaging cash, whatever. But because you got into a position on entry that had a super high Vama, that volatility expansion, that's going to cause, in addition to capital expansion, in addition to buying powers exploding, the extrinsic value is going to be spiraling upwards. And so it's going to turn, what's a really bad trade into something that could potentially be catastrophic. And so it's more than just the price impact. So John, go to the next slide, actually. Because Vama, if we look at Vama around the moneyness, John, get us on the graph there on the next slide. There we go. Okay, so if we look at a graph, right? So the blue curve, so right here, we've got a stock, let's say it's a $100 at the money strike. If I look at Vega, which is the blue curve, right, we know that Vega peaks around the at the money strike and then it drops off both in the money and out of the money. Vama, which is the second level Greek that's underneath Vega, it actually has a bit of a mirror image to what Vega does. Vama is lower at the money, but it peaks right around the 5 delta option on both sides of the market. If I'm talking about an out of the money put or an out of the money call, that's where your Vama is going to generally be the highest. Now, what does that mean? That means that if you sell that put and it does hit the fan like it did last summer or 16 months ago with that NASDAQ drop, that means that not only are you going to get hit on the price effect, and you're going to get, if your futures options, Nick, you're 100% right, the buying power is going to expand, but now you've got your volatility, it is expanding like exponentially. And so you're having to face this headwind, multiple headwinds, buying power expansion, price effect from Delta, and now an extreme volatility effect. These are the types of things that put you out of business. Like, these are the types of things that it's not just a catastrophic loss anymore. And so all of a sudden, you got the paycheck trade 99 times out of 99, but then that 100th time, it just gets really, really nasty really, really quickly.
I got another thing.
Why is because of the Vama.
I
No,
got
it's
another
because
thing
of the Vama.
besides Vama that makes you when you spiral out of control and your first scalp.
No. I sold them at 712 at 7,012 on Friday. I'm a
You had 40, 50 handles in them.
Gonna be a genius. Gonna be the genius.
Did not take it.
Did not take it. Now we're back at 7,000, so we're adding.
Right, but you've previously sold NASDAQ futures too. You do look at that as a different bucket?
Yeah, I'm getting to like one of these.
Yeah. That's more importantly than Vama. I know you love your Vama. I know it's not even a Greek on the platform, but I know you love your Vama and everything else like that. I'm talking like Grandma Beanie now. I know you love your
We
Vama.
gotta get it on the platform, man. Like, why is come on, man, Vama, Charm. Like, what are we doing? What are we doing, man?
Why don't we have a number? Why don't we have a number that you could lose if something were to go bad, and we can have a number how much you could make.
CVAR.
Well, CVAR, right, is basically your Vama number, but it's not really Vama number.
Yeah.
Or we could have a number that how much you could make if you do this. I mean, let's just keep this all in perspective here. Delta is king. Keep your delta in line. If a 5 delta is what you're comfortable with, that's your risk reward. It's okay. It's not my preferred way. And Vama delta price is going to hurt you just like Vama delta price is going to hurt you if you're selling at the money option. It's all going to hurt. One's going to hurt you a lot more earlier. One's going to hurt you a lot more later. You have to be directionally correct for all of these strategies to win. But I can't worry about the what ifs, Dr. Jim. I just can't.
This is not a what if. So I would like to be on record. I completely disagree with Tony. We're back. Like, we are back, midseason form. Like, here we go. I'm not talking about a what if. I'm not talking about some crazy esoteric. That's why I brought up the NASDAQ thing from last summer. Like, that was not a what if. That was a very
last
real
summer from
scenario.
18 months ago. You want me to worry about something from 18 months ago? You're bringing your kids
Well, I don't know about you, Tony, but I'm hoping to trade longer than 18 months.
tattoo parlors.
I'm
They're
hoping to
not
do
even
this for my
teenagers yet.
career.
Huh?
I'm hoping to do this for a couple of years. Like, let's try to do this. I mean, I understand you. Like, you're thinking about, you're near the end. Like, you're picking out like funeral homes, like stuff like that. But me and Nick, we want to do this for a while. Like, we want to keep going.
Understood.
You know what I'm saying?
Understood.
I actually have ChatGPT. I have it scheduled to send me openings at retirement homes within a 25-mile radius of my.
You plan on visiting me? I like that.
Yeah, so I'm looking out for them.
Yeah, we'll set you up in that New York like assisted living fraudulent scandal going on. We'll get you all set up.
Yeah,
man.
it's perfect. Perfect.
Thank you, guys. I appreciate it. I feel the love.
Man, we got you covered,
I do feel
man.
the love. I appreciate this.
Like, we 100% got you covered. And so anyway, just be careful if you're doing this. I would discourage people from doing this. I understand that it's like, Jim, you're crazy. Like, it's, you keep doing it. If it's working for you, keep doing it. At the end of the day, everyone has to make their own decision, right? So as long as you understand what you're walking into, then do whatever you want to do. But I think this is something that a lot of traders don't quite know. And it's lurking underneath the surface. And when it gets you, just like my Rams. Like, they're coming to Chicago, and they're going to get y'all.
So I got a question for you, Jim. I got a question for you.
Sure.
Would you like to buy 5 shares of ABC stock, or would you like to sell the 5 Delta put? In your example, I think you were using 45 days. What would you rather do? Because they're both 5 shares of stock equivalent on entry.
On Delta, but I think it depends.
Dr. Jim. Your name, Dr. Jim?
I mean, I would, if those are my only 2 choices, I would definitely prefer the 5 static shares. Definitely.
You definitely prefer the what?
Shares.
The shares.
Okay.
All right.
Yeah. I mean, there's so much more to that, though. It's like, what is my holding period? I mean, all those kinds of things.
Got it. Okay. All right.
I mean, I don't like either option. Just to be very frank.
Sure.
To be Frankie Walsh with you guys. Like, I don't like either option. You kind of pinned me into a corner. You kind of said, like, do I want Tua Tagliavola or do I want Jay Fiedler? It's like, well, I kind of don't want either.
Yeah.
Like, can I get
that's
option
fair.
C?
That's fair.
I mean, you know what I'm saying?
Yeah, for your dog.
All right, I'll let you win the last argument. I agree with you there too.
All right, I appreciate you. All right, let me give him some takeaways. We're back, baby, man. We are back
So
on the Monday
back.
Morning Skinny. This is some good stuff. I'm going to go scalp some Vama. A foundation built on short premium positions is a sturdy foundation for any active portfolio where having high probability trades as your baseline truly cannot be overestimated. But once other factors come into the analysis, like Vama, it becomes clear that you certainly can have too high of a probability on your trades. And just be careful, man, because it all looks like strawberries and sunshine until they come and get you.
The silver 150 strike calls 43 days out. Silver trading at 84. What do you think the delta on those is?
100 call?
150.
150 call. Here we go. This is what I'm talking about. Let's go. What do you think, Tony? How much we getting for those?
What are the delta? What a delta in SI silver futures delta?
What's the delta?
Yeah.
16.
What do you think?
I'm going to
Jim?
say 7. I'm going to say 7.
They're at about a 5 delta. It's right.
Because the way you were saying it, I was like, it was making it so much.
That's a double in 43 days.
It's
It's a 100% increase
It's
in
crazy.
43 days.
It's
Nick,
crazy.
what's it selling for? What's it selling for? What's the premium on
It's like 40 cents, which is 400.
Hey, that's free money, man. Tony,
But that's what I'm
free
saying.
money.
is-
Let's go.
No, you don't want to go.
Dr. Jim, this is why you're a retired
That's exactly
gambler.
my point. You guys are making my
I'm
point.
with you,
guys bought
Jim.
my point.
I'm with you.
No,
I'm
Nick-
supporting
No,
you.
you're with me. You're with me.
I'm with
it's
you.
you, me, and Matthew Stafford, baby. Ride or die. Let's go.
How about this? Yeah, all right. Yeah. A 1-by-2 call ratio spread as wide as you can get for a tiny little credit is the optimal.
$20. Why?
Love it. You're going to get taken out to the cleaners. I love
Yes.
it. Let's go. Let's go. He's getting ironed out, ladies and gentlemen.
I'm going to take a look at this. I'm going to let Dr. Jim go. I'm going to get taken out to the cleaners here as soon as I can. We got a quick 90-second break to come up. What comes up right after this?
We have a really great segment with Kai, 0 day. We're looking at 2025. We got a nice recap. So if you're a 0 day trader, tune in for that because you don't want to miss this one.
/SI is trading at 85. What do you think the 100 calls delta is? It's 85.
30.
Yeah, you're right. It's exactly
I'm going to say
$30
35.
Yeah, it's
Yeah.
30-31. You guys are both
Okay.
there.
Yeah.
Interesting.
There you go.
Interesting. $14 expected move. The calls are 30 delta. We'll take a quick 90-second break and come back. We got more Tasty Live after this with my man Kai, the market measure. Good job, Dr. Jim. Way to mix it up.
Yep. Thanks, guys.
Yep. Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man, Kai in the house, and a market measure on 0 days. The moment we've been waiting for. Nick has been talking about this study that you've done all morning long and how much he liked it.
Oh, great.
So I would love to get into that if we could. Before we do, though, even the S&Ps with their first downtick of the morning, I didn't think I was going to be saying that at 8:30. They're down 10.
Yeah.
They were just down 5.
That's huge.
Crazy.
It is crazy.
Volatility staying bid though, which
Up 20 cents to 16.35.
yeah, but you expect on every other time we've had a 30-point, like a basically back to flat.
Mm-hmm.
You usually see volatility unched, if not lower, and we continue higher. We haven't seen that yet.
We have not. You are correct there.
So if volatility gets unchanged.
But I think you've seen the low in volatility all week.
Yes.
Going into any of these numbers and the tariff decision too. So I don't know. Mr. Kai?
What's up?
How are you, sir?
I'm doing great.
Good. Good to see you. This is a market measure sponsored by the SIBO, by the way.
Yes.
And they're going to like this. They should keep this on their website.
Yes.
Oh,
for sure.
That's right. That's right. Yeah.
Let's see.
And this piece is slightly different from a couple of pieces before. This is not about weekly. This is actually a grand summary for 2025, focusing on the Iron Condor because there's so many strategies. We can only focus
Of 0 day options.
of the 0 day
Yes,
piece.
yes,
Yeah.
yes.
And also, I choose one of the strategy that you guys use the most often, which is 20 delta, $20 Y, manage a 25% profit target with no stop loss.
Yeah, that's not in a box, but that's in our broad base. That's how we do it. Yes,
Right.
yes. From our research, it shows to be the optimal use of capital, the optimal trade to make on the 0 days, at least since since we've been looking at this across time, but now you're going to go in depth in it and see if that statement's actually right.
Yeah, we can expand the study into different management style of delta, but for 20 delta, $20 wide, it's actually pretty decent.
Okay.
And also they're among 20 different combinations, different levels of management, different levels of stop losses, 25% and no stop loss is actually one of the best scenarios. It's a very balanced strategy overall for the last year and for all the data available.
Okay.
Yeah.
All right, let's do it.
Cool.
So what's going on in 2025? Definitely, we need to review the market performance first, right? How the underlying perform and how the VIX and the VIX 1D change over time. This is pretty much what happened from January 1st to all the way to the end of the year. We had a huge swing in between in April, but actually the volatility start to climbing at the beginning of February. So we actually have more than 2.5 months volatility rising from the low point the year before and all the way up to 60 whatever plus in the April. So it's pretty volatile, especially in the first and second quarter. But after that, we didn't expect that. Market's smooth, grinding higher, like gradually over the rest of the year.
Yeah.
Okay,
which was crazy.
Has been crazy.
Yeah.
V bottom.
Yes.
That's the typical the V bottom.
Yes.
So next slide. Now we want to, more importantly, rather than look at the broad market, we want to take a look at the intraday change, the range, the percentage. That matters most to zero DT traders because overnight moves doesn't matter to the zero DTs, right? If the SPX open 1% higher, we don't care.
Yeah.
But for the future traders or the equity traders, that probably going to impact your P&L, but not zero DTs.
Yeah, and I think that's a huge draw to zero DT trading too, because everything settles in that day. There's no overnight risk. There's no binary risk. There's no Venezuela. There's no tweets. Like it's over at the end of the day. And so, you know, having it be cash settled as well as kind of done with at the end of the day is a added benefit to this trade. I think is like a positive thing to this trade.
Yeah, there's only a 6.5 hours trading period for zero DT, and most of the trades you're probably going to exit before 3 hours.
Yeah.
So the real trading range is probably 2.5 to 3 hours.
Yeah.
Most. So this is the intraday trading range, and also put the VIX level on the next to it. This is the comparison of 2025, 10 years average, and also 5 years average. Why I want to separate 5 and 10 years? Because 10 years. Long term, everything's slightly lower. Volatility, implied volatility, trading range is slightly lower. But in the past 5 years, since the beginning of the COVID, everything started to elevate. Trading range, VIX, it actually increased the everything from the long term average. Remember, between 2012 and 2019, the market was pretty dead.
Yeah.
Right, for premium sellers.
Yeah.
So now we can see the 5 year average is pretty much higher in all category, including the VIX and the realized volatility. 10 years average is the lowest. So last year is kind of consistent with the long term, like a 10 years average, but definitely lower than 5 year average. So one thing we want to point out that's pretty important for zero DT trades from last year is look at the arrow. So the upside, we have more number of currencies touching the upside, and the range is slightly wider to the upside from last year. So you can see the 0.43% to the upside and only 0.38% to the downside. That's a little bit tilted to the upside compared to the other years.
Yeah.
So this leads to the question, does that actually impact the neutral or bullish strategy?
Okay. I mean, I would think it does, but it's a reflection of the market after April. It was pretty much...
Oh, that's right. Yeah.
All up. So you had, you know, like when you look at this stat, you have to take the context of the market. 80% of the year was generally up besides the first, like, you know, like maybe
2 months, like from February to April.
Yeah, February to April-ish, you know, so yeah, 75%, something like that.
Yeah, so let's take a look at the real performance. So next slides, we show the 2025 and all the data available for 0DT performs only. On the left side, we have the 2020 Iron Condor, manage a 25% profit target without stop loss. On the right side, we want to compare. This is the only place we compare the Iron Condor versus a bullish strategy. 30 delta, because we need to push up the delta a little bit closer to the strikes for put spread. And we make the wings a little bit wider so we can get a little bit richer premium close to the Iron Condor. So in this case, last year, the average premium we collect for this Iron Condor is $5.13, and the put spread is very close, $5.05 or so. So these two strategies can collect same premium almost on average, and the performance is very different. So long term, the Iron Condor is 4.8, and the long term put spread is 4.8. It's almost identical for historical long term, but the performance is much better on the Iron Condor size in 2025. It's way better. So it outperformed long term in every category that you can imagine. Average P&L, wing rate. Well, wing rate is kind of similar. CVAR is one of the best. Last year, for some reason, even including those huge swings, the largest downside loss is actually way lower than the long-term average. Not way lower, but it's decent lower. And the average return on capital is much higher. Volatility is decent controlled.
So when you look at these, what's your takeaway from this? I mean, other than
well, I think from the most important part is your CVAR and just the width of your return volatility. So like having wider, like bigger losses and wider ranges of P&L it is generally a harder thing to do over and over again. So just doing the put side is a little bit more, you got to have a bigger account size to do that because you're going to have everything's going to be wider. Your losses are going to be bigger. Your P&L volatility to the up and downside is going to be wider. So if you're in a small to medium sized account, you've got to kind of do the Iron Condor is really what this tells me. It's like or if you're more conservative with this trade, like this is kind of a piece of your portfolio, not like your main thing. I think you go towards the Iron Condor versus the put side. I think you got to have a larger size account. You got to be kind of in this for the long term to withstand the variance there.
Exactly. So we definitely can use $20 wide put spread, but you're probably not going to get enough premium. So that's one of the reasons, and you still risk the same for the same width of.
But it's closer at it's closer at the money though. The risk, you have to,
or you don't get anything. The risk reward ratio probably not going to be that good if you're getting too close, right? The premium's too cheap. But overall, it's still profitable for put spread, but the performance is kind of in line with the long-term average, or slightly worse than the long-term average. Pretty much, we can say the same. The Iron Condor, for some reason, performed extremely well. Look at the average PM is more than double the long-term average. I didn't expect that. I thought it's going to be more swing to the upside and also downside have some huge hits, right? For the Iron Condor,
you're probably getting because of where the put spread is relative to the Iron Condor. It's a 10 delta difference. You're probably getting a lot of small wins, small losses in the put spread where the market kind of goes down a little bit and tests the put spread, where the put spread you might be losing 50 cents on or whatever. And the Iron Condor is expiring worthless because it's a $20. Right. You have less scratches with the Iron Condor. The Iron Condor probably wins or does win a lot of the trades where the put spread is a scratch or a small loser or a small winner. It's just not as big of a win.
Yeah, so the key point of this slide is not to tell you to choose put spreads or Iron Condor. You can definitely trade based on what kind of account type and assets you have. But what I try to point out here is what you have, the results from 0DT probably is going to be very different from what you experience from the market in general. Right? We feel like Iron Condor is probably testing upside a lot more, so you will lose more money, but actually probably not happen for that 6.5 hours. It's probably different. The correlation, interestingly, I can show you in the future, SPY price versus 0DT is very close to zero, almost non-correlated. very weak correlated.
Wow.
P&L wise, yeah. So that means you don't need to care about the market for trading 0DT. Like
you're right. You're betting on the math model.
Right.
Yeah.
That's really what you're betting on.
Yeah.
And if you're not
We're
betting
really
on
trading vol. You're not
That's
trading
correct.
Right,
the
That's
market.
correct.
You're trading.
Well, you're trading vol, which is how the options are priced, but you're saying that those prices are fair and accurate, and that's the range that we're going to be in.
Well, you're saying it's
overstated.
overstated.
Well, you're saying it's
saying,
overstated, right? Because you're going to just outside the expected move. Yes. Yeah.
Yeah. Okay. So next one. This is some of the reasons why the Iron Condors did better than put spread last year. Although this is probably not going to be true for every year, but it can help us understand what happened if you're 0DT traders last year. So one reason is, even though we have more upside moves, and we have definitely touching the call side more often than the put side, but most positions is the markets actually swing back and forth. You definitely have enough time to manage 25% winners if the markets start to pull back a little bit, like later in the day, and the premium, you can definitely get that premium. And also the Iron Condor last year hits the profit target slightly faster than average. It's small, like 7 minutes sooner than average, hitting that 25%. But the put spread actually took 11 or whatever minutes longer. So you look at it both sides, Iron Condor probably perform better. You can have higher premium P&L, and you can close that position faster. So your efficiency is much higher.
Yeah.
And
kind of putting to bed a little bit again how you have to do both sides as opposed to one side being directional. You kind of cherry picked here by just saying the put spread didn't, and we went higher. And if you just did a put spread, is that what you're saying?
It's probably different from like a selling 45-day DT. If you're bullish in the market over the long term, 0DT can perform slightly different.
Sure, because it's a binary event.
Yeah,
that day
and
event.
the losses are bigger than are a lot bigger.
A lot bigger, right?
And they're instant. Like you don't, you sell puts and the market goes down, and you roll those puts and the market goes back up. You make that money back. Whereas these, it's settled. So it's like that you're realizing that loss, and now you got to make that up with consecutive trades, as opposed to one trade where you can roll that and continue with it, and you roll that loss forward. And if the market does rebound, you get that loss back via that same size position. You're adding every single trade here.
Exactly. So you probably need to adjust your assumption duration to the 0DT. If you're bullish in the market for the next months or next 3 months, that doesn't apply to 0DT. It can keep going down for 3 days. You probably have to roll again.
Yeah.
So some interesting stats to attribute to these results. That Iron Condor losses in 2025 is 11% smaller, and the put spread is 8% larger. And why the put spread loss is larger is last year we have some large downside move that never even came back up. So actually touching your bottom hurt the put much more than the Iron Condors. So from February to March, we have 15 consecutive trading days that cost you 58% of the losses for the put spread. So that 15 days, so if we lose 10...
So how do we avoid those days?
You got to have,
As long as
that's where the crystal ball comes
keep trading.
Yeah.
Keep trading. Yeah, so which means if you lost 10 grand for the downside, for the put spread in the last year, $5,800 from that 15 days, which is huge.
It is huge.
Yeah.
Yep.
All right, looking at the other charts, the first one's average P&L. Now we break down into months, so you can have a better understand how the P&L changes over the year, over the past 12 months. Interestingly, last year still outperformed long-term average. Over the long term, we have 5 months that actually below zero for average P&L. But last year, we only have 1 month, which is not March, which is not April, and May is actually February. Why is February is when the volatility start rising from the low to like a medium level.
Right. So what you
hits you with the surprise.
What you pointed out right there was the market kind of bailed you out on those big down moves in March and April, right? Or the 0 days, the volatility was so high that the moves that we were getting were still outside,
even though they
the
were
expected
big
moves. 'Cause remember, we're talking about 0 days now. We're not talking about longer term. So in February, January into February, as volatility was contracting and then started to expand off its lows, similar to what we have right now, right? So like you got to kind of
we jumped from 13 right before Christmas all the way to 16.5 in these days. So you got to be careful. Right?
Perfect. That's what I wanted to point out. Good job.
So April, you did lose on those big swing days, but on average, you still make money. That's pretty surprising.
You probably had more losers in March and April.
In February and March than
February and March.
Actually. Yeah, that's interesting. Then we look at the success rate, win rate for each month. Next slide. This result for the success rate is actually pretty consistent. This is very interesting. So the range is somewhere between 82 to 90%, 91% is pretty tight. One of the reasons is that we manage a 25% profit. If we change that profit or we don't manage that, this swing is actually much wider.
Yeah, you're probably more towards 75.
75 to 95. It really depends on whatever the market does.
Yeah.
So if you want to reduce the market swing impact on your P&L, you want to manage your position. 25 is actually is a good entry point.
Makes total sense.
Yeah.
Yep.
So next one is now we're going to talk about volatility. A lot of people want to know where the risks are. So this is the CVAR. CVAR 2025 had really good large downside management. So it actually beats long-term average in every single month. So that's one of the reasons why most of the strategies can perform pretty well last year. You didn't expect that from
You didn't expect that, and it's not gonna always be like that.
That's right. That's right.
You got to have that. You got to.
We had kind of the perfect storm going into all of 2025, really, for this type of strategy.
Yes. See, this chart is very different from the underlying or VIX chart, right? When the peaks happen in the April. This one, look at the December. December actually has, for 0 DT positions, it actually has much larger drawdowns because the average volatility was lower. One day increasing volatility can destroy your P&L. April is almost the same as December.
Yeah, you're right. And December, you would say, was pretty tame in comparison.
Pretty mild, right?
Yeah.
So the last bar charts, we want to look at the average volatility. So average volatility is kind of mixed. So this is very close to average. Sometimes we're higher than the average, sometimes we're lower. So nothing special. And we see some months we see the large swing, including March and April, especially the April. That's actually not a negative thing for 0 DT traders because we need intraday swing for after 1 hour or 2.5 hours. As long as the underlying came into the range, you can take the profit off.
And it probably helped because it kept vol relatively high the rest of the year.
Right.
I mean, like we don't have a data set yet for 0-day trading where the VIX is at 16 the entire year. Right? I mean, like all the data sets have, a VIX range of 16 to 30. Right. In the last 4 or 5 years, we've had a 25 VIX at some point.
Exactly.
We
rarely exceeds 30. Rarely.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Understand I got a plan, but I bet you didn't know that I was dangerous.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the post-vacation edition of what it is that we are trying to do. We are back, and you are here, and I am here, and this is an exciting moment in both of our days. Nothing like a little Sunday night impromptu Powell presser to bring us back from vacation. I mean, everything was all quiet. Everything was just all chill. And then all of a sudden, you got DOJs, you got Powell doing FaceTimes to the world and whatever. I'm like, man, this is some crazy stuff. But we are indeed back. So welcome to the show. Welcome back to From Theory to Practice. We were gone there for about 8 or 9 days, I guess, because we went up to South Carolina. It was amazing. Got to hang out with my sister-in-law, which was really, really fun, and her little son and her husband and whatever. So we had a great time, but it feels really good to be back with you all. I got to be honest. It just feels good to be back in the captain's chair and be with all you guys. So thank you guys so much for being a part of what we do and being a part of my show on a regular basis. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and you can join the discussion in real time. You can communicate with your brethren who are also watching the show. Of course, for the 98th consecutive day, you can celebrate if you are a medals bull, and you can commiserate if you are indeed a medals bearer. But it will be a good time had by most if you pop in the chat and you pump the algo. That is the number one thing that we need to do today for the love of the algo. So Josh, bring us into the market. Man, let's take a look at what's going on. Let me grab my drawing tools here. And let's take a little look-see at what's happening in the old stock market. All right, so you got E-mini S&Ps up 13. You've got the risk-free instrument, also known as the NASDAQ futures, which technically is an extremely high-risk product, but on the streets, we know the real deal. Up 61 on there. You got the boomers up 39. You've got the Russell 2000 futures index up 11. You got bonds down a little bit. You got notes down a little bit. You got oil up 50 cents. You got UB40 down a little bit. You got gold just up a wee little 127 points. You got silver, my Hunt Brothers up $6.60, back up to about 86. Man, that's some crazy, crazy stuff. You got the British pound is up, the euro is up. Volatility futures are down 3 cents. The crypto bros, they've seen better days. You know, apparently people are actually preferring the hard assets over and above the digital made up stuff. But Bitcoin down 245 on the day. And then you've got spot volatility, VIX up 56 cents. So you've got spot volatility rising, futures volatility falling. They tend to follow each other, but you got to remember, I mean, one of them is kind of the spot, the cash price of volatility, if you will. It's not quite that simple. But then you've got, the futures volatility, which is going to be out a little bit on the curve. And so there's obviously going to be some differences along the way. But what I want to do today, all right, so there's your market commentary. I mean, is it any better than what we did before vacation? No, it's pretty much the same. I mean, it's right there, right around that C+ to maybe B- range, which is what you guys have, come to know and love and expect from this program. So there you go. What we're going to do, let's go ahead and let's comb the streets. Let's go through. We only have 6 positions in the portfolio. Let's bring things up to speed because we were out of commission. Like we were gone for 8 days. We got the Costco expires in like 3 days. Like Costco is going to be over and done with. Let's do some things with Costco. Silver, we got to do some things with silver. Obviously, we're getting hurt on the silver strangle. And then, of course, you got Nike, you got Starbucks, and you've got, oil strangles and GDX. And things like that. So today, let's kind of bring things back up to baseline. Let's go through each position. Let's kind of talk through what we see, what we're looking for, the risks, the returns, and any adjustments that need to be made today. And then I don't think we're going to do oh, wait a minute. Hold on, guys. If you're multitasking, come back to me. So we're back, right? We're fresh off of vacation. But guys, this is not good. Tomorrow morning at 8:30 Eastern time, I've been studying the markets for a long time. Started trading in 2007. I started studying finance as an undergrad at Central Michigan University, fired up chips back in 2000. And so it's been 26 years. Guys, I've studied a lot of data prints. I've traded through a lot of data prints. I've sifted through more economic data than many other folks that are in the market. And let me tell you guys something. Tomorrow morning CPI print, on the heels of Powell Sunday night FaceTimes, on the heels of DOJ's throwing out these allegations and these criminal charges and whatever else. On the heels of all those things, I have never seen a more important economic data print than the one that is coming on down the chutes tomorrow morning at 8:30. The CPI print tomorrow morning, it is going to completely alter the trajectory of your financial goals. And so that is coming up tomorrow. I don't have a good feeling about this, man. I do not have a good feeling about this at all. But we're just going to try to make our way through. We're just going to try to sift our way through the rubble and see what happens. So maybe we'll trade that. Maybe we'll go ahead and trade the Armageddon that is the CPI print tomorrow morning. Or maybe we won't. I mean, we'll see where the wind blows us. But I want to see where you guys are. Man, look at you guys. I see you guys in the chat. Man, Greg Lutton's in the house. Wolf is in the house. Man, Sam L is in the house. Stephen Bivens in the house. Man, look at this. NY Atasha in the house, man. I appreciate you guys so much. I'm going to get to as many of you guys as I can here in the next couple of minutes. I see BDH in the house for the return of the long hair prince. I'm actually getting my haircut on Thursday. And we may go layers. We may go mullet. Like, we may mix it up. I'm not sure. We may go something a bit more cleaned up around the edges. I don't know. You got to tune into the show to find out. Like, we got to win the click, right? And we do whatever it takes to win that click. And so you got to watch Thursday's show to kind of see what happens. And so, all right, let's go ahead and so let's go through the positions. So we have an oil strangle. We have a Costco vertical. And look at Costco. Was there ever a doubt? No. I mean, there were a few doubts there early on, but man, look at Costco. That's some good stuff. GDX, got Nike, got Starbucks, you got silver. Okay, so we got them all on the screen there. You can see it's all there. It's all open, for interpretation and discussion. Let's go through these guys kind of one by one, and then we'll close them up as we go through them. So number one, we have an MCL strangle on that you can see MCL is 59.5, 59.50, let's say. Our strangle is 50.61. We sold the strangle for $1.98. It's currently marking at 265. So we're showing a slight loss on the position. That makes sense just because, we're getting close to that call strike on the upside. Now, I can't remember when we put this trade on. Let's go ahead and let me click on my my Allison Chains here and let's take a look at this. December 16th. So we did this trade almost a month ago, actually, for $1.98. So we've been in the trade for about 4 weeks now. And, as far as I'm concerned, this is a sit and do nothing situation. I mean, you guys, the default setting for a reason, guys. I mean, this is rule number one for a reason, right? If it's still in between my strikes, I don't usually go out of my way to balance my deltas and to neutralize my directional bias and things of that nature. I think that's totally fine. I think you can be, a bit more aggressive when it comes to neutralizing directional risk, especially if you're trying to maintain more of a delta neutral portfolio. But that just requires a lot more work. That requires a lot more kind of monitoring, which, there's nothing wrong with that, of course, but you just have to know what you're signing up for. There it is again. Right? Do you know what you're signing up for? Very, very important, question that you need to be asking yourself on a regular basis. Do I know what I'm signing up for? If you're going to be hyper aggressive or even moderately aggressive with adjusting something like a strangle, even when a strike hasn't been tested because you want to neutralize directional bias, then you just have to know, like, okay, this is going to be a regular ongoing thing. This is going to be, at least a daily endeavor, if not, multiple times within the day. So that's one way to do it. I tend to be a bit more laissez-faire, a bit more kind of Adam Smith, invisible hand, just kind of let the market kind of do its thing. And as long as I'm not tested on one side where a strike has been breached, I'm kind of a sit and just do nothing type of guy. I'm kind of a sit and do nothing, and let's just kind of let this guy cook on the back burner. So for right now, you've got oil at 59.59. Let's sit tight. Let's do nothing. I mean, we still got plenty of time in the strategy. If we get a little bit of a downtick in oil, then this strangle is gonna come back to life, and so that's gonna be some good stuff. So that's MCL, and that's that. So MCL over and done with. Now Costco, guys, look at Costco, man. They laughed at us, they jeered us, right? But look at Costco now. Who's got the last laugh, right? We do. Costco does. The free samples do. I mean, look at this thing. Costco up $19 today, up to $9.44. We only have 4 days left on this strategy. So clearly, right, we're going to be taking this guy off one way or another. But of course, I mean, the first day back, right, you can bet your bottom biscuit I'm taking an 11-minute victory lap on this Costco position minimum. So for Costco, if I bring up my chains on this guy, let's go ahead and let's see here. Oh yeah, Josh is reminding me that the Supreme Court is going to rule on the Trump tariffs on Wednesday. Yeah, I heard about that. Right? Yeah, that's true. Wow. So we've got, man. So not only not only do we have the most critical CPI print of, the financial markets history, but then we're gonna back that up with a Supreme Court ruling on tariffs. And I mean, Polymarket's been bouncing around, but I think the chalk at this point is they get ruled illegal. I think the chalk at this point is they get ruled like unconstitutional or illegal, whatever it is. I'm not following it that closely, but man, that would be a market mover. Like, there's no question. I think no matter which way the ruling falls, it has the potential to move the market significantly. I wish I knew how it was going to move, because if I did know, would I tell y'all? Absolutely not. I'd be in some remote tropical island somewhere trading that information, and then I'll write a book about it. You guys can buy the book, and you can learn about all this stuff after the fact, some number of years later. But we're all going to find out together on Wednesday as it goes down. So thank you, Josh, for that reminder. But Costco, let's bring up the chains here really quick. So we did this trade on December 11th. And that was, I think, for Costco earnings, if I'm not mistaken. And it did not look too good. Like, it did not look too good at all. Let's bring up a chart here of Costco, and we can all remember the artist formerly known as Costco down in the dumps. And so here is a daily chart of Costco. I think it's daily. Is that daily? Yeah, it's daily. So December 11th. Where is December 11th? Let me find this guy on the chart. December 11th is right here. It's right around there. So December 11th is somewhere around here. It's one of these candles. It doesn't really matter. We don't have to be exact. If I bring up my magenta color here, you can see all of this situation. This was not fun, right? So this was NF, right? Not fun. And so it looked like it was done. It looked like it was over. It looked like it wasn't going to come back. And so we left for vacation just thinking, all right, let's just leave it as defined risk. I mean, if it doesn't come back, then that's the great thing about defined risk strategies. Don't get me wrong. They've got plenty of gotchas, right? They're difficult to adjust. I mean, obviously, you're not building up too much positive theta with like your short premium defined risk strategies, like, short verticals and kind of things like that. But one of the benefits is no matter how bad it gets, like, what the worst case scenario is. Like, that, all right, if I'm completely wrong on the directional bias on this position, which, truth be told, does happen to me from time to time, then, I already know what the worst case scenario is. That's incredibly powerful. That's a very, very powerful thing when it comes to, the biggest gimme when it comes to defined risk strategies. And so we were able to go on vacation, not worry too much about Costco. And as a result, we have been rewarded by, kind of staying the course, trusting the process, which does not mean it's always going to work. It just means that probabilistically, it's like, hey, when you put a trade on with 45 days to go, it's expecting those full 45 days. Even if the first 20, 25, 30, whatever, don't look too good and they don't look too hot. Like, the probabilities on order entry that are 50% or 61% or whatever, I mean, they're expecting the full gamut of that expiration window. And so I don't typically love to go in and short circuit that process. I don't typically love to go in and say, all right, let me save 80 cents here. Let me save $1.05 there by taking this guy off early because it's never going to come back. I don't think it's that simple. And, case in point here with Costco ripping back to the upside. And so today, I mean, we've basically been able to somehow muster up essentially maximum profit on this Costco position. Like, you can see that it's currently marking for $9.62. The maximum mark price on the strategy would be $10. And so we were able to achieve well over 50% of max profit, which is our typical top end target for a position like this. But the only reason why we were able to do that was because we were on vacation. Had I not been on vacation, this position obviously would have been closed much earlier when it hit 50% of max profit. But because we were gone and I wasn't trading, I wasn't looking at the markets too closely, it's just, this is kind of where the wind blew us. So let's go ahead. Let's close out of Costco and we can be done with it. So we'll close out of Costco. And we'll just do 962. That's fine. Probably get filled. All right, so we got improved to 985. Look at that. Oh, this is a great example, by the way. So this is, let me spend a couple of seconds on this. And by that, I mean like 6 to 8 minutes. So I put in a closing order at 962. So I just put in a closing order at 962, right? That was where the theoretical mid price was at the time that I put the trade in. You can go check it for yourself. It just happened 35 seconds ago. But look at the trade bar. I just put it in at the theoretical mid price at the time of the order. Okay, look where I got filled. I got filled at 985. Okay, that is price improvement. And that is a pretty nice amount of price improvement if I don't say so myself. How did that happen? Like, how was I able to get so much price improvement? Well, it's essentially because remember on the other side of our orders, right? This is where all the high frequency guys and gals and bots are living. This is where all of the liquidity providing guys and gals and bots are living, right? And so when they see our order come through, they're all competing against each other to take a little piece of that order or the entire order. And so what ends up happening for us as retail traders is we get the best end of that stick because we're benefiting from all that competition. I'm benefiting from the fact that, bot A is competing with bots B and C and also competing against bots, D through Z. And so all of these bots are coming together and they're all looking at my order and they're all figuring out, do I want to participate in that order or not? And so as a result, whoever gives us the best price gets to essentially run to the top of the queue. They get to run to the top of the line and we get filled by that liquidity provider, high frequency trader, and so on and so forth. And so when it comes to price discovery, when you're dealing with stocks like Costco, like Netflix, like SPY, of course, you don't typically have to be that, finely tuned with your price discovery. Like it doesn't require surgical precision when it comes to, all right, let me penny this guy until I finally find, the number that I'm looking for and I finally get filled. You don't have to worry about it that much because if there's improvement to be had, you're going to get it, as you just saw with Costco. And Costco is not even the most liquid stock in the world. I mean, it's not too bad, but it's not SPY, it's not Meta, it's not Apple. And things like that. So anyway, there's a quick little Jimmy Fallon monologue about price discovery. All right, so there is Costco over and done with. Okay, GDX. Wow, we're already 15 minutes in. That's crazy, guys. It's so fast. It's so fast. You guys have no idea. No idea. Let's see. I want to skip down to. So we'll come back to GDX and Nike and Starbucks potentially. I want to make sure we do silver today because this is the other one that does require some amount of action on our part. Okay, so silver, when we left on, let me look at a chart of silver. When we left, it was what, a week ago? My last show was, let me think. No, the last show that we did, yeah, it was New Year's Eve. The last show that we did was New Year's Eve. That's right. Yeah, because I gave you guys my predictions for the year, and I think I predicted SLV at like 88 or 89. So we are well on our way to nailing that prediction here, 11 days into the new year. But if we go back to December 31st. So it was right here. So look at that. Silver was down to 64, right? It is now at 77.77. Can there be a more feng shui number than 77.77? I mean, that's got some biblical roots, man. Like that is some good stuff right there. And so silver was 64. It is all the way up to 77, almost 78 now. And so obviously our strangle that is 53, 64 and a half is not necessarily in a great spot. Like this is definitely a strangle that's going to need some love. It's going to need some TLC and need a little bit of attention. And so I think for us right here, I mean, silver is obviously a mover. I mean, look at the IV rank. The IV rank is at 99. Right? I think it was actually over 100 a little bit earlier today when silver was even higher. And so the IV rank of silver could not possibly be higher. I mean, I guess obviously it can go over 100, but essentially we're at the tippity top of the totem pole here. I think for us, what we're going to do is I don't want to do nothing because I think it's time to make an adjustment. And I think it's time to roll this put up because the put you can see is only marking at 29 cents. And so I think what I want to do here is let's roll the put up and maybe we stay in the February cycle. There's still 39 days to go, which is a very long time. And let's go ahead and straddle this guy off. Let's straddle this strangle off. This is typically, one of the first or earliest adjustments you would make on a strangle where things have kind of gone wrong. Have we done an adjustment on this yet? Let me actually look at this really quick. If I bring up my chains here, we did the original trade. Yeah, we did one adjustment. Oh, yeah. We just rolled it out. We rolled it out and we recentered it. That's right. So I remember now. It's all coming back to me. Celine Dion nailed it, man. 15, 25, 37 years ago, whenever it was. She absolutely nailed it. So December 9th, we did the strangle for 206. On December 22nd, we rolled out from February to January. I'm sorry, even from January to February. That's probably makes a little bit more sense. And we picked up another 209. We also kind of, shifted around the strikes to recenter. We rolled the put up from 50 to 53, and we rolled the call up just a smidge, like half a titch from 63 to 64 and a half. And so it ended up being a good move at the time. Again, the rearview mirror. I mean, it's batting. I mean, if you look at the league leaders, Roman Anthony's at about 425, 430. The rearview mirror is at like 405, 410. And so that's kind of your 1-2 punch. And so the rearview mirror is doing quite well for itself. But for us right here, I think the move that I want to make is let's roll the put up from 53 and let's see what a straddle would look like. I don't want to go inverted just yet because this thing moves around so much that we could easily see this thing back in the 60s this week. I mean, it could happen tomorrow, like after the CPI print. It could happen Wednesday after the SCOTUS ruling and all that stuff. So let's go into the trade page here. Let's go to February and let's see. I'm going to buy back my put. And what if I roll it up to the straddle? I mean, that looks really good, guys. Typically, with a strangle, you're going, you're obviously rolling out in time when it makes sense, like we did from January to February back on December 22nd. But when it comes to shifting around the strikes, generally speaking, you're going, wide strangle, tighter strangle, straddle, and then inverted if you even want to go inverted. Some people don't like to go inverted, and that kind of makes sense. The straddle can be the final stop on the train tracks if that's what you would prefer. For me right here, though, I don't really think I want to just kind of gingerly roll the put up into a tighter strangle because the move has been so pronounced and the move has been so significant. Let's go ahead. Let's bring the put all the way up to the call. We'll decide later on if I want to go inverted at some point. I may choose not to. I may choose to do that. Right now, I've got extrinsic value working for me. I'm still going to be bearish on silver just because I'm playing kind of the short-term contrarian, position on this asset like I do most assets. And again, I mean, working with Nick and Tony in the morning now, like they're momentum bros. Like I don't even know if that's allowed anymore. Like I'm not even sure we should be saying this on the show anymore. But that's just the way that it is. And so I think let's roll the put up from 53 to 64.5. And yeah, I think I like it. So let's do that. And then let's go ahead and see if we can get a fill really quick. And then, man, we're right at about the halfway mark of the show. All right, so $1.33. I want to get to you guys, man. I see you guys in the chat. See Trader Nate's here. Man, look at Allison is in the house. Man, I appreciate you guys so much. Jared Kramer's here. Wolf is in the house. Man, good stuff. Good stuff. All right, let's go ahead and let's do, I'll tell you what. Let's do a little something. We're back from vacation. We're back in the swing of things. Let's go ahead and let's do a, let's see. What if I do, let's go to SPX. What if we do a little, should we light a stack of cash on fire today? I mean, would it be a complete day if we didn't do that? Like, I feel like it's almost a requirement at this point. Let's go ahead. So I'm thinking about CPI tomorrow. And I'm thinking about, man, I'm really surprised at the market strength today. I mean, with all the stuff that happened last night, I mean, the market was down a couple hundred points. It looked like there was a lot of uncertainty in the air. And the market just, man, it just does not give a rip. Doesn't give a rip at all. And so what do we do when the market doesn't give a rip? If you can't beat them, you join them. Like if you can't beat them, you join them. So I think let's do an upside butterfly in SPX for CPI tomorrow. What if I did a 69.85? Again, I'm just kind of tinkering around with some things. 70.20 and then a 70.55. 35 points wide. Can I do this for $5? Whoa, 960. What? Man, that is expensive. Wow, they're really taking you to the cleaners on the upside here. Are they going to make us go to the downside? Man, that's a very expensive butterfly. Very expensive. It's only 35 points wide. Wow, I can't believe that. I thought maybe $7 on the high end, but that's a very expensive butterfly. And we're not even at the expected move. Like, generally speaking with butterflies, the closer to where the stock is, the more expensive it's going to be. So, the more neutral you make the butterfly, the more expensive it's going to be because you're not requiring any type of movement out of the market. And so that's kind of the higher probability play. If you start moving the short strike away from where the market is, then the cost of the butterfly tends to go down. And so here, I wasn't even anchoring on the top side of the expected move. We were outside of the top side of the expected move, and it's still $9.60. Wow, that's really, really wild. Let me set up a similar trade on the downside, and let me just see. I'm just curious. Am I going to pass? Am I actually going to be disciplined enough to walk away? Man, it's never been done before. That would really be something. But let's go. Let's see. What if I do a 69.80? 69.45, I guess, would be. I'm trying to find something that's similar in nature to what we just set up on the upside. 69.80, 69.45, 69.10. Would be it. Wow, that's only $5.85. Look at that price. That's half the cost. That is half the cost. You know, that call butterfly was like shopping at Whole Foods. I mean, this is Aldi, man. Like we were at Aldi on the downside, which that makes sense because normally if you are at Aldi, you are certainly on the downside. And so 69.80, 69.45, 69. I love Aldi, by the way. 69.80, 69.45, 69.10. Yeah, man, I'm passing on all this stuff. I'm walking away from all of it, man. I'm walking away from all of it. It's a new year. It's a new dawn. It's a new era. We're going to be a wee little bit disciplined. Probably loosen up on all that by the end of the week. But for now, well, let's at least let's give it a shot. And so, all right, let's see. Where are we at? Let me get to you guys, man. I see you guys in the chat. Where are you guys at? Let me surprise and delight somebody near the end. I'm going to surprise and delight somebody that like just snuck into the chat. DTM Lao says surprised and delighted. Man, I just surprised and delighted your surprised and delighted comment. So I appreciate you there, DTM Lao. And so that's some good stuff. Griffin Jones just slid into the chat at the very, very end. Griffin Jones says, I'm sitting in multiple whole lots of Costco with long stock and a single short 39 DTE covered call at 1,000. I don't want to sell a put, close my call. I don't want to sell put, close my call, or sell more calls. Okay. I mean, it looks like, so, I don't know what the question might be there, Griffin. Let me think here. I'm sitting in multiple lots of Costco with long stock and a single short 39 DTE covered call at 1,000. I don't want to sell a put, close my call, or sell more calls. Well, let me just comment on one thing about your position that I really, really like. You didn't even have a question in there, so this is kind of unsolicited, suggestions, but take them for what they're worth. Feel free to discard upon arrival. So you have multiple lots of Costco. You've got 300 shares, 500 shares, whatever, right? You have 100 of those shares covered by a call. Here's what I really like about this. When you have like multiple lots, multiple hundreds of shares, but you want to get premium working for you, but you like the stock long term. You want to leave some upside potential when it comes to the long term stock appreciation of that company. I really like using covered calls on just some of the shares, which is what you've done here. I really, really like that strategy. When you've built up a position that has multiple hundreds of shares or multiple lots, you don't have to cover them all. You can just cover half of them or cover a third of them, cover 65% of them. And you can choose how much premium you want to lean into, but having that upside, kind of uncapped exposure can be really, really nice for the long-term potential of the position. If it is a stock that you like, it's part of kind of your longer-term portfolio. And so I like what you've done there. I really, really like it. And so, man, let's go to the beginning and let's see where you guys are at. Man, look at you guys. I see Ranch is in the house. Looks like we're back. We are indeed back, my friend. Thank you so much for being here and being a part of the show. I appreciate you, man. I appreciate you so much. And so thank you there, Ranch. The Preston in the house, Dr. Jim. So glad you're back, my man. Man, it feels good to be here. It feels very, very good to be back with you all because you guys are like my family, man. You guys are like, the third or fourth cousins that like you oftentimes forget about them. But then when you see them again, you're like, oh yeah, you're part of the family. And so that's you guys. And so I appreciate you guys. So the Preston says, with SPY at all-time highs, is selling put spread still a good idea, or should we be looking at something else? Well, this is the age-old question, right? I mean, and this is really depends on how you view the market, right? And so, when it comes to, the market being at all-time highs, right? I still have, even though I'm not sure it's allowed any longer. I still have a short-term contrarian view when it comes to directional biases that I like to place in indexes or individual stocks or whatever. And so looking at those things, when I'm looking at the market, I'm probably leaning a little bit more short than I'm leaning long. Even when I'm looking at metals, it's like, I don't know, man, maybe lean a little bit short. I know that's crazy. I know you're getting taken out to the cleaners. But when I look at that, I'm like, I don't know, man. And so when I look at the, market metals, whatever, I tend to have a shorter term contrarian view and just understanding that that's the beautiful thing about short premium is that you can be pretty wrong and still move forward, right? Which really, really helps out someone like me who I'm pretty wrong a lot of the time. And so when I think about the directional bias in a given position, doing it with premium or even having like an outright directional play, but then premium comes in later, these are things that can be really, really, really effective in adding levels of versatility to your position that you simply cannot access otherwise. And so when I look at this market, put spreads are okay because it's defined risk, right? So even if you're completely wrong, CPI sends us through the floor, the SCOTUS ruling sends us through the floor, something else sends us through the floor, whatever. PPI is also Wednesday. whatever it is. I mean, obviously the risk is defined. And so, I mean, when it comes to defined risk strategies, that's one of obviously the biggest benefits of those strategies is the simple fact that the worst case scenario on order entry. That being said, I would probably lean more short than I would, long when it comes to playing something in SPY. Not only because of my directional bias leanings, which don't mean very much, of course, but when you go to, like, if I go to February and I go to, if I go to, like, let's say I wanted to sell a put spread and I want to collect 1/3 the width, right? Actually, let's try to collect 40% the width because that's typically where I like to live. So let me do like a $5 wide. Let me sell a 690 and buy like a 685. Okay, so you can see right here, right? You've got the stock at 696. And your short strike on the short put is 690. And you're only collecting $1.29, $1.30. That is not nearly enough in my humble opinion. Right? I'm going to need a lot more to balance out the risk return relationship in a way that makes a little bit more sense. So the only way to do that here would be to roll the strikes in closer to where the stock is currently. So my 690 short strike needs to become like a 692 or a 694. So if I roll this guy in, so let's try, this is a 690, 685. Let's try a 692, 687. Okay, now I'm at $1.40, but I'm still not even there. So let's try a 694, 689. That's $1.55. I'm still not there. Let's do a 695, 690. So this is the at the money spread, right? This is the at the money spread. You can see for yourself. This is not my opinion. This is not subjective conjecture. This is the objective truth that the market is presenting to us. You are only collecting $1.60 on the short put spread. That's not even 1/3 the width of the strikes. I'm looking for even more than that, and we're not even there. My probability of profit is only 54%. Now, my P50 is really good at 80%, of course, but it just goes to show you that you have essentially a razor-thin level of wiggle room and buffer on this position. I don't love it. I don't love it at all. So if I flip around to the other side, then what we're going to see here, let's clear that away. Let's go to the call side. So I'm just going to start with the at-the-money call spread. And you're going to see it's going to be selling for significantly more than that put spread was. So if I sell, like a 690, I'll do like a 697. That's even slightly out of the money, but it's fine. It doesn't matter. And then I buy a 702. I'm collecting almost $3 for that. And look at that. I've got the same probability, right? I've got the same pop. Now the P50 is a lot less, but the same probability, POP, is the short put spread and the short call spread with the at-the-money strikes essentially, but I'm collecting almost double on the short call spread side. Now, obviously, I'm not going to do something like this because I'm going to use the fact that the pricing is so much more favorable on the call side to my advantage and kind of stretch out the probabilities a bit more in my favor. So let's do that here. Let's go. I'm going to go all the way down to as far as I can go on the screen. So I'm going up in the strikes to collect about $2. So let's try, let me do like a 700, 705. That's still 266. Let's do a 705, 710. All right, that's 220. Let's do a 708, 713. That might be the winner. Okay, that's $1.92. So let me go 707, 712. There it is, 201. So this trade would be something that makes a lot more sense to me personally. Because, now the pricing is so much more favorable. The probabilities are much, much higher. The P50s obviously are higher on the put side than the call side, but still, I mean, it's fairly comparable. We're 80% on the one, 72 to 75% on this one. It's floating around, obviously, as the market floats around. But the risk return is so much more favorable, in my opinion. Now, again, I mean, you're fighting against the positive drift. You're fighting against, the machine's, desire to pump the market higher, whoever the machine might be, Sosnoffs, Sheridans, Batistas, etc. And so those are essentially going to be the usual suspects. But I kind of like, the short call spread here over the short put spread. And so that's how I would look at this, but again, it's, this is the age-old question, right? Momentum versus contrarian, right? Do you fade the move or do you ride the move, right? It's very similar to a squats, deadlifts conversation. Very similar to a pancakes, waffles discussion. Very similar to like a chocolate chip cookie or brownie discussion, which that's obviously a pretty clear winner with the chocolate chip cookie. But the other ones, you can make a case for either side. And so those are my thoughts there, the Preston. Great question, my friend. I appreciate you. Man, we are in mid-season form, right? 9 minutes per question. That's about right, I'd say. So Sam L's in the house. What's going on there, Sam L? Dr. Jim, the man, the myth, the legend, back from break. Hope the dad mode vacation was solid and the kids didn't run your VO2 max into the ground. I made sure to do a lot of resting, so don't worry, my friend. My VO2 max is it's never been lower. It's absolutely never been lower, so don't worry about that, my friend. But Doc, you are coming back with pure natty dad bod gains, or did you find some special supplements in that South Carolina cold to help you handle the market's craziness? No special supplements. But it was pretty chilly up there, man. Like it was, I'm going to say it was in the low 40s, mid 40s, maybe 50. I had like 56, 59, but I was like, man, it's chilly outside. Like I almost had to put pants on. Like I didn't, but it was really, really close, man. Really, really close. And so, but thank you there, Samuel. I appreciate you so much, my friend. Ranch, back in the house, hanging with the doc today, man. Let's do it. Let's 100% do it. Wolf in the house. Dr. Jim pulling off the tenured professor look today. Flowing lettuce glasses and a salt and pepper beer. Welcome back. Missed you, man. I missed you too. I absolutely missed you too. Actually, the reason why I had my glasses on is because I scratched my eye a couple of days ago. And my eye is healing. I've got like drops and stuff. And so I have a follow-up appointment on Wednesday with the eye doctor. And so if it doesn't heal by then, I may have to miss Wednesday's show to go have her look at my eye and stuff. But if it's healing, then we should be good to go. But you guys are gonna get the professor look here for a couple of days. And so Sam L, daily algo ritual, 1 like, 1 comment, and 0 ego lifting in the portfolio. I appreciate you, my friend. Appreciate you so much. Yes, please, guys, like the stream if you haven't done so already. Hey, subscribe to the channel if you haven't done that already. That would be great. And of course, put something in the chat for the love of the algo. That's the only reason why you're doing it. We're not doing it to learn. We're not doing it to get our questions answered. That is all secondary to us showing and kind of, demonstrating our love for the algo. And so I appreciate you. Brian says, was Dr. J that gray last year? I don't know what that means, man, but maybe not. Yeah, I'm kind of, because I'm really, I have fallen behind on my trimming duties of the beard. But yeah, it's really kind of, it's doing some things, man. And that's all from the kids. Org Daniel, Happy New Year, Dr. Jim. Hope you had a wonderful time with the fam. Expect the move season is on. It certainly is. It absolutely is. And yes, we had a great time, but it feels so good to be back. And NASDAQ 26,000, EME S&P 7,000. Like we are 100% back. Silver 100. Like, let's go, man. Greg Lutton in the house. What's going on there, Greg Lutton? Sam L, pumping the algo harder than a pre-workout scoop before heavy leg day. Today was leg day, actually. Pretty light leg day. Just kind of getting back in the swing of things. But we're going with the old school pre-workouts. I'm going with NO Explode. You guys remember NO Explode? I didn't really like NO Explode back when it was like in its prime, like back in its heyday. But I was like, I haven't, for whatever reason, there may have been a sale at Vitamin Shop or whatever. I'm like, I'll give it a shot. It's pretty decent. Now, the watermelon flavor that I've got, that is nasty. So I wouldn't go with that. But the actual effects of the product are actually pretty solid. And so I'm pretty happy with it, honestly. But let's see. Ron Vashar, happy second week of the new year. For the love of the algo with glasses, my man. It will be awesome that you can finally see what trades you are putting on. Yes, I hope it does help a little bit. I still have a sneaking suspicion that there'll be plenty of smoke in the air. Like I still have a very, very good feeling that the flames will continue to be stoked along the way. So you don't have to worry about that. Like there will be cash that will be set ablaze on a very regular basis. And so I have a strong inclination that that's going to be the case. But thank you there, Ron, for sure. I appreciate you. Wolf, Vama, just to throw a wrinkle at the algo. That's what I'm saying. Talked about Vama with Tony and Nick this morning. And Nick was on my side, but Tony completely disagreed with me. And I was like, all right, man, like we are back. We are 100% back. And so he's wrong, of course. But it felt good to be back on the show with those guys. So see, NY Atasha says, hey, Dr. Jim, I had a deep in the money covered call at 200 strike in MU. 39 days to go. I'm considering taking the loss and reopening a 290 430 strangle with 39 days to go for approximately $12. Is this approach better than constantly rolling in the money? Okay. So MU at 345. Okay. So this is very, very important. Thank you so much for this question. NY Atasha. I appreciate you if I'm even saying that right. I'm doing my best. And so I appreciate you so much. So first and foremost, this is really important. Now, I don't know what your basis was. I don't know if this was like a long-term project, but the way you wrote it, it sounds like you just had shares. You sold, the 200 call against those shares, and MU has just ripped up through the 200 call. So that's how I am interpreting your situation. If I'm wrong, then my apologies, but I'm just kind of trying to make the best use of the information you gave me. This is not a loss. This is not a losing position. And so I want to kind of reframe the way you're looking at this. Now, did you miss out on potential gains? You did. Like, was there an opportunity cost on having that short call? There absolutely was. So I'm not trying to paint this into something that it's not, but it's important that we categorize this correctly, simply because this is not like my silver strangle. That's a loss. That's a losing trade. It's not a situation where it's like, man, had I done something differently or done nothing at all, I would have made a lot more money. That's a totally different type of discussion. And so this is a winning trade for you. So what I would do, NY Tasha, if you want to close the trade, by all means, just close it down, close the shares and the call, close them together as a package. Like, I wouldn't be breaking them apart at this point because they were intended to go together. So I would keep them together. And then sure, if you want to trade strangles and MU now, I mean, that would definitely be, a worthwhile thing to consider. You've got an IV rank of 43. And so the volatility is high. I mean, there's, plenty of opportunity to sell premium in here. You could be neutral, you could be bearish, you could be bullish. You can do whatever you want to do. But I want to encourage you to reframe what happened on this position. It's not as good as it could have been, of course, but again, the rearview mirror is doing quite well for itself. Like, the rearview mirror has a tendency of kind of knowing exactly how things should have gone. And so I would just, close it down and do something else if you want to, but it's not a losing trade. And so, and then NY Tasha says, call for little extrinsic. What are your thoughts? Thank you. Yeah, it's same thing. Right? I mean, if you want to close it together and start something new with a different strategy, like a short strangle or whatever. And I think that would be totally fine. So hopefully that helps, my friend. Let's see, Jared Kramer, those cancel crash algo is going to be working hard until big boy ER start. Yeah, that's right. Man, we've got earnings season coming up, right? We got crazy earnings season, don't we? Let's see here. If I go to, let's go to Tasty. Let's go to the Tasty default watch list. Yeah, let's go ahead and let's sort by earnings. Yeah, look at this, man. It's happening. We can't even stop it now. Goldman Sachs, Citigroup, January. Whoa, that's like this week. Wow, that's this week. Citigroup is on Wednesday. Goldman Sachs is on Thursday. Wow. And then the following week, we've got Netflix on January 20th. And then you've got Starbucks on January 27th. And they're not even telling us when it's going to be before the market or after the market. We have to wait and find out, I suppose. And then after that, you've got IBM and Microsoft and Tesla and Apple. I think the USA earnings are somewhere in there too, right? Man, this next Powell meeting, this thing is going to be crazy because he always gets questions about the administration. He always gets questions about Trump. He always gets questions about whatever. And he's done an amazing job of just saying, hey, I'm not addressing any of that. Like, we're just going to stay focused on the task at hand. And I'm like, all right, I kind of appreciate that. I mean, you may feel differently about that, whatever, but I kind of appreciate that. But then Sunday night, like, the whole purpose of that video was to kind of like retaliate or respond, I should say, not necessarily retaliate, but respond to kind of like the DOJ and the administration, whatever. And I was like, all right, so now all of a sudden things are a little bit different. So it's going to be very curious to see, or I'm curious to see how he responds to, things that come his way that are going to be politically related, because he's kind of forfeited the right to sidestep those things now, since he came out on a Sunday night when we were all watching my 49ers put away the Eagles. And he ruined the whole flow, man. Well, he almost ruined the flow. But my boy Brock Purdy, like, he got it done. I've been telling you all about him for years. But let's see, Stephen Bivens in the house. What's going on there, Stephen Bivens? Dr. Jim, I think I want to short the airlines, UAL and DAL, after their earnings. Probably via short calls, 45-ish DT. Any thoughts or objections on this? No. So I have to go, but I really like the strategy. So maybe like the day after earnings, when volatility is still high, that can be a great time to put on new short premium positions. You've already gotten through the binary event that is the earnings, but there could still be some opportunity there. But I got to go. I got to get you guys to Tim. Man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Look who's back testing. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Hello, Tim Knight here, and we continue to get into an increasingly zany world. I'm sure you saw last night the news from Jerome Powell. If you didn't, the gist of it was that the executive branch is seeking criminal prosecution against members of the Federal Reserve for their remodeling project. So, I'm reminded of the frog in boiling water parable, because day by day we're getting accustomed to crazier and crazier things. And tomorrow I wake up and Donald Trump could announce that he's the Queen of Scandinavia, and be like, well, isn't that something? And it wouldn't faze me. It wouldn't faze any of you, I don't think, because the announcements coming out of DC, the things going on around us are getting loopier all the time. And the market seems to be getting accustomed to it as well, because when the news hit yesterday, the market freaked, and the NQ fell hundreds of points. Precious metals exploded higher, equities were all down, and the market opened, and the market blinked a couple of times, went, and just moved on. Oh, he's the president of Venezuela now. How about that? And then just on we go. So we're at lifetime highs again. Everything is green. My mantra, bullish, precious, bearish equities, continues to do great only because precious is so strong. The bearish equities still ain't working out. I'll mention, in fairness, that I have 24 short positions, and 5 or 6 of them are up a little. On the whole, they're still doing fine. So if you look hard enough, there are opportunities, but heaven knows that equities are by and large going up every single day. However, precious metals are still blasting stronger. And so the thesis still holds, but boy, I wish both sides of the equation would work out more in a more complementary fashion, instead of working merely because precious is so incredibly strong. And I'm saying on a daily basis now, it's a signal. Something big is happening. Silver did not go up hundreds of % because people sure thought those necklaces looked sharp all of a sudden. There's something very big going on. And I remember when some of you, you slopers out there know that one day I brought home a 1,000-ounce bar of silver, because in those days, this is like in the mid 2000s, it was like aluminum foil. Who wanted silver? Is sort of the garbage metal. Gold's where it's at. Silver's just sort of like junk. $7 an ounce. I sold it, regrettably, for reasons we shan't go into. But obviously a 10x, 11x, 12x increase since then is indicative of something big happening. Bear though I may be, I finally stopped learning a while ago not to, even on a short-term basis, get in front of this metals mania, because it is potent. As vertical as the charts may look, it's just like, okay, I'm going to stay way over in that corner over there. I'm not touching anything. So it's disappointing, obviously. I was kind of looking forward to a nice red day on equities. Nope, not happening. My profits on my short stays they exist, but they're kind of peewee sized compared to what I was hoping for. But what can you do, right? So I've got some charts ready for you. And I think, as I said Friday, the bulls are definitely in the catbird seat here. So let's thumb through them. Here's the spider. This is a bullish looking chart. There, I said it. I mean, absolutely bullish looking. We're breaking above this very clean triangle pattern. And incidentally, some of you wrote saying that, hey, I can see the cursor now, so the whole spotlight thing works, so that's good to know. But yeah, I cannot squint my eyes a certain way and look cockeyed at this and make a bearish argument. This is a bullish chart. There, end of story. IWM, the small caps, they're also acting in a bullish fashion because even at their weakest today, look what they did. That line, Friday and today, support, they did not go below it. That line is being recognized and respected as support. Overseas is even hotter than the US because even when the US was down this morning, early on, emerging markets in China, they were up strong. EEM up lifetime highs, 1.35% gain there. And China, by way of FXI, up over 3%, an explosively strong bar there, blasting to multi-month high for China. Getting back closer to home, the cubes are up, but on the weak side, they're up 0.25%. They're still prospectively quite bullishly configured, as I've said day after day after day, if they can get past this gap. That gap is really important. And Friday and today are nice big green bars that the bulls want to see, and it could well happen. There's some big events coming. CPI coming out tomorrow before the open. PPI is coming up Wednesday before the open, and I think, giant asterisk next to that, I think the Supreme Court might be ruling on the tariff thing like we thought they would on Friday. They don't pre-announce in advance that these are the cases we're going to announce. Get your programs. You don't know the players without the program. No, they just say it when it comes out. So there's a possibility, I believe, that at 10 a.m. on Wednesday, the Supreme Court will trot out their cases, one of which might be the very important ruling on tariffs. Okay, so that's the cubes. Semiconductors, SMH, are also up 0.57%. I have thrown in the towel on my SMH puts. My puts are all, I've only got 6 other puts right now. They're all Junes. I'm keeping it conservative. SMH was a little more aggressive. They were March puts. Dud. So I'm out of there. This is just, between the spider and the cubes and this chart here particularly, no. I just can't cross my fingers and hope it falls at some point. It's just too strong. So I'm out of that. SMH. I do still have some shorts on individual semiconductors though, and you know what? Strong as the cubes are, strong as SMH is, some of these semiconductors are defying that sort of rise. ON, down almost 6%. Not bad. You know, if a stock can behave that poorly in this strong of a sector, it's got something going for it on the bearish side. So that's terrific. ON down hard, over 6% now. NVIDIA is up, but pretty puny, 0.66%. It is a huge underperformer, and this larger pattern is still very much in play. It could absolutely, eventually, work its way down to the lower bound of that support and break it. So I think today's lift, modest as it is being driven only by the fact that everything else is up. Micron MU is looking at another lifetime high close today, but here too, the rise is pretty pipsqueak, 0.32%. These have risen hundreds and hundreds of percent just in the past half year, and trees do not grow to the sky. Another item I'm short is ARM Holdings, ARM, which is down not much, only about 0.2%. But it has been a very big underperformer as well. And as I pointed out, historically, it tends to top and drop. It tends to hammer out these nice big topping patterns and then spend some months working its way lower. So I'm hanging on to that one as well. A few other short positions I'm involved in. Axon, AXON. This is the body cam and taser manufacturer. They're down a little, about 0.5%, beneath a very well-formed, quite large topping pattern, which it plunged beneath and has pushed back toward, and it's just under the base of that. We've also got Bath and Body Works, BBWI, which sealed its gap, but it's starting to show some weakness now, down almost 3%. And as we back away from this, as you can see, it's fallen a tremendous amount already. It's lost the vast majority of its value, but long term, I think it's got much lower prices to go. And so today helps. That's a step in the right direction. I wish I was in this. I'm not. I used to trade this frequently, but I kind of stopped following it. But Abercrombie & Fitch, a big plunge today, almost an 18% drop. And that is on the heels of an enormous rise. So just to review this a little bit, we had a big distribution top here. It fell, recovered partly, fell some more. And then starting back here, around Thanksgiving, it began a very powerful rally. And it more than doubled in price. But they came out with their holiday sales results, and they are not good. And so they've undone a big chunk of that triple-digit price increase that it's enjoyed recently. So that's ANF. Another item that I am short is Oklo, OKLO. I mentioned this on Friday. They opened extremely strong on Friday, so I shorted into strength, closed the day with a profit on that, and I'm continuing to hold that. This is very richly valued, and it's predicated upon AI companies needing lots of nuclear power. So that's hang on to that one as well. Just kind of tidying up housekeeping. I'm still. It's funny because I was kind of mad at myself last night seeing things plunge because I was kind of conservatively positioned, only about 75% exposure. I'm not upset anymore because it turns out that was fine. I remain about 75% exposed, and I'm glad I wasn't like all in or anything like that. And I certainly am even more happy that the market didn't open and I went crazy shorting things like left, right, and sideways, because that would have been a big mistake because we basically opened at the lows for the day. So still pretty conservatively positioned in spite of these hodgepodge of shorts I'm showing you. Another one I'm short is Royal Caribbean, RCL. This one's sinking about 3.75% today. And let's do a couple more. There's BDN, which is Brandywine. This is down almost 3%. And as I've mentioned on this one, this also has lost the vast majority of its value. But I think there's still lower prices to go in spite of it being pretty cheap. I mean, pretty nominally very, very low priced. DoorDash, DASH, down about 0.75%. That's one of the handful of puts I've got, the June puts. And one last one, DKS, Dick's Sporting Goods, also down about 0.75%. Still working on what could be a really substantial top here. Not quite complete yet. Let's see if I can just real quick just rough this out. Something like so. Just quick and sloppy, something like that. As far as metals go, the superstar is silver. SLV, the ETF is up about 6.5%. Lifetime high, obviously. Just tremendous strength there. The futures themselves, also lifetime high, 7.23% gain on those, and a quite consistent rise since the Liberation Day bottom. We have more than tripled since then. Gold, GLD, is also at a lifetime high, up over 2%. As I mentioned last week, in spite of this raspy little 4 days here, this is a well-formed pattern. And so I'm not surprised to see the strength. We could be at $5,000 before this month is out on gold. There's the futures themselves. Lifetime high, 2.48%. Just extremely well positioned. And this is in sharp contrast to Bitcoin, because Bitcoin, yes, it's up a little, But considering the risk, considering the novelty, considering the uncertainty, that's a pretty lousy return to make on that much risk. Plus, I mean, compare this to, say, silver. Silver's just setting the world on fire, and Bitcoin's flopping around like a dead bass in a boat at the same levels it was in November of 2024. So 14 months of terrifying risk, all for nothing. You know, not so good. Anywho, the miners, the companies that mine real metal that you can hold in your hands, GDX, up almost 4%, lifetime high, looking real good. And naturally, dust is being ground into just that, new lifetime low on this. The leveraged bearish fund of miners sinking, and they've got to reverse split those ones soon because it's getting down to, you know, penny stock land. And just a quick peek at palladium, PALL, up, although not spectacularly, up about 2%, much riskier than the others. I'll close with my one bullish item. I'm very bullish on precious metals, but the one equity I still like on the long side is Rivian, RIVN. It is a beautiful chart, and from a fundamental standpoint, much less expensive than Tesla. So this is the one stock I'm really enamored with on the long side. It is exactly the bottom of the hour. That's great. We nailed it. So I will see you tomorrow, post CPI, and we'll see what new news is out then. So good night. Bye-bye.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click, from micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, my friend, we are back. And of course, E-minis are up on the day here. We're up 13, 7,018, a couple ticks off all-time highs. You got the NASDAQ up 56. You got the Dow up 53. And the Russell, actually the strongest of the group, up 10 points, about 0.4%. Oil catching a little bit of a bid, /CL 59.35. Volatility futures basically flat on the day. Looked like we had a little bit of vol coming in over the weekend. It has since been taken out with this rally. Bonds down 5 ticks. You got gold and silver both moonshotting. Looks like we're going to be bartering in the future here. You've got gold up $112, silver up $6, and even Bitcoin is up on the day, 1,300. Did you have this in your Rolodex of outcomes for the session?
I did not. Honestly, I still feel like the market is trying to figure out what this year is going to be like, what the stories are going to be, what it's going to be made of. Everything except for metals. Metals have already figured it out. They know we're going up, and that's it, and that's all.
It feels like we're going to be buying meat with our metals here. It's crazy.
I mean, the nice thing is as much as we joke about it, you can make so many different trades in all the different complex. I feel like I damn near have something on in just about almost all the different metals things. I walked by earlier, seeing the shows. I noticed Dr. Jim has a strangle on in GDX. I know I have a strangle on in SLV along with some options along put out in Feb to hold it against. I got a GC contract on a call spread further up in April, something I put on with Chris. It's just so many different things you can put on. I will say one of the stories of the day too does seem to be this credit card situation. We don't know how much it has legs yet, but there's been obviously movement in a lot of those credit card related names, a lot of the lenders. Capital One.
I hadn't bought up though. It's so
American Express. I mean, they're still down like 4 and 5%, 6%.
I was looking at Visa this morning. It's only down 1% right now, about $5. MasterCard down
because they're the what are they considered again? Visa and MasterCard are considered the merchants, issuers, I guess. Yeah, they're so I think Capital One and AXP and Synchrony, which SYF, right? I have never really. I don't even know what credit card that is. But those are the ones that got hit the most today. I would keep an eye on those. We'll see if this moves forward. You know what? It's like most things. Remember last week we saw some movement in the
defense stocks.
Defense stocks. Thank you. Right, and then earlier in the week we saw the moves with the oil names. And I think with this administration, because basically that's where these moves are coming from.
It's just a buying opportunity.
I don't know. I want to wait and see because. Again, when we look back last year, tariffs, I don't know about you, but I thought it was I thought the moves were a joke. I thought the moves were way too big for what was being talked about. Turned out I was wrong. And by the time you got to March, and it was a slow bleed, then you got to March and then you got to April. And so I think it behooves us to kind of see these through and see if these moves are real, right?
Yeah.
I don't know. That's just kind of how I'm looking at it. So I haven't done anything in those yet, but I'm keeping an eye on those 3 names. Synchrony, American Express, and Capital One.
I got long a little American Express because it was the biggest move in all those that we looked at. AXP down, I want to say like 5%.
Yeah, it was a sizable move.
So that's a pretty decent move. I will say you got some people calling out some of the bank stocks moving a little bit lower today. If
Earnings
you look at it
tomorrow?
A lot of them are coming this week. XLF, the ETF, it tracks the biggest ones. I mean, this is a small little haircut from the highs, but you do have JP Morgan on the docket this week. It's down $5 and change, trading at $3.23 right now. Wells Fargo is another one that has earnings coming up. These are all on Wednesday, I believe, before Tuesday before the open is JP Morgan, Delta, and then on Wednesday after the close, you have Wells Fargo, Citi, Bank of America, And then
probably you said bank.
Yeah, and then end of the week is like Morgan Stanley, Goldman Sachs, BlackRock. You have TSM in there too. So I guess JP Morgan is the one for the day. Do you have any interest there?
No, we were talking about it earlier today. I really don't. I mean, I don't know. Vol is so low. You can make a directional play. I just don't know. I got so many bullish directional plays. I don't really need to add any others right now, to be honest with you. So I think I'm just going to watch from the sidelines and wait until some of the big dogs really go. I mean, not that they aren't big dogs, but you know what I mean. The Microsofts, the Metas of the world. Although, honestly, the last 2 quarters I've been playing those, and that really hasn't worked out that great. I mean, I don't put up a bunch of capital. It's just these calendar calls, but still, I don't know. You know what else has been moving? And again, we talked about it on Friday, the idea of what was going on with the tariffs. They pushed that back to this coming Wednesday. We'll see if they actually do it. But Costco has had a steady bid to it ever since there's been this talk about maybe possibly repealing tariffs.
$60 in a week. A wild move.
Yeah.
Got bailed out on some of my diagonals there. I did a put ratio in JP Morgan. I don't really have a bone to pick there.
Is you?
But
you know what? I might do it in Goldman ahead of maybe I'll do it. Maybe, you're right. I should probably do a put situation just in case the market falls.
Yeah, you got some time for Goldman end of the week, and it might.
That's the free look. Get the free look.
Yeah, you get the free look, exactly. So you might get, a sympathy move if banks are down tomorrow on JP Morgan earnings, maybe you get a little bit of a pullback, and some of the rest of the names get a better entry spot for you. But it's tough with Ivy rank at 19. You have the 45% implied volatility here in the weekly, so
good call, Nikki. That's super high. The play.
I just did a standard, $5 wide put ratio spread right around the expected move. Break evens at 305. It doesn't seem like anything goes down, so why would we see any risk there?
Well, that's what I'm trying. I'm just trying it in case it does fall down. Again, I got a lot of bullish deltas, I feel, right now, so it wouldn't hurt to have a negative delta. Not that I don't want you to win on your trade, but I got long the 925, 915, just a week apart. So I'm short the 915 put in this expiration. Again, that's another thing this week. We got Jan expiration. And then I'm long the 925 put in the Jan 23 expiration in Goldman. So
Delta is another hard one because you don't have a ton of volatility there. Ivy rank at 23. It's a $71 stock here. It's down about $1 and change. It's hard to, if you're going to do like a ratio spread type trade, you're going like $2.50 wide. It's just not it's going to be a slow moving trade. I'm kind of looking at one that's out in the February monthly, but it just doesn't. I feel like
that's one you can also trade another one if you don't love neither. I mean, there's UAL, of course.
Yeah, you could do that as like a sympathy play. But this is when I'm starting to do this, I know that I'm getting myself in trouble. Like these are like fringe. I don't usually trade them. They don't have high implied.
I don't usually do this, but
yeah, I'm just going to do it small, and then it's like it turns into a lifelong position.
It can happen. It's true.
It seems like that's where I'm headed right now with some of these trades.
That's why when I do them, I just try to do somewhat of a small direction and not paying too much, and that way I can just get over it easier.
Yeah, I think you're right with the UA. When do they have earnings?
They got earnings on Tuesday. Next
Tuesday. Maybe I just wait on that one. Some of the other big movers today, just to give a highlight here, I'd like to go to the S&P 100. You got some of the chip names back in style. TSM is reporting earnings at the end of this week. But some big moves in like STX up $16 and change. Some of the like Microns had a red to green kind of move. AMD bouncing a little bit. You got some of the like Oracles, which has had a little bit of a pullback. AVGO is kind of one of the stronger of the group today. And then you got you mentioned Costco, Walmart up $4 and change today. They're getting added to the NASDAQ 100. Maybe that's kind of a front running of that move. You have some of the defense names like Boeing and GD. You got Cat in there. Eli Lilly has been super strong. So despite all the news and headlines and everything, it just continues to be a buy the dip market. And it seems like those that are down the most are moving the most to the upside here.
Yeah, I mean, there's no wall of worry. There's nothing that's it would seem that the market is really worried about. I personally am a little worried that we're seeing gold and silver move the way that they move. I mean, these are commodities; they do move like this, but whoa. It's a lot. I mean, it's a lot, dude. Like, I'll be the first to say it. These are big moves that are happening. And at some point, you just wonder, again, I don't think that, I'm not saying that, like, I think silver should be at $40 right now. I'm just saying, I mean, the 10 to 15% pullback wouldn't be a bad thing for gold and or silver.
We have Craig
healthy thing.
We have Craig tomorrow for Futures in Focus, our CME sponsored segment in the morning session. We're going to be talking about crude and all the ways you can trade it with CL, MCL, QM. But I will be asking him about the moves in the metals and when we're getting our big margin increase. I mean, silver volatility right now, you have an IV rank of 98, so you're basically at the highs. 5-day implied volatility change of about 6%. You have monthly implied volatility at 72-ish. It's going to be more expensive to hold those positions with all those things. And so there's got to be something coming soon. Gold, likewise.
He's totally not going to answer that.
I know. Of course not. But he'll tell us,
No, he's smart. No, he's good in his way of answering. He'll give some kind of answer.
It's all, I say this, with an air of jokingness to it, but it's all the span margin calculation. It incorporates volatility. I mean, that's one of the keys to the margin requirement is that when volatility increases, a relative expected range of the product increases. And so you have to hold more margin. So I would expect, just due to the volatility change that we're seeing here and the price movement, it's going to have to come pretty soon here.
I 100% agree. I think that's it. I mean, look, that is, you're absolutely right. And that's exactly how it works. And for those who don't even understand it, just look at the fact at how far above it's moving, like it's 1 week moving average. Just look at skew. I'm pretty sure skew is almost flat and that kind of thing right now. There's all these different tells that tell you at some point or another, it's too much. I mean, it's too much. I haven't even looked at skew, but I would be surprised if it's not almost flat. I mean, and I think that in itself tells you a whole lot. When gold and silver skew is not to the upside and it's flat, it tells you something's changing.
I asked
fundamentally
my dad this morning. What do you think the 100 strike calls are? 43 days out in silver. So you're talking about another,
like an SI, not SL.
SI, like another 20-ish percent to the upside. What do you think a delta is on those?
What? How far out?
43 days.
Well, 43 days. I mean, it's at 85. They might be 40 delta, huh?
They're the 30 delta-ish right now.
Okay.
31. Which is just incredible.
Incredible.
To talk about silver moving 20% in years past, those would be a nothing. I don't even think you'd have a bid on them.
Look,
when silver was back at 25, 2-3 years ago, those silver calls were nothing. It's unbelievable.
I know, it's crazy. I can't believe it. It's one of the few times I feel good about something I did. I did buy like physical silver, like 2021. I bought like a few bars. What do
you think you could get? Because I asked my dad this question too. Because I'm sitting there, I'm like, if you're a pawn shop or a jewelry store or whatever, and you're seeing silver with a 70% implied volatility, because they're probably looking at they're looking at the price move day to day.
You're looking at the price move for sure every single day.
And somebody comes in with 10 ounces, like at spot, it's $850. What are you giving them on that trade-in? With silver moving,
the way
$6.
These dudes do, they're giving them like maybe 500, maybe 400.
That's what I'm thinking is you're probably getting a $10, $20 difference to spot. That's what I would price that.
Yeah.
He didn't think so. He was like, no, they'll give you, 5% from spot. I'm like, no way. Yeah. If you think you're walking away at $80 an ounce, it was $80 an ounce on Friday.
They're definitely not doing that. Yeah. I don't know. I would tend to agree with you. I think they screw people over, man, especially at a pawn. You're talking about a pawn shop, right?
Yeah,
especially at a pawn shop. No, I mean the dealers are a little bit better. Like when you go straight to those dealers, they're a little bit better. Pawn shop, come on, because they just assume the average person doesn't really know.
You would,
and the average person actually doesn't really know, where it currently is trading.
I don't know. It's wild. The whole thing's wild.
The other thing I wanted to call out, our Taiwanese sources actually mentioned this early in the day. Frankie, of course, is one of them. We have many, by the way. But Qs is actually number 2 in options volume today, ahead of SPX. You mentioned a lot of those names earlier, a lot of those tech names that are moving, TSM, AMD, the like. There's clearly something going on today. A lot of options volume trading in Qs, 4 million to the tune of 4 million. So it's 2 behind that SPY.
Wow. Well, I mean, it seems like it's all options trading, given that E-minis on a day. I don't know if you've looked at the volume. What do you think we're at right now?
736.
It's a good guess. We were there about 30 minutes ago. We're at 875 right now, but it continues to be super low volume trading for the start of this year, which is not typical for a day where we were down in the overnight session, 0.3% ish, 40, 50 handles in the overnight session. You expect on downside moves to see a lot of volume come in. You really didn't have it today, which tells you that, it continues to be a buy the dip market. Never short a dull market. That's exactly what we had this morning. There was just no volume, no follow through to the move.
Yeah, outside of the big moves that we've seen in these metals, there's no that's what I keep talking about. There's no one story that seems to rock the market. Even this credit card situation today, I feel like in the past that would have been a bigger thing, a bigger deal across the whole landscape of financials. Moved a couple of names. That's pretty much it. We talked about the defense stuff last week. Again, that wasn't something that really rocked the market. So, until we get that, why wouldn't you buy the dip? Why not?
100%.
Especially when we were under 7,000 anyway. It's okay, this is going to happen. And we're still under 7,000 in SPX. That's the next thing. So, I imagine this should be a big expiration, don't you? It's January.
I would think
I don't know what the number is, but I'm sure it's going to be some kind of trillion. So it should be pretty big.
It's got to be some sort of record. We, as we were talking, we had our biggest move of quite a quiet tape. The last 3 hours, we had about a 10-point down move. That one too, like the others, has also been scoopy. That was literally 1 bar on my 1 minute chart here going into the close.
You know what's funny? I was putting this position on a Goldman. I didn't realize that it was up $10, $11, and it's been an instant winner for me. Maybe I should take it off. No, I'm just kidding.
That's how it always happens, right?
And no, it's usually the immediate fill, and we're like, oh my God, it's over. It's not going to work.
Yeah.
Immediate win. Wow, that's a rarity.
E-minis here up 13. NASDAQ gave up about 20, 30 handles here on that move. You got the Dow up 113. It's actually going the other way. It seems like they're buying some Dow. We might have some movement in JP Morgan, if I had to guess, just on that. No, a tiny bit of an up move here. Russell continuing to be strong. Do you have a favorite of the indices here that you like? You've got E-minis at highs. NASDAQ, couple 100 points off of highs. The Russell at highs. The Dow at highs. Everything kind of at highs. Does anything? Do you think you're a winner? Or
your boy made it sound like such a great idea to do the year-long trade that I'm in it now. Oh, so I've been doing it with MNQ. I've been in it for a month now.
You got to.
I know. But you know what? I will say it's I'm doing it in MNQ. It gives me sort of a core position to trade around everything. I think that's one of the things that I think I'm looking forward to. It gives me something to trade around. It allows me to like now I'm not going to be that interested in getting short puts in a lot of these tech names because I already got one.
Yeah.
I don't need to be going out doing a lot of individual names. I'd rather parlay it like this. So so to answer your question, that's my favorite one because it's up and it's making me money.
Hey, broken clock is right twice a day. I love it. I will say that the problem arises when everybody's on the same boat. So like when you get Katie on the same boat, or Glenn, or Thomas, when everybody's in consensus, like, yeah, that makes total sense. the three, when you get the three, you know it's a problem. So just you, Mike, that's okay. I'm good.
Yeah, it's just us. It's just us.
E-minis have bought back that dip. We're up to 70.21 here. We're about 4 points off the all-time highs. I think this will be an all-time high close.
I think you're right.
If we close here, I think we closed in like the middle of October. I think we got we closed lower on that one too. I don't
think we've have we closed over 7K?
I think we got to close over 7K at one point this year.
Yeah, I don't think we've
highs.
closed over 7K.
Yeah, closed 705 on Friday. That was our
okay, Friday was.
So we'll close, 15, 16 points higher here at this very moment.
What do you make of a little bit of Bitcoin move today? Is it starting to
I'll believe it when I see it. I mean, this thing, we've traded this 95 to 85 for the last couple months, which I think is more healthy than the forever up move that we've seen in the rest of the markets. But I do think Bitcoin has kind of found a little bit of a bottom here. At least it feels like it.
Yeah, no, it kind of seems like it's trying to anyway. I mean, again, I would say this speaks to sort of the maturity of the product. I mean, it's consolidating right now. Volatility is low, and it's not like it's at all-time lows or all-time highs. It's actually in the middle somewhere. Usually when it's all-time lows, the volatility is still elevated and you're worried about the next shoe to drop. I would say it's just consolidating. It's laying in the weeds right now. And most money obviously is not going towards it. Most people are either trying to buy SPX at all-time highs or trying to buy these metals.
It certainly is sentiment driven. Like when it's moving, you want to trade it. When it's not moving, it's just dead money. So it does seem that way. I do have my Taiwanese sources, Josh, in the chat here, giving us.
He's Cantonese. He's Cantonese source.
Oh, he's Cantonese. Okay, got it. I like that. We got to have the contrary source. We'll go first to the Taiwanese, then to the Cantonese. We've got VIX cash up, VVIX up, even the VIX 1 day up, which is a small little 1 day up. I mean, this is still a little.
Well, we got CPI tomorrow.
Yes, CPI.
That's why.
You got the tariff stuff on Wednesday. He's calling up. You've got TSM earnings at the end of this week, which I imagine is a big one for the chip space. A huge option expiration. VIX expiration next week, so that's after the options expire. So there are a number of things this week. It just doesn't seem like anything really matters.
Well, yeah, I mean, the market has been telling us that. You mentioned VIX 1D, good call out by Josh, but look, I mean, it's not moving even as much as it was last week when we were going into Friday. Remember that? It was a bigger move. This is kind of small. That tells you what to expect for this CPI tomorrow, basically. You talk about expected moves in SPX. I mean, the rest of the week, it's less than 1%. It's, and again, I'm not complaining. I mean, maybe a little bit. You want a little bit of vol, a little bit of back and forth action, but it's all good. I mean, this is a healthy market, I guess, is what we're seeing. At least one that doesn't seem to pay that much attention to the macro data that we've gotten more recently. I don't even remember if we really moved much on the jobs report. I guess the market liked it. It was fine. I don't know how real.
You think it's more just chop this week? Like you think this is just kind of a grind in every dip gets bought to flat, every rally gets sold to flat. Like, is this we pin SPX 7,000? You could buy a 25-point butterfly there.
You could.
$3.
I know, right? I mean, that might be the trade, honestly. I mean, considering we're going into expiration, I don't know.
That could be an interesting one.
Yeah, I don't know. Maybe. What is that? What is that going for?
You go 40 by 40 for $5. I mean, I feel like you got to, if you're going to do this, it's got to be kind of on the wider side because, yeah, let's do it. Okay. I did it for $4.80.
You did it? Which one did you do?
I did
the 7,000
4 day, so that's to the end of this week.
Yeah.
I did the PM settled. So not the AM one.
Yeah, I
I
never.
bought the 69.75.
Oh, you did a 25 wide. Okay.
I did a 40 point or 35 points wide. So I did the up to 710. So I sold the 710s and then I bought the 750. So I guess my math was wrong on this. So I have an extra $5 of risk, but that's fine. I did it at 480. So you're risking, let's just round it to 5 to make up to 3. If you pin, between 7,000 and 710. It's like a silly shot trade.
I see you. I like that. Yeah, it is kind of.
Again, this goes to what I was talking about earlier today. I am getting myself in trouble. I'm throwing good money out at bad trades. It's okay.
It is okay. I mean,
Yeah, you got to take some shots.
this is the kind. I mean, and those are cheap ways to take shots.
Yeah. E-minis right now up 12 going into the final 30, 40 seconds here. You got the NASDAQ up 26, the Dow up 90, you got the Russell up 13. The Russell is strongest of the group, up about 0.5%. Oil near the highs of the session here, 59.51, about 30 cents off the highs here. Volatility futures have remained at 16.15 here. Feels like 16 has kind of been our bottom spot here. Bonds down 4 ticks. Gold up 100. Silver up $5.75. Bitcoin up $1,200 here near the highs. You got in the morning tomorrow, JP Morgan and Delta Airlines. Those are your 2 earnings for the session tomorrow.
CPI as well in the morning.
CPI as well in the morning, 7:30. So you got that to look forward to. I'm sure the boys after the close here will have something to say about that. But the E-minis up 10 here. That's a new record close. Volatility basically unchanged. The buy the dip works again.
Are we going to get Dow 5,000 this week? 50,000, I mean? Dow 50,000?
That seems like a shoe.
Foregone conclusion?
200 points? Come on.
Might be.
Do that in an afternoon. So we'll see about that tomorrow. CPI, couple earnings in the morning. But we're going to take a quick little 90-second break, but stay tuned because we got more with Overtime. Chris and Ilya coming up next with you. We'll see you tomorrow morning. Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
tastytrade's Active Trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ergonomics. Didn't work for them, but maybe it'll work for us. It's Monday, January 12th, 2026. This is Overtime. I'm your host, Chris Vecchio, New York, Ilya Spivak's in San Francisco. We're here for the remainder of this half an hour as we wind down the trading day. Interesting trading day it was on the heel of the news last night after first call that Jerome Powell received subpoenas on Friday at the Federal Reserve, that he would be called in to talk, have a little discussion about the cost overruns for the Federal Reserve's building projects, which, if people remember when Trump went out to visit the site last year, I believe it was in July, Ilya,
Yes.
Powell was keen to point out on camera that the overruns were for a project unrelated to what the Fed was doing. So Powell plainly, in his statement last night, as he said on video, as they said in written form, this is effectively Trump trying to strong arm the Fed into cutting rates. And
He was very
on the president's web.
Yeah, he was very, very direct and very blunt in his response and said, this is pressure because I won't cut rates as the president wants. And instead, the Fed conducts its policy on our best understanding of what the economy should be looking like versus what it does look like and how we can serve the people best. This was, I mean, he spelled it out in no uncertain terms now.
No. And the market obviously last night reacted in two form, and that continued today. First off, initially weaker stock prices, a softer US dollar.
Yes.
Gold, silver strong out of the gate. We can go to our charts and we see here that half that equation remains in place. The dollar is weaker, but stocks, on the other hand, finished the day higher.
Yeah.
If you'd believe it, Polymarket and Co. are now saying that the odds of Trump firing Powell or Powell leaving this year are reduced. Oh my. Though that's not unheard of. Technically speaking, in February 2022, Powell finished his term as Fed chair. He was not formally reappointed until May of that year, but the FOMC did vote him as chair pro tempore, Ilya, and he was able to continue on in the role during that intermittent window. So who's to say that Powell, whose governorship runs until January 31st, 2028, isn't voted the next Fed chair once more by the Board of Governors because he does not abdicate the position, and a Senate Banking Committee doesn't set forth a Trump nominee, which adds another wrinkle to this. Tom Tillis, senator from North Carolina today, pointing out, of course, that this looks like weaponization of the DOJ, and if the DOJ is wanting to investigate the Fed, maybe the DOJ needs to be investigated. How dare you go after Federal Reserve Fed Chair Powell? Didn't you know you just created 1 million Fed Chair Powells out there, world? So the market resolves itself saying, oh, Powell's never leaving. We're going to have this real friction between the central bank and the government moving forward. Doesn't really mean anything for stock prices, except for the fact that they can ignore it and keep going up, I suppose. A fresh closing high for the S&P 500, but that's really shy of what's happening in gold, closing north of $4,600 an ounce for the first time ever. Silver prices up above $85 an ounce, Ilya. The dissolution of the global trust in the U.S. world order continues, and gold and silver remain the primary beneficiaries here at the start of this next week.
It's tough to say that what we're watching is the dissolution of the U.S.-led world order as such.
For me.
In this particular situation, because the dollar is not anything like what we're seeing in gold, and neither is Bitcoin. So what this looks like, again, I mean, we've talked about this. We're both long gold. We're both in it for the same type of reason. That there is clearly tons of policy uncertainty out there, and there is a desire for a unit of value transmission that isn't a sovereign one. And so what's going on here with gold, I mean, makes perfect sense. I'm just not sure that anybody is prepared to say that any of this amounts to sovereign risk in the US, because if you look at the bonds, they're not doing anything. If you look at the dollar, it's down a hair and very much back from its lows. It seems almost like the market is looking at this and going, right, so the thing against James Comey was dismissed. The thing against Letitia James was dismissed. Were we prepared to be worried about this? Is this another one of those things where spaghetti gets thrown against the wall and just falls off the wall?
I don't know. What I do find so fascinating and funny about today's market reaction isn't that the dollar's down, but that the yen is down versus the dollar, because there's an inherent read through that if Powell and co were leaning in the direction of cutting rates because of political pressure. Oh, God. Powell, who, in my view, probably was going to go down as upper half, top 4 Fed.
Top 4 or 5 Fed chairs of all time. Yeah.
But not top 2 or 3. Okay. Yeah, you just catapulted him into probably the top 1 or 2 positions. If
he's up there with Volcker now.
Just turned him into a martyr. For whatever reason.
He's Volcker now.
Well, what's great about this martyrdom is that the market's reading through and saying, oh, you're not going to get those rate cuts that you want. The Japanese yen would be a primary beneficiary in a world where the market believes that the dollar is falling apart to the tune of lower interest rates for nauseating reasons just because a single person says so. The yen is not doing that here today, but it does suggest there may be a little bit of friction here moving forward between fiscal and monetary authorities in the United States. In any event, Ilya, as long as the economy keeps chugging forward, who cares what those people in DC are up to, those bureaucrats, those fat cats, those schemers?
Oh, we care. We care.
Well,
and
semiconductors don't with a new all-time high today.
They absolutely do. Stock markets don't care, though, more generally. It'll be interesting to see, I think, whether we care, because this is the cost of money, which is why semiconductors care. But again, because the bonds are absolutely unimpressed with all of this, it seems like the general market has decided that this is a tempest in a teapot for now. Because frankly, we would be back to April where stocks and bonds and the dollar were falling at the same time if this kind of threat were real. Because really, this is the underpinning of everything that happens in the US. If you undermine the independence of the Fed, then you undermine the validity of the dollar, then you undermine the ability of the US to exert its, what's been described as exorbitant privilege in issuing the world's currency of transaction, bar none. And that, of course, would make the US unable to finance at reasonable rates to fund its deficit, which would basically stop the government. And we saw during the shutdown what kind of havoc happens when you do that for a month. So, needless to say, this is a huge issue, but the markets have decided that for now, it's too huge to be real. That surely, if the president were talked off a ledge after 4 days of the markets going into sovereign risk mode in April, where he came out and said, whoa, ho, 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 things are getting yippy out here. Let's go ahead and put the tariffs I just very triumphantly announced on hold for 90 days, because clearly we're going to have to unannounce them.
By the way, that is the single, I keep hearing this when talking about economic data, like the economy is ripping right now. Everyone's saying, where is the economic crash that was predicted by economists in August? I swear to God, we're going to invite the devil into this. Trump chickened out, guys. He removed the bulk
He
of the
walked it
tariffs.
back.
He walked it back. That's
The
why
bond market spooked him senseless, and rightly, because it was a bad idea, and he walked it back.
Yeah, the notion that all the tariffs were put into place and then like things were fine. No, the tariffs were by and large removed, and now whatever's lingering around may be removed on Wednesday. The poly market is still suggesting that, Ilya. I know one of the questions that I've seen a bunch today, and unfortunately didn't do futures power hour. We have a rampant case of the flu going through the house here.
Here too.
I would point out that we have this tariff case on Wednesday where by and large, like the market, I think is accepting that it's going to be taken off.
Yeah, I think
it feels like one of those situations where there's like an 80% chance of a Fed rate cut at a meeting, and then the Fed actually cuts rates. So the market's reacting less to the cut itself and more about like what happens next.
Yeah.
So if the Supreme Court says the tariffs aren't valid, but then just effectively in their decision points out, but you have all these other authorities that you could do this under. And so like, why did you do it this way? Stay in your lane. The Trump administration probably turns around Wednesday night and announces Section 232 or 301 investigate blah blah blah, to then start the process anew of getting the tariffs put back into place, at least through the proper channels. So the market says, okay, yeah, the tariffs are off, but are they really off? I don't know. Wednesday, I feel like it could go, it could go either way. But if they do come off and the Supreme Court rules that they need to be refunded to people, what kind of mechanism does that entail? If only into the run-up of that, Ilya, I would say that the 10-year auction today stopped through. It was a pretty good auction. So on the other side of, Trump and Powell and, will they, won't they? Is this a banana republic now kind of thing? Are we Turkey?
Are we Turkey?
Notes bonds gapped open lower. They don't really get much weaker beyond their net over the course of the session.
And this is the whole thing, is you really don't have the kind of bond market response here that would tell you, oh my God, there's a sovereign crisis here.
Because the market's saying Powell's never leaving.
Well, there's that. And if you're Powell and you've just been called to civic heroism, what a speech. He even combed his hair differently.
It's a tough weekend for him. Bob Ware of the Grateful Dead died.
Right?
He was just in this. He's just not having it.
The man combed his hair differently for the first time that I've seen it since he became chair. So clearly he's taking a stand. He's just not going to leave until his governorship is up, just so he can remain a vote.
Yeah, Nick and I were talking today.
Just despite the situation. I get it.
I got a tweet about this, and I don't ever air this out, but maybe if people wanted to look to find it. Trump's a resistance lib. Yep. My response is we had him register as a Republican and work his way up through private equity, then Treasury during the Bush years, so he'd be appointed as Fed chair in 2017, just in case he needed to throw a wrench into Trump in 2026. Come on. He's too tired for this, Ilya. Is it 2027 already? So gold, it's just another triangle kind of thing. Isn't that what triangles do, Ilya? They break out to the upside, bottom left to top right. It's a tale as old as time. This is what triangles like to do, folks. They like to move from bottom left to top right. Continuation most of the time. Where does this go next? I see a high of 45.84, the swing low of 42.84. That's a nice $300 range off of 44.85. So we'll call it 47.85 or so is a measured move for this particular triangle. Silver here is even more egregious. You could probably slap a $95 or $96 price target on it, given the action that we're seeing. And saying 95 or 96, that would be along the current path that we've been following since late November if we got there by Valentine's Day. So, these markets have had a tremendous run the past 2 days. We've shaken off that initial commodity index rebalancing that scared everyone so much last week. And now the triangles are breaking out anew, Ilya. So silver, volatility up today, sitting near 84, 85. We just broke through what could have been a double top. What's holding people back now?
I don't think that there is anything in particular that makes this unattractive. The only thing, obviously, is that this is a very unusually uncertain sort of thing because we've got CPI in 24 hours, less. We also have this Powell-Trump thing as extra sauce. And the November CPI report had the biggest core CPI deviation from the Cleveland model, the Cleveland Fed's nowcast, which it usually comes very close to. It had the biggest deviation since April 2020. So that's how good the data quality is. We know the data quality is going to be terrible because October didn't even have a CPI report. Clearly, whatever collection issues remained in November. Are we going to get a decent set of numbers for December? Who knows? But the Cleveland Fed model says we're going to get aggressive disinflation December and January, so much so that we're going to go back to 2.25% on headline by the time January's data rolls in. That all sounds very good unless the official data is deviating like this and gives you a shock surprise and gives you a hot set of numbers just because the data is mostly imputed. Okay, let's say you get that. Well, that's doubly bad for markets because, first of all, it tells them that the Fed is not going to go their way on rate cuts, which is a debate that continues to rage. And they continue to be in disagreement by 25 basis points. And secondly, bad because it aggravates the Trump-Powell situation further because now Powell can't cut because the credibility of the Fed is on the line and Trump has to lean in because that is his nature.
All right, let's play some 4D chess here then. If the market now, if you and I, market laymen, right, we think that this means Powell can't cut rates.
If it's hot, he can't cut rates.
No. But we're still above target. Like if the Fed came out and said we're not cutting rates until, we're gliding into it. Because if we wait until 2% and cut rates, then we're going to overshoot on the downside. But we're not in the glide territory. We'll call that like 2.2%. They can start cutting comfortably to glide it into 2.
Okay.
So this is an argument they had made post 2022. They're going to start cutting rates on approach to 2%. Right. This is the analogy that I use all the time. Like the airplane, when you descend to land, you don't just go like 30,000 feet to zero. You have to start to decline.
Well, and they've signaled that much. They signaled in their SCP that they're cutting.
Well, what if they were to turn around and say, hey, you know what? The economy is growing at like our estimates say 5% annualized in the fourth quarter. And inflation's still above target and the unemployment rate's below 4.5%.
Maybe we're not cutting.
We don't need to cut rates. This is a great economy. Nice job, President Trump. But like the market now is like, isn't there tangible evidence that even if the market doesn't get its cuts, we now know why we're not getting our cuts because Powell just can't give in. And like, we're okay with that then, right? Because there's a bigger fight here, right? We're okay with not getting the cuts if it means that the Fed retains its independence. And that's way better for the longer term valuation of the stock market than any incremental 25 or 50 basis point cut that we could receive over the next quarter.
I think you are right from an intellectual and an academic perspective. And I agree.
We're playing 4D chess.
I don't think this is how the markets think. I think the markets think in very simple, lowest common denominator terms. They are not high-minded in the long-term interests of the stability of the Fed nearly as much as they are concerned with their own skin. And so what they're going to want to think is, oh no, lots of commotion, give me free money.
Yeah, so I got a question here. Like how did the Fed spend so much money on the renovation? Which is a great question. I don't know the answer to that.
More asbestos removal than expected was part of it. Also, there were some cost overruns due to unexpected repairs in places. Although apparently the Fed went so far as to reuse the marble from the prior building, as to strip it, do the renovations, and put the old marble back. Though apparently in a couple spots it cracked, so they had to get some new marble. But mostly they're reusing old surfacing.
What's funny about it is like the one thing that Trump takes such an interest in this. This isn't like a misappropriation of taxpayer funds. The entire thing is coming out of the Fed's operating budget.
Yeah, it's not earnings, which is not the taxpayer that pays for this.
It's not a good outcome either way, right? Like overruns aren't great, but just like my own, if the Fed's telling us that it's because of labor and changes the cost of goods, I would just throw this out there as like my own anecdote. I had a deck built in the summer of 2024, and instead of paying someone to do it, I bought all of the pieces myself, bought everything from Lowe's, and then hired a contractor to build it with me. And it was around 12 grand total to get all that done. When my neighbor's tree hit my house in August, Ilya, and knocked out part of the deck, replacing an 8-foot long section of railing, and none of the actual decking truck material itself, so just railing that was destroyed, was $5,000. The deck is way bigger than that. There's like 60 feet of railing that goes all around. So like, there's no way I would have been able to complete the project at the same cost I did in 2024 if I had started it from scratch. So when I hear that like the prices are going up for things, like I've been seeing it. Anyone who goes to the grocery, like
certainly,
it's there. But
certainly construction materials and
this isn't
the tariffs don't help.
This is the funny thing though, and I know people like aren't going to believe me because like, what's your prompt, Chris? The prompt tells you everything. I got to pull this up onto the screen. ChatGPT, is it taking the blue pill? I guess that's the opposite. Okay, so the prompt is, how did the Fed spend so much money on a rebuild? And the conclusion is, markets care far more about rates, liquidity, and balance sheet policy than marble, steel, and drywall in DC. Almost telling me to like go take a hike.
Yeah, what are you talking to me?
Why are you bothering with?
Why are you saying things to me, human? What are you saying?
Ilya, the credit card cap news over the weekend impacted the banks, the credit card companies today. It's to me it's an interesting policy. I shared this in our research chat yesterday, and I wanted to bring this up here again, but I couldn't help but notice some of the airlines also took a spill here today. It's obviously not the same thing as, American Express getting punched in the face by 4.3%. But last year, Delta, for example, had an operating profit of about $6 billion on $57 billion of operating revenue. Did you know that American Express sent them $7.4 billion as part of their Sky Miles partnership?
Wow.
So if these credit card companies are going to see that their rates are capped for the foreseeable future for the next year, something that Senators Bernie Sanders and Elizabeth Warren seem to be eager to work with President Trump on, then there could be a little bit of issue for, the JP Morgans of the world. They took a hit today too ahead of earnings. This would be great for what's been an engine of the market, at least for the small caps, for the S&P 500, for the Dow. What are the odds that Congress passes legislation that Trump's able to see? As of January 20th, he said they'd be running afoul of federal law. So that is just next week, next Tuesday. What are the odds that credit card rates are capped at 10% in your view? And should we be buying deep out of the money puts in airlines as they all lose every single dollar they plan on making this year?
Can you do that by executive order?
I guess these days.
Can you try? Can you do anything? Can you do anything by executive order until you get some sort of a court case, and then only when that court case is decided can you then not do it, like the tariffs?
Yes, we what's the expression? It's easier to ask for forgiveness than permission.
In other words, you can do anything for a while in this environment, as long as you're willing to do whatever.
Yeah, who is it? Kissinger, okay. Nixon. There's a famous quote from that era. When the president does it, that means it's not illegal.
Right.
So,
right.
We're having.
I believe that's directly from the Nixon tapes.
Banks here, they did take a little bit of a spill, but the sector performance, as we wind down this session and look until the next few days where we do have all these earnings coming out. Of course, that's not just the earnings, but tomorrow we're going to have CPI, as you mentioned at the top of the show. Tuesday's bank earnings, JP Morgan, Bank of New York Mellon, Delta Airlines. I wonder if they're going to mention anything about credit card caps in their earnings call. That could create for some interesting volatility. The performance today, though, Ilya, 25 sector ETFs that we track here, 17 of the 25 are in the green. The top performer, gold miners, materials, metals and mining, home construction, telecom. So usual mix of some growthy stuff, but the banks and then the energy names are a little bit weaker. We have 1 minute, Ilya. Ayatollah still hasn't gotten back to me, but apparently the Iranians have reached out to the Trump administration to talk about diplomacy, which a report this afternoon, Israel is warning the U.S. that Iran's efforts to reach out through diplomacy are to prevent them from being attacked, excuse me.
Mm-hmm.
That is what diplomacy is for.
That's how diplomacy works. Thank you for that very accurate description of diplomacy.
Can we buy the oil breakout here?
I am. I got long last week. I'm still holding. I intend to hold. I see some dominoes falling here, as a trader, a friend of mine, described it over the weekend. He was looking at this and saying, he's like, do you see dominoes falling here? Like one side of an axis is crumbling. I'm like, well, it's interesting. Venezuela, Iran were boarding Russian Shadow Fleet tankers. Where is China to get their oil if all of these dominoes fall? That's now interesting. That's the world's second largest consumer now. Hold on a minute. Where are they to get their oil if all of this happens at the same time? Maybe all of this consensus around a glut is too consensus-y.
Too consensus-y. Ilya, here's something out of consensus. A bullish falling wedge in oil, which I know last week we were talking about what would a long look like as we got a little bit lower. May have missed the boat on getting a better entry, but it's never too late. The market's open tomorrow. Breaking the downtrend here off of the highs that we saw at the end of June and the end of September. 36 IVR as well. That's different. Geopolitics back in focus, and it's not because of Venezuela. Keep an eye on Iran tonight, tomorrow. Lindsey Graham even left a fundraiser yesterday talking about how an attack against Iran could be happening. He was just giddy. And when Lindsey Graham's giddy, you know something's happening. With
you know it's on now.
Somewhere. Ilya, we're out of time for today. We'll be back tomorrow, same time, same place, every Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Ilya's sticking around, though. He's here with Macro Money up next on Tasty Live.
See you there, everybody.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
When the market moves, traders need to move faster. tastytrade Active Trader tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Watch me go, 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 go. Start the show, Start the show. Watch me go, 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 go. Watch me go, watch me go. Start the show, Start the show, Watch me go, 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 go. Watch me go, watch me, watch me go. Start the show, Start the show. One foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit. Two eyes on the prize. Once you win it, then it's yours. You've got all the time in the world to make a score. It's already.
What a start to the trading week we've had. We're staring down the barrel of U.S. inflation data and all of the fun that it portends for Federal Reserve policy speculation, a big topic for the markets still. And now we get the extra spice of the Federal Reserve chair issuing a blistering statement after apparently being subpoenaed by the Justice Department over cost overruns for the Fed building's renovation, which emerged as something of a talking point over the summer and over the past several months, but now seems to have reached a new and higher gear. So what will all of this mean going forward? That's what we're going to find out here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And of course, we'll begin with the price action as ever. And we'll take a look at what these markets did here. And from there, see if we can't figure out what is actually on the menu here next, because the stakes in this situation have just become a whole lot higher. So, if we consider the price action first and foremost, it is of two flavors. Stock markets were down significantly. The S&P at one point was down as much as 0.79%, but has rebounded and is on pace to close the day fractionally higher. Ditto the NASDAQ. So too the Russell. However, we do get a big spike in gold prices. They're up almost 2% again, hitting a new record high. The dollar meanders lower, not very much and not very aggressively. It shaves off most of its losses, but we do get a slight pullback, and not the kind that we would expect to be catastrophic. Bonds are oscillating in familiar ranges. So on the whole, before we get into this CPI data, we get the requisite responses we might expect to what the news flow was, but we don't get pandemonium. Here comes the inflation data. The expectation is that we're going to edge up on the core reading from 2.6 to 2.7%, while the headline reading stays at that same level. So 2.7% all around for both here then. And on the whole, this would be relatively encouraging news in the sense that we have a situation where we had a meaningful downtick in November, looking at sort of relative settings here, 2.7% for the headline number would be a 4-month low. November was that low, and this would match that. For the core, it is an uptick from 2.6 to 2.7, but to put this in perspective, 2.6 was the lowest since March 2021. So by no means would these be high inflation readings of a worrying variety. Rather, this would more appear to look like the kind of thing that would encouragingly signal for the Fed that the progress that they want to see is ostensibly occurring. So, with that in mind, we look at the very closely watched Cleveland Nowcast. This is from the Cleveland Fed. We can see here that there's generally pretty close proximity between these nowcasts and official data. And what it looks like over the next 2 months here, December's data, as well as January's, there is a steep disinflationary off-ramp for headline inflation numbers and for core. So for December, this forecast has us down all the way to 2.6%. So that would already imply setting us up for a downside surprise on these incoming numbers. Moreover, though, what this likewise signals is that by January, for headline, we're already down to about 2.2, a little bit over. And for core, we're down to 2.4. So the plan that the Fed put out there that essentially says we're going to get tariffs rebasing out of these calculations going into, let's say, April or so. That, of course, the site of that Liberation Day kerfuffle. But we had tariffs leading up to April start to appear as the new administration took hold. So there's a window then from January into the February and mid-April period all the way into there where there is the rollout of tariffs. And as long as you get to the other side of it, then your year-on-year calculations stop including the jump from the pre-tariff rates to the post-tariff rates. And then you perhaps have a situation where you no longer have that as a kind of statistical uplift on CPI numbers. And as long as you then manage to keep inflation expectations contained, then maybe the Fed gets its Goldilocks scenario where the inflation ends up being a transitory one-off adjustment, And according to the Fed's argument, this is, of course, what sets up the stage for rate cuts. It's not surprising, perhaps, that when the Fed introduced its program of short-term capital injections in the December Fed policy announcement, those capital injections were loosely expected to run past the mid-April tax season, implying that that's about as long as the Fed feels it needs to provide liquidity. And the markets, tellingly, are expecting the first rate cut of this year to appear sometime in April. So, all of this looks seemingly encouraging. However, we have, looking at the spread between this Cleveland nowcast and actual results, something to be concerned about, because we've heard the Fed warn us about the quality of this data. We know that obviously October CPI report didn't even happen because of the government shutdown, and that November's report, comparing the spread between the forecasts here, the yellow and the green line, and the actual results, the blue and the red, the biggest dislocation, the biggest deviation in core CPI from the realized result since the worst of the dislocations amid the COVID lockdowns. The headline number also, of course, deviated, but that was the worst since 2023, so not quite as bad as the core. The core was way off course. So on the surface, it looks like what the Fed is looking at is exactly what they want to see. Goods inflation seems to be finding some sort of a plateau, suggesting the tariffs are starting to maybe get ready to roll off the statistics as an excess thing to basically rebase out. That inflation in services, which is, of course, as we just saw from the main chart here, by far the biggest component, that's steadily easing, and that it's this goods inflation bit that's creating an extra wedge. Otherwise, inflation would be meaningfully lower. And that things are basically progressing on course. But if this becomes an issue, well, then there might be an upside surprise here that roils markets. And against this backdrop, it would roil markets doubly so. Because first, there is, of course, the existing debate in markets around rates. That's this right here. We can see this is what's priced into benchmark Fed funds futures. They've got 50 basis points, essentially, or 2 rate cuts on the board for this year. Meanwhile, the Fed has projected only 1 rate cut. That's this right here. In fact, it has held onto this view that there's only going to be 1 rate cut since June of last year for 2026, that is. And so it's not like the Fed hasn't had opportunities to rethink this, knowing what the markets think. The markets have been at 50 basis points or more. This is about the 50 basis point line right here. They've been here since June. At one point, they got as far out as 75 basis points. They've since come back to 50. Meanwhile, the Fed has been at 1 cut for about the same amount of time. And we can see that the markets don't like it. Because as we stopped getting more dovish on this outlook, mainly as the outlook for 2026 started to hem in, so too stocks stopped to make consistent upward progress. And have instead gotten stuck in this choppy range where they can't seem to really find their way this way or that. And so already, if the CPI number is surprisingly higher because the data quality is such that the models don't hold, well then, needless to say, even just at surface level, the markets wouldn't like it and have shown that they don't like it when rate cut expectations are pulled away from what the markets want. And there is less chance that the Fed will have to relent and go the market's way. That is to say, 2 cuts rather than 1 this year. Now, we, of course, with the advent of this new clash between the president and Fed Chair Powell, have a little extra spice on this entire situation. Quoting directly from what Powell said, he very clearly described this accusation of cost overruns at the Fed building renovation as a pretext and said, this threat is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public rather than following the preferences of the president. So clearly now, if we get a hot CPI number, then the Fed's credibility is on the line and it can't cut rates. Certainly not in any sort of near-term sense. And that ends up having to be the guidance for January when the Fed meets on the 28th of this month. At the same time, it, of course, tells the White House that they need to match in kind on their side because they are not seemingly of a mind to back down. There's been opportunities to find an off-ramp in this conversation for months, and yet here we are. If, on the other hand, the number is sufficiently soft that you can find your way to saying, well, maybe inflation is in fact coming down, and maybe in fact we could defuse this with a sooner rate cut, maybe not as soon as January, but perhaps approaching March, then maybe this situation can be eased and the markets would surely find that encouraging. Because not only would it give them a little bit better chances at the stimulus they want, but it would diffuse a clash that threatens the independence of the Fed, which, if compromised, would be an absolute catastrophe for the entire infrastructure of U.S. financial market. Now, for their part, the markets aren't terribly concerned about inflation. You can see here the priced-in inflation expectations for the bond market are very well anchored here, and in fact have actually been trending lower since the middle of last year. Which probably explains why the markets think that 2 rate cuts this year are appropriate. But the economy has shown signs of impressive resilience. Last week, we had this ISM report show us very strong growth in the service sector, powering a potent rise in overall economic activity. The third quarter GDP report showed us a very welcome rebound in consumption and a much more normal breakdown in overall GDP versus these wild swings in inventories and imports around the front running of the tariffs. And even a pessimistic PMI report from the S&P Global version of events showed us that although that GDP report was probably flattering considering we had the government shutdown in October, the fourth quarter slowdown was not all that terrible. In fact, we just basically got to the middle of what this would portend as the sort of normal growth range post-COVID. Here was the catch-up overshoot that was the coming out of lockdowns. Here was the subsequent normalization. And then we sort of evened out into this, somewhere between 50 and 55, let's say. And this lands us somewhere near the middle. And so with that in mind, we don't really have a terrible economic backdrop in place to think we should have aggressive disinflation. So if the service sector is anything like what these ISM numbers portend, then we could indeed have a relatively hot CPI number because, as we've just seen, the service sector is almost the entire thing. And we could have the roll-off of tariffs from the calculation, as this seems to imply, and at the same time have more buoyant demand in the service sector, as this seems to imply, and have that component reflate and start to bounce from here back in this direction. In which case, the Fed would be in no position, especially with the extra political interference here, to signal anything dovish. Now, from the market's perspective, they clearly want their rate cuts. And perhaps the reason they do is because inflation has been relatively stable. Meanwhile, the term premium in U.S. Treasury bonds has increased and is now at the highest level since 2014, suggesting the markets might want these rate cuts as insulation against exactly this kind of volatility and uncertainty, as we are seeing with this Trump-Powell kerfuffle. That essentially the markets just want insurance. And cheap money is very helpful when things are uncertain, because worst case scenario, you get things wrong, you wipe out, you can borrow cheaply and go again. This is captured in this trade policy uncertainty index, and obviously this speaks to broader uncertainty around fiscal policy in general. We can see that even during the COVID years, this perception of trade policy uncertainty was relatively mild and, most importantly, tightly wound around the trend average. Although, obviously, we've seen trade policy uncertainty improve since April last year when it spiked, this volatility around the trend average is clearly much more elevated than before. And all of that uncertainty last year gave us the first decline in global trade volume since COVID and the largest since the 08-09 financial crisis. And that's just the stand-in for why the markets, on the one hand, might be piling into gold, and on the other hand, are pricing in all this term premium into the bond market. Which is why, apparently, in spite of the upbeat GDP data, in spite of the strong ISM data, they are not taking away their pricing for 2 rate cuts this year. They are refusing to adjust toward the Fed's baseline, which is, of course, what sets up for an explosive CPI report when the numbers cross the wires. Why is this decline in global trade volume so incredibly potent for stocks? Well, so we can see, obviously, in information technology and subsumed in that the AI boom has overwhelmingly outperformed relative to other sectors of the S&P 500. And as we've discussed before, that supply chain is very globally integrated. So if we continue to see the kind of ructions in the global trading environment that we see, because policy continues to be as volatile as it's been, and global trade volumes fall against that backdrop, the very thing upon which the stock market rally is built becomes very vulnerable indeed. And so, on top of what this all means for Fed policy, the extra political component here makes for feeding into this larger uncertainty narrative and this larger policy volatility narrative, all of which makes these rate cuts that much more important. So if we get a hot CPI number that makes them less likely, stock markets are unlikely to take that very much in stride, as they seem to have, at least for now. And what the calm today perhaps speaks to is not so much the absence of concern as it is an unwillingness to commit one way or another before the data comes across the wires. Because indeed, if the number were soft, it could help diffuse what is increasingly a combustible sort of situation. So as far as positioning is concerned, I am happily still long gold. I am now on the long side of the US dollar, which, despite weakness today for very understandable reasons, has held up reasonably well, all things considered. I am still short risk, expecting that to look vulnerable, though I was tempted to put on something on the long side of Russell today. I thought better of it ultimately, and decided that the risk reward was not attractive enough, which leaves me net short risk still against the NASDAQ and the S&P, as well as Bitcoin. Obviously, Russell had to come off the board because it broke a new high last week, and so that bearish exposure had to get scrapped. And as tempting as it was to get in on the long side, the volatilities just didn't give any better than one-to-one risk reward, and so those call verticals just didn't look attractive enough to participate in. I am, on the other hand, along a little bit of oil here through call verticals, thinking maybe we could have geopolitically enough dominoes falling where China's oil supply starts to come into question. After all, we have Venezuela fallen, and Iran is teetering, and the U.S. is boarding Russian shadow fleet tankers. So it seems like China's energy supply has suddenly become an important point of friction. And if it continues to go this way, well, then there's going to be a real big question about how the world's second largest consumer of crude oil gets their hands on supply, and that could give us a lift. So a little bit long there. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I am likewise writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.